Hello and welcome to our very special coverage ahead of the Union Budget on Hindustan Times Mint, the 10th budget for the Narendra Modi government, a budget that is perhaps quite complex in terms of the time and the station that it is positioned in. Last year, we were in the thick of the pandemic. Not to say that we aren't at this point, but other imperatives have cropped up. What might happen on the unemployment crisis? What might happen for social welfare schemes? Can the finance minister control inflation while also spurring on growth? And of course, not to mention, it's a very big year for state elections. Will the finance minister have politics on her mind, or will she have to think about all the economic challenges that we face? Lots and lots of coverage coming up. 11 a.m. is when we expect the finance minister to rise and present her budget speech. We will have detailed analysis after that as well. But we're going to kick off with a list of expectations. This is actually the best part of the budget conversation because it's where we can set out what could be or should be very, very important flags for the finance minister. The equity markets have stepped into the event quite confidently, although I might add, I think much of that cheer is coming in from the global market situation. So strong close yesterday, steady open today. Let's see what both the stock market and the bond market have to say post the budget speech. Let me, without further ado, introduce my panel that's going to be talking about what to expect this morning. May I welcome Lekha Chakrabarti, Professor at NIPFP, Anant Narayan, Professor at SPJIMR, Yamini Iyer, President and CEO at CPR, Vivek Kaul, columnist at Mint, and Yashwant Deshmukh, who's CEO at C-Voter. A very warm welcome to all of you. Perhaps a little bit of a flashback or a mini flashback before we get started. Anant, let me start with you. Any big takeaways from the economic survey and what it had to say?
Morning, Mitali, and morning, everybody else. In fact, more than the economic survey, Mitali, I was really enthused by the numbers which came out for the December accounts for the central union budget. And those are really, really heartening. Revenues are looking extremely strong, even stronger than most analysts had penciled, including me, had penciled in. And it looks like we could end up this year with about 3 lakh crores of additional revenue at the central level, more than budgeted. This is incredibly positive. In fact, as analysts, we've got used to seeing actual numbers trail the budgets by far, far distances. This time around, it's quite the reverse and very, very strong. It's probably a product of formalization. As much as of course, the formal economy is doing well, there are also problems in the bottom of the pyramid. But nevertheless, cross formalization and some very conservative budgeting, it looks like revenues will look strong. What that means, Mitali, is the degrees of freedom for the finance minister go up dramatically on what she can do going forward. Of course, the budget numbers would have been prepared before these accounts were available, so they might still be conservative. But in terms of big takeaways and look forwards, given that revenues seem to be buoyant compared to what we had expected, I expect both fiscal consolidation to continue going forward. Maybe we target about 6% for the next fiscal year and a glide path towards hopefully revenue deficits coming down to zero for a period of time. And at the same time, momentum on spending, particularly on capital expenditure, hopefully continues. I'm personally hoping to see a big lift up in capital expenditure again the next year, maybe about 20-25%, 6.5 lakh crores, I think is possible. Besides this push up into capital expenditure while having fiscal consolidation, what you mentioned earlier, Mitali, about jobs and output and inflation, I think these are critical. Eventually, I think the common denominator is we need jobs in this country for converting this K-shaped recovery into a V-shaped recovery. There is distress at the bottom of the pyramid. Unless we create jobs, that's not going to get ameliorated. How do we create jobs? Infrastructure spending is a part of that. I think personally, things like privatization, having a glide path towards what the unfinished agenda of the last budget, the two public sector banks, the insurance company, I think LIC IPO will get probably announced today or something will get announced today. But that glide path, I think, is extremely important, along with pushing on implementation of PLI, the NIP, the National Monetization Plan, National Infrastructure Plan. I think that's a big part of the whole equation. Second part, something which is close to your heart, Mitali, I think the need for additional spending into things like health, education, nutrition, public services, extremely high. We've completely underperformed on these criteria. I'm hoping some of the revenue space which comes up gets diverted into these areas. So two big areas, infrastructure and public services, I hope see the benefit of the increased revenue pool that the government has to play with.
Absolutely. Capital expenditure actually has been quite robust through this year. I think that was, sort of the clear takeaway of how the year shaped up. Yamini, let me toss that to you. Given the state of finances that we have now settled at in terms of our revenues, does it look like likelihood that there will be a larger push towards some of the social sector schemes we've been talking about? Because there is a need, of course, whether it is the Narega scheme or for any other category, frankly.
Well, I hope so. I think in some ways the economic survey has not shied away from recognizing many of the real challenges that the average Indian confronts, despite being sort of gung ho about improvements in revenue, etc. It recognizes what the PLFS says, which is that the bulk of jobs that have been created in the latest PLFS come from agriculture, and that's a serious worry. India is actually seeing a reversal of the expected path of structural transformation back towards agriculture rather than in the direction towards manufacturing. It recognizes the challenge of schooling. It recognizes the challenge of nutrition in the social sector chapters. So at least there is recognition. My worry is the last budget, which, as you said in the beginning, was presented in the thick of the pandemic, sort of moved focus towards recovery without recognizing the need to ensure that relief continues with some degree of stability and predictability, given the K-shaped nature of the recovery that we were experiencing even 1 year ago. So we saw cuts in Narega expenditure relative to the previous year. We saw some expected cuts in public distribution system. As it turned out, within a month or so of the budget being presented, we confronted the deadly second wave, which led to deep distress. And throughout the course of the year, while demand for Narega work continued to be higher than pre-pandemic levels, the lack of availability of funds remained a challenge. Now, it's often argued that Narega is a demand-driven scheme, funds will be provided, but the reality on the ground is that the minute budgets start looking thin, you get a lot of rationalization of demand at the grassroots level, and that's a serious problem. So I hope that we see, given that there is a little bit of fiscal room, that we see a more realistic projection of the needs of the informal sector, particularly the rural labor market, and the need for continued elevated spend on Narega. In addition, one of the critical things that have happened since the pandemic started is that routine public services that the government provides, whether it is a midday meal, schooling, Jal Jeevan Mission, so on and so forth, have all taken an expected hit. And there has been a lot of expenditure switching if you look closely at budgets, because utilization and releases of these key schemes are really low. Now that we are past the peak of the pandemic, fingers crossed, and even if we are not, the urgent need for at least getting these basic public goods back on track is going to become very, very visible. I think it will also help with jobs in that you bring in more contract workers to ensure that these basic schemes, whether it's education, nutrition, etc., are provided, can lead to a little bit of a boost in the economy. So we need to at least get back to pre-pandemic levels of expenditure. For example, Jal Jeevan Mission, we only spent 27% of budgeted allocations this year, up until December. Similarly with education, only 26% of funds have been utilized. So there's a huge gap in routine spending. I'm hoping to see some recognition of this, and I'm hoping to see some kickback into routine spending that will also be part and parcel of what the overall push towards recovery should look like this year. So more capex is good, but let's not do only capex at the cost of social services that have taken a significant hit and have far greater long-term consequences on the economy.
No, absolutely. And we will talk about that in detail. I might add, if you're a lover of economic data, I would strongly urge you to head to the CPR website. There's a fantastic budget briefs where they have broken down a health check actually has been done on a lot of these key schemes, what's been spent, how much has gone out, how much still remains, and whether or not these schemes have been as successful as they were intended to be. Lekha, what was interesting in the economic survey for me was the fact that inflation was sort of skirted around. I mean, we have notes from global brokerages like Nomura that are pointing to 6 to 6.5 headline inflation for January. For the year itself, headline inflation has also been cranked up to just under 6%. We're at a situation where crude has had its best January in 10 months. Were you surprised by the lack of attention given to inflation? And do you think the union budget might in any way address that?
Uh, can you hear me now?
I can hear
Is
you
it
loud and clear.
okay? I'm waiting for the February MPC meetings to get a feel about the inflation, because I don't think that the budget can do anything significant about the inflation. First, fiscal deficit is not inflationary. Inflation is happening from the supply chain disruptions, and it is because of the volatility in the energy prices. So, by mandate, it's the sole criteria of RBI, the sole objective of RBI is inflation containment. So, I look forward to the MPC meetings, in February, to understand that what is their take on inflation containment. But at the same time, we have pressure to keep the interest rates low, because otherwise the borrowing of the government will go costlier. So it's a dilemma for the RBI whether they will increase the interest rate right now. And as economic survey rightly pointed out, we need to see the taper tantrums. We need to see the US Fed increasing the interest rates. So unless we increase the interest rate, then there will be capital flight. So this dilemma is there, and how they are going to do inflation more than the budget, I think we need to look forward to the MPC meetings,
Hmm.
because
Vivek,
it is by mandate. It's an inflation targeting framework we have. So
sure,
it's a mandate of RBI.
sure. Vivek, good morning. I mean, here's an idea: roll back petroleum taxes to the 2014 levels to control inflation, and also, put out a feel-good gesture. Any likelihood of that? Any sort of very poor pro-consumption moves that you expect to see in the budget?
You asked me that question?
No, the question is for Vivek.
Oh, sure.
Mitali, there's one line which I keep repeating in my columns, and I've been repeating it for years now. And thankfully, the editors have let it go. The first step towards recognizing a problem is to acknowledge that it exists. So, if you want the excise duty on petrol, diesel to be cut back, the first thing you need to acknowledge as a government is that there is a K-shaped recovery on and not a V-shaped one, as has been, as they have communicated over and over again. So, you take the economic survey which was released yesterday, and I think the lack of a chief economic advisor essentially has, or rather, the lack of a chief economic advisor over the period of last 1 month has probably led to a situation where the economists at work were probably are not as good spinners as the CAs tend to be. So if you look at I was really surprised, and this is a very rookie mistake which even someone who has a basic degree in is a graduate in economics wouldn't make, is they essentially talked up car sales and blamed the slowdown in car sales on global problems and supply chain problems of chips, etc., which is true. But nowhere did they mention that two-wheeler sales this year have been at a 10-year low. I thought that was a very elementary mistake. If you have to spin, you at least make a little more effort than was put into the economic survey. So the point I'm trying to make here is that what you suggest is a terrific idea, and especially when there has been a recovery in tax collections. Corporate taxes are doing very well, income tax is doing very well, GST is doing very well. So it can be this can be a great move, along with the fact that the GST on two-wheelers needs to be cut down majorly, and obviously the budget cannot do anything about this. That depends on the GST Council. I think these two moves would be would go a long way. And it depends on the government whether they want to do it or not. So.
Yeah. Yashwant, welcome. There is another school of thought that believes it's not about Omicron or COVID, and it's not about consumption. It's not about any of this. It's about elections. And, keeping that in mind, what we might hear today is a politically leaning speech that might address specific political pockets of interest, including the farmers. Do you think that is a likelihood? And what do you think might make for a politically astute budget speech?
Well, Mitali, I'm the only one on the panel who is not an expert on economy. But what I can tell you is about public perception, and public perception in case is kind of a tail which wags the dog in the entirely budget scenario. Uh,
Yeah.
what I can tell you is that it has been a bag of mix in a way. I mean, last 2 years, particularly post-pandemic ones, due to the pandemic, has been kind of a reboot button in many more ways than one, actually. When we look at the bottom of the pyramid, Mitali, probably the PDS that the people got ration and people did not die of hunger, that itself has been a great achievement of this government. Just talking about whatever the spending the government has been done in the last 2 years, as far as the public is concerned. They got some money into the account. They got some other, public social welfare schemes, getting the roof, some of the toilets, and all that. But the biggest one was ration. That's what the surveys after surveys in our tracker have been telling us from, not just from the election bound states, Mitali. I'm talking about all across India, not just the election bound states. But yes, particularly in the election bound state, people have said they've got ration, bhuke nahi mare. That has been the big thing that the government has done. But having said that, in our tracker, and we do it every day, I have never seen the kind of distress in terms of optimism or lack of optimism, or basically the heightening of pessimism that is coming around in my data for the last 20 years. Indians are a contextual society. We are a contextual society. We always come and say, अभी हालत बहुत खराब है, but whenever you ask कि आने वाला समय कैसा होगा, people say नहीं आगे अच्छा होगा. That is the way that peoples are Indians are, like, molded to say forever living in optimism. For the first time, I am looking into the data where the number of people who are saying the future I'm not very sure about, don't know, can't say, is bigger than the number of people who are saying future is going to be better. So that lack of optimism is a very dangerous thing for me. Now, how do we look into it? I mean, I understand that the data everybody has been saying, or has been spinning around, that okay, it is due to post-COVID scenario. Yes, I understand COVID has its own way of impacting the things, but it is not that this depression or this pessimism was sinking in after COVID. It started even pre-COVID times. I mean, there was something which was not adding up as far as the masses or the middle class is concerned. That something was missing in the entire game. I believe that the government is trying a lot to do on the social welfare scheme, spending a lot on that, and trying to ensure that people who vote, they are kept in good humor. But genuinely, I also believe that there is another big class, which is opinion maker class in terms of issues and the way public think, is the middle class. And that class has been getting largely a raw deal, if I may say so. Yes, I understand that the agrarian part of it probably has been taken care of, the farmers. But I mean, I'm not taking into account the rolling back of farm laws, because that's a different game and different thing altogether. But I'm talking about the majority of the population which lives in bottom of the pyramid, and and particularly the farmers who have the smaller jot, as we call it in the language. Their economy has been affected a lot, and they have been given something. But having said that, something being delivered to middle classes, a big no. Because we understand the infrastructure spending and other things which are going good. They acknowledge that. They say that, okay, highways are being built, the roads are happening, electricity is better. That part of the thing is what middle class is acknowledging. But what middle class is not acknowledging, Mitali, is that almost 67% in our the tracker which we did for the mint yesterday, that 60%, 67% said that their day-to-day life, day-to-day expenditure management of that has become extremely difficult over the last 1 year. Almost like 2/3 of India is saying that how they were handling their family, how they were handling their entire budget of the family, it has become out of their hands at this point of time.
Right.
And that is a very, very dangerous sign. I mean, that might not have gone against the government at this point of time, electorally speaking, but it's not something which is comfortable for the middle classes.
Sure,
And
and I
something
think
that
that's
the government has to look at.
sure, and I think that's tying in with what a lot of our guests have said. The fact that things like two-wheeler sales have gone down, household inflation has certainly gone up, and people are feeling the pinch. There is, of course, the overarching problem of unemployment. There are fewer and fewer people employed in a household. Women have been pushed right back to the bottom of the line. Anant, what's a creative way for the finance minister to do this in order to boost consumption? Something we've all been talking about, the fact that at the household level, we need to boost consumption and confidence. How does she do this? Is it just via, personal tax recalibration, or is there something else that could happen?
Yes, Mitali. Now, before I answer that question, I just want to add one quick note on a comment that you made earlier about capital expenditure being increasing dramatically during the month of December. Just a quick point there. A lot of it is 60,000 crores, which is capitalization of Air India. It's a one-off. If you exclude that number, actually the capital expenditure spend is not that great at all. Having said that, I think the intent of the government is to push forward capital expenditure as well going forward, given the revenue buoyancy. On your point about consumption, look, the way I would approach this is a little different. I absolutely agree this is a K-shaped recovery and a very, very steep K-shaped recovery. The top of the pyramid is doing extremely well. Maybe 15% of the upper crust is doing extremely well. Witness the collections and buoyancy in income taxes, corporate taxes, GST collections. Witness the increase in imports, including for manufactured products. I think all of that is spurred by consumption coming in from that particular part. And yes, if you look at reports of CMIE suggesting numbers around employment, if you see every report, including reports like the Azim Premji University reports on poverty increases, etc., it's a really terrible picture. And MSME stories that one hears, it's a terrible picture. Put it this way, Mitali, if the organized sector of 4,000 odd companies, their GVA is growing by something like 50% per annum, okay? Overall GVA is not growing at all. So that tells you what kind of stress the unorganized sector is going through. Now, given that, yes, there is a need to spur consumption. There is talk of, for instance, an urban employment guarantee scheme, which is as a possibility. Maybe give some money out to MSMEs for giving on salaries to their employees and ensuring that salaries, employment is maintained. I think the trouble there really is we don't have a great database of the 6 crore MSMEs that are there really out there. We have a database of households where you can give out money through direct benefit transfers. We have the Jan Dhan accounts and all of that. But MSME database isn't really great. So giving a push, therefore, through that route is a little tricky. But yes, I do agree that some amount of money beyond what we are seeing has to go towards, especially the SME businesses. Last point on this, Mitali, the reason why it's different from my perspective. Look, while I completely agree with the humanitarian need to support the bottom of the pyramid, the problem for us is we are not very good at handling the demand that emerges from such kind of infusion. We've seen that with Narega earlier, and even now, from September onwards, our trade deficit has crossed $20 billion per month on average. And it's not just gold, it's not just crude oil, it's electronics, it's chemicals, it's plastics, it's toys, it's a whole bunch of manufactured products. So the moment we spur any kind of demand, that seems to be met by imports rather than by domestic jobs and output. So to me, the way to spur consumption is eventually boils down to jobs. You have to create jobs in this economy, and not just the Narega kind of jobs, either rural or urban. You need beyond that. Therefore, to me, the point goes about infrastructure investments and therefore facilitating the growth of businesses. I like the intent behind production-linked incentive. I hope to God it works out. The trick in all of this, you can put out capital outlays, you can announce a national infrastructure plan, you can have a national monetization plan, you can have PLI. Execution, we are terrible at. And government's own data on large projects tells us that delays and cost overruns, problems on land acquisition, environmental clearances, continue to dog the ecosystem. So getting that machinery right of actually creating an environment where it's easier to put in investments and create jobs in manufacturing, I think that's where the bottom line lies. I hope that this budget pushes forward on infrastructure, on things like, I personally think things like privatization will help, on things like easing businesses, creation of businesses. I would much like my students, MBA students, walking out and saying, I want to open a factory, employ 100 people and create output and therefore make it big. I don't hear a single person saying that. That's the culture that we unfortunately need in this country. I'm hoping this budget, through infrastructure and investments in public health, education, etc., and of course ease of doing business, creates jobs and output. That's the only solution I see to long-term growth of consumption.
Yeah, and interestingly, the economic survey had a fairly ambitious target for industrial growth as well, Anand. Yamini, what do you expect to see on this whole unemployment debate? It's not the first time we've talked about an urban employment guarantee scheme. There is the suggestion that that could be helped to support urban city infrastructure. Do you expect that to happen, A? And B, on rural unemployment, do you think there might be an upping of spend on Narega, or there might actually be an alternative that is tabled? You're on mute, Yamini.
Sorry, I was looking at the mute button thinking that it was at your end, but turns out at mine. I would think about this in two ways. I think I completely agree with Anand that there is no solution to the challenge if we do not generate quality jobs. And in order to be able to generate quality jobs, we need to build an enabling environment. And part of that is serious reinvestment and rethink actually of the environment for MSMEs. But I still think that we are not out of the worst impact of the pandemic. And I would like to think about this in two phases. There is an immediate phase of things that we need to do to be able to ensure that income distress, which is what the bulk of Indians are experiencing, is elevated to a degree. It kicks back a limited amount of demand. Even as we plan in the long term, the challenge of unemployment is not new to the pandemic. The pandemic merely exacerbated it. The challenge of unemployment, or rather the lack of quality jobs, has been a long-held one, and one for which we still haven't figured out the appropriate set of policy solutions. So the way I would think about this is in two ways. I do not think in the short term of this year there's any getting away from elevated expenditure on Narega. The bits and pieces of Narega that we never actually gave enough investment in, and where there has been some investment, we see some positive output, is in the ability of Narega to actually develop genuine shelf of works and provide quality in rural infrastructure. I would supplement that along with a little bit more investment in operation and maintenance, rural infrastructure, Pradhan Mantri Gram Sadak Yojana, roads, even the Jal Jeevan mission. This is going to build long-term infrastructure, and it is at the same time going to provide some amount of basic jobs at this point in time, which can also be ramped up very quickly. My challenge with big infrastructure capex is the ramp up takes time. And again, our history is not telling of, doesn't leave me with much optimism. Similarly with privatization, I agree with Anand. Ultimately, we have to go down that road, but we haven't done it. And after all, besides Air India, the marquee Air India, that 1.75 lakh crores of disinvestment still remains. Only 92% of revenue has been generated out of that, right? So we can keep talking about asset monetization. We keep talking about bad banks. There's all these great reforms that we have to do. Yes, of course, we have to do this. There's no argument there. Right now, though, we are in a moment of still, I believe, in a moment of crisis. The costs of the last 2 years have been borne significantly by the bottom of the pyramid. We need to be able to find creative ways of elevating that. I am all for, in the long term, an urban jobs program. Again, I'm not so keen on seeing it in the short term in this budget. It will take a minimum of 6 to 8 months to figure this out. I would much rather an imagination that says we will give some enhanced devolution to states. Several state governments have been experimenting over these last 2 years and before with different ways of providing basic social protection to the urban poor. They have better windows into figuring out how to identify the urban poor. They have different kinds of experiments that they have done, and therefore different things that they can scale up. That would be my route, rather than at this point in time opening up the discussion for an urban employment program. It is a complex one. We haven't yet had good enough public debate to figure out what the contours of that is. That's a long-term goal. In any case, I still believe even that should be handled by states. Let states figure it out, but ensure at least that devolution to states meets the expectations set by the Finance Commission, which we haven't done in the past.
In the meanwhile, the stock market is going in front foot forward to the event. It's a smart 1.5% rally for the frontline indices. The bank nifty looks very comfortable at 2%. This is riding off on yesterday's strength as well, I imagine. A couple of pharmaceutical stocks seem a bit subdued, so I don't know if there's any concern on that front, but we will wait and know. Vivek, on this point about divestment, what is it that you want to hear, or what do you think will be heard that will be of consequence? It's clear the government has missed its divestment target. LIC remains the elephant in the room. uh, how can she do this differently to inspire more confidence?
No, I wanted to respond to 2 points that Anant made, and then I'll answer your
Fantastic.
question. So I think, Anant, SP Jain students will not set up factories; they'll set up unicorns. So that's the fashionable and the easy way out these days. And the second point is, regarding jobs. Uh, so I mean, I talk to some friends of mine who run small factories, and one feedback that I constantly get, and this has been for years at end, is that the moment you reach a certain scale, let's say you do revenues of 10 crore, 15 crore, 20 crore a year, the amount of harassment that comes in from the system is just mind boggling. So these guys, instead of trying to concentrate on building a better product or selling more or doing whatever it takes to build their business better, essentially get stuck up with trying to handle the system. So I really don't know what is the solution to this, but perhaps if the bureaucrats at every level essentially are encouraged to talk to these guys and are sensitized to the whole issue, there might be a solution there. I don't know. Now, as far as disinvestment is concerned, I think this year was essentially, even the year last year.
Before that,
There
yeah.
was a lot of low hanging fruit. I mean, with stock markets being where they were, I mean, guys like Paytm sold out, made tons of money. So I really don't know what stopped the government from selling shares. And this does not mean selling, coming up with the IPO of LIC, or even a lot of other public sector public sector shares rallied quite
Yeah.
a bit, and that did not happen during the first stage of the rally. I mean, this was this is more true about this year than last. So this is something that only the bureaucrats at the Department of Disinvestment. I don't know whether there is. I mean, there used to be one. I don't know whether there's still one, but the bureaucrats in the finance ministry can tell us why they missed out on this great opportunity. I think the LIC IPO is, I think it's going to be very, very important. And, irrespective of whether they do it this year or next, one thing that I would like them to do is to price it reasonably. And, one is because it will be a big IPO, and two, because, we need to sort of learn a little from the British experience in the early to to late 1980s, where the government sold off a lot of public sector companies one by one. And it all started with the big IPO of British Telecom, if I remember correctly, and where the shares were pretty attractively priced, and they left a lot of returns on the table for the retail investor, and which is why the retail investor kept coming back when British Gas, British Steel, and other companies were privatized. So I think the LIC IPO is very, very important, and that needs to be used instead of trying to just maximize and earn whatever the government can from by selling a 10% or whatever stake it wants to sell in LIC. They should look at a slightly long-term trend.
Yeah. And I hope Anant sits all his students down before they finish up with their course, Anant, and you say, Beta, this is an IPO and this is fair value, and the two must match in terms of pricing. But before I go ahead, I'm going to hop across to my colleague Alicia. She's waiting by with the Mint team. We've got lots of in-house analysis as well. So let's get a heads up on what the budget could deliver. Alicia, I'm going to toss over to you now.
watch Mint's Budget Day coverage. I am joined by Utpal Bhaskar, who leads the Delhi bureau at Mint. Now, Utpal, over the last few weeks, Mint has been reporting a number of stories, in the leading up to this day, that's Budget Day, about how this will be a spending budget, but at the same time, it's also an election budget. So we know that the government will spend on things like infrastructure, boosting consumer spending, things like that. Within these buckets, what do you think the government will prioritize? And if you could take us through some of the stories that we have done and our colleagues have done over the last few weeks at Mint.
Sure. In fact, it's as in every budget, it's a very tough and it's a tight rope walk that the government needs to do. And in fact, thanks to the brilliant set of colleagues that I work with, so we have been able to put out a string of stories which generally captures about what's impending in this budget. One of the things that what we came to know is that obviously, and as the survey yesterday also kind of amplified it, is that the capital expenditure, there will be I think that number there will be boosted up in a sense that which was not seen earlier. Also because the kind of a GST collections and stuff and all of that, there is a kind of a room there for the government to spend. Now, in fact, if you talk about the specifics, so some of the things that, and that's what we have picked up is that there will be a revised duty on electronics, phone parts. Also, the divestment goals. So, of course, we saw this marquee Air India thing finally coming through, but also the big ones will be lined up, and some of them, BPCL, for example, has now been pushed. So all of that will add up to the huge divestment goals. Obviously, that number will also get propped up as well. Then, in fact, I'll just go through some of the stories that have been filed by my colleagues.
There's quite a few of them.
Yeah, it looks actually it's quite a handful. In fact, also the capital expenditure, when we were talking about the capex spend, and also a case has been established for that in the survey as well. So, in fact, if you look in FY22, 5.54 trillion was the number. Not a small number. Not all of that has been able to be absorbed as well. We have already seen some of the PSUs have not been able to spend, and that's the reason why FM has been writing to individual ministries, including railways, that why don't you amp it up a bit? So that will be something to watch out for. Also, it sounds almost like a laundry list actually now. In fact, it's a big budget going to be for railways as well. So obviously, we all know that the railway budget has been subsumed in the budget. So we're talking about around record 7,000 kilometers of electrification of tracks as well. Then, obviously, given that the railways went through, and this is because of the COVID and the pandemic, so there was not much traffic on the tracks as well. But railway budget is likely to give rail fares a hike up pass. So there's no rail fare hike, nor on the passenger side of it, or also on the goods side of it as well. There might be a little bit of tweaking here and there. Interestingly, the operating ratio of railways, the operating ratio, as viewers would understand, is what the railways spend to earn so basically, that's the tariff, how they earn tariff on it. So the operating ratio will be under 96%. That is something that would allow railways to spend more of its own coffers rather than depending upon the government for some kind of a grant or a loan. Now, also, if you look at the overall railway numbers, pretty interesting. The railway budget might go up to as high as 2.5 trillion. So that is quite a number. In fact, if you also look at, there will be a huge jump in highways that is expected allocation as well. Now, there's a new scheme that the government is planning to come out. If the kind of commitments that the government India made at COP26. So obviously, greening of economy is a huge part of this initiative. So to reduce emissions, there's a new scheme. While this government is big on acronyms, so there's something called Roshni, which they're talking about. This is to reduce emissions. Over the overall for the scheme's outlay, it will start with around 5,000 crore, but it will be around overall, I think it's around 10,000 crore is the number. This is basically to cut down our carbon emissions. We have made that commitment of a billion ton. Obviously, India wants to become a zero emission economy. And speaking about energy and greening of economy as well. So obviously, there is a strategic intent which might be captured in some part of a budget speech as well, which talks about how we want to look at some regions. For example, Northeast, we have a very interesting neighborhood both on the eastern and the western flank. In Northeast, we want to develop more of hydropower projects, given that what our neighbor has been doing there in the... And also the storage. Now, energy storage is supposed to be a interesting part in this budget, where we are talking about maybe the government will offer viability gap funding for setting up these large energy storage projects. Couple of few more, and I know it must be getting quite exhausting for you. Also, there will be a bit of a duty reject might on steel and aluminum, given that what importance they play in the overall scheme of things for the economy. Then I think these are not the full, by the way. So these are not the whole bunch of it. These are only the ones which we want to amplify. Also, maybe a infrastructure tag to tourism and reality, given that what these sectors went through. And bonanza, some kind of a bonanza for home buyers. So that more or less sums it up for what we might be looking out for there in the budget. And a big one, actually, given that what the economy went through, and a lot of expectations for the finance minister as she shortly presents the speech.
Clearly, and a lot of expectations if the number of pages Utpal has had to flip is anything to go by. And a very comprehensive overview of the stories we have covered at Mint, and also the themes that the budget will likely highlight. And we'll find all of that out in just a short while from now. But for the moment, Mitali, back to you in the studio.
Thank you, Alisha. Indeed, this is good practice for the budget. I think a lot of those terms will be heard in the next couple of minutes. Anant, remiss of me not to ask you this right at the top, because this is one of the big markers. Do you expect to hear anything on the medium-term fiscal outlook, which was missing last year because, the FRBM Act was being rejigged? What do you think we'll hear? And B, how important will it be, given the fact that we've got our eye on global bond indices? The rating agencies will be watching now to see, after last year, what the medium-term glide path is.
So, Mitali, I'm not a trained economist, but it seems to be that economists are a lot less worried about fiscal deficit nowadays. The holy cows of debt to GDP, etc., are no longer as powerful as they used to be earlier. I suspect even rating agencies are going to give a lot more of leeway, particularly if you see things like GDP growth coming back and debt to GDP coming down over time, etc. Having said that, you're absolutely right. The last year, FRBM was kind of trampled upon almost summarily, to be honest. Of course, we knew it's going to happen, but it was done fairly easily. There was only a broad indication, I think, from the finance minister saying fiscal deficit will be brought down to, I think, 4% by 25-26 or something. A very, very broad target over 4 years, beyond the election dates and so on and so forth. I'm hoping there is a little bit more of sharpness which is brought into it, particularly in relation to revenue deficits. One good thing about FRBM, which was there in 2003, was a target to bring down revenue deficit down to zero over a period of time. I like that metric. Lots of people have a problem with revenue deficits being classified as bad, but I'm old-fashioned. I've lost a lot of hair. I think having large revenue deficits is not a good sign. I'd much rather see that money going into productive capital expenditure. At this, last year we had revenue deficits of over 7% of GDP, obviously because of COVID. I'm hoping that there is a glide path given to at least bring down the revenue deficit down to zero in 3-4 years' time. It won't be easy given all the asks that everybody has, but I think that is important. If there is a fiscal deficit which is going purely to support capital expenditure and things like education, healthcare, nutrition, public services, I think that's fine. That's not really a problem. Our rate of growth, nominal growth, is far ahead of our cost of funds by any simple capital markets and corporate finance kind of equation. It should be sustainable. The problem is we are spending beyond our means when it comes to basic expenditures like interest cost, your salaries, your pensions, and your subsidies, etc. I'd much rather see that come down. On the point about global debt indices, very quickly, I'm personally hoping that a few tax changes happen which allow and facilitate the inclusion of Indian debt into global debt indices. As you know, equity has been part of MSCI forever, but Indian debt has never been part of the global indices. I think it's critical. We could have a large borrowing program, and I know this is going into a rabbit hole, but we could have a very large borrowing program, particularly if you include states. I think Yamini made the point earlier, states are in trouble. They need a lot of money, and across center and state, we could be borrowing something like 22 lakh crores over the next fiscal year. It would help to have sustained good quality savings coming in from overseas to fund a part of this. And you will get that if you get inclusion into debt indices. That requires a lot of tax changes. I just hope our lovely bureaucracy gets these tax changes right the first time around. I suspect, though, that given the nature of the changes, you'll probably come out with some announcements and then figure out 1 month later that you need to tweak them a little more, etc. But either which way, debt indices inclusion, I think, is very, very critical. I was a little surprised that the economic survey made no mention of it, despite this being very close to Sanjeev Sanyal's heart. But I'm hoping that that's belied in the budget today.
Perhaps many things are close to his heart, so he skipped that one. In case you're just joining in, we have a fairly stable equity market bubbling at about an 800-point rally for the Sensex. 10 minutes to go for the Finance Minister to rise and present her speech. Importantly, as we've been saying, this is also a budget that is being tabled right before several key elections. Yashwant, on two counts, I want to know your sense of what's happening on the ground. One, it's an open secret that there is rancor amongst the farmers in Punjab. There is also a degree of anger amongst the Western UP area, again, around farming issues. What is it that you think, is a sore point for them still? And secondly, some of the feedback that we were getting, especially from states like Uttar Pradesh, was the fact that running the household was tough because of things like cooking oil. There wasn't, that kind of cost was really pinching. What have you heard, and what do you think will change the mood?
Well, I think changing the mood will start with somewhere continuation of the first of all ration policy. We know that it is only aimed to provide till probably April, but that I am hoping and I do believe that this government will continue because we are still not out of pandemic actually in that way. When I'm saying medically, we may be slow and steadily get out of the pandemic, but the effect of the pandemic are going to be there for at least couple of years. So I'm hoping that part of it continues because put all those hunger indexes of the world into the dustbin, because having a population of 1.4 billion people and not a single hunger death reported in the last 2 years, that itself is a big thing to achieve for any government under the sun with this kind of population. Having said that, yes, the issue of inflation, people are really looking. I don't know how this government is going to do it, but people are looking forward to कि कीमत कम होगी, कुछ चीजें ठीक होगी. For the middle classes, probably that would mean enough if the tax slabs are taken a bit further up, because that will leave more money in their hands, and that might basically go into the consumption again. But right now, I don't see much of that money is going into purchasing and consumption as such. Much of that money, because in another tracker that we did for Mint about 5 months back, almost like 55% of said that they did not really plan, even if they had additional money, they did not plan to buy anything. They would rather like to save that money for that odd hours which they are. So I don't see that much happening. But yes, the middle class would like to have slight relief, including the relief of medical expenditure, which is genuine in that way. That can be done. But when the original question that you asked about the farmers thing, you will be surprised, Mitali, that outside the 2.5 states, if I may say so, that is Punjab, Haryana, and Western UP, in rest of the India, majority of the farmers actually were in support of these farmers. So it's really funny. It's really funny. Again, I'm repeating what we found in our tracker data. Outside these 2.5 states of Punjab, Haryana, and Western UP, in rest of the India, the farmers were actually in favor of these farm laws. And that's the political side of it. Not many expect Narendra Modi to actually go back on what he is trying to do. But I guess that public sentiment was in general in favor of the farmers, that if the farmers are opposing something, the government should be talking to that. And that is the political risk of the political capital that Narendra Modi did not wish to take at that point of time. And add to that some of the security input of some issues that might return in the state of Punjab. Nobody wants to go back into the 80s, what that state has seen. So I guess that was also with some kind of input on the security angle that the farm laws were taken back. But yes, don't expect that the farmers of Punjab, Haryana, and Western UP are actually representative of the farmers across the board. No, they are not.
I think we'll have to set up a different debate on this one, Yashwant, because there were protests that happened in other parts of the country as well, including southern India. But we will discuss that at an alternate date. Lekha, I just want to come to you on the sector that has clearly been hemorrhaged out of shape, which is services. What do you think the finance minister can do to support this sector, which was, it was clear that there was stress in the system last year as well, but there wasn't that much that came through for services per se. What can she do via the budget to support this entire space?
Yes, overall, if you look at the macro framework from the position of strength, she's going to postpone the fiscal consolidation. And given the taxes are so buoyant, use this fiscal space to do something, related to the sectors like the contact intensive sectors. What exactly she will do, maybe one thing is, it may be quite controversial. She may be announcing something related to the digital currency. I don't know. I'm hopeful about what is her stance on the cryptocurrency, but it is beyond the budget because it's a regulatory mechanism which is quite crucial about this. So we need to see that what is a regulatory mechanism which is on board before we get into this. But this digital, because the entrepreneurs, they look forward to a very smooth business in a cross border. So what can ease their business if it is through digital currency? Then I think it's a very controversial topic, but I really look forward to finance minister's take on that given the regulatory framework on board.
By the way, those are pictures coming in from outside the parliament from a couple of minutes back. The finance minister, you can see the chief economic advisor as well in those images, presenting the budget very, very shortly. 6 minutes to go. Market still remaining quite stable at this point. Vivek, there's one side of the K and then there's the other side of the K, and there's enough data now pointing to the fact that the rich have gotten much, much richer. What do you expect to see on that regard? Do you think, for example, there could be the suggestion of a wealth tax? Do you think there could be some kind of additional cess on corporate India? Any of that a likelihood?
I don't think so. I mean, wealth tax, even when it was there, hardly helped the government raise much revenue. So I'm really not sure as to how will they go about implementing it now, which is precisely why, if you look at how the tax structure has changed over the last few years, once Arun Jaitley abolished or took away wealth tax, the marginal rate of tax for the people who make over 50 lakhs and over a crore went up dramatically. So I don't think there's any chance of a wealth tax being introduced, or I would be very surprised if the government went that way. I don't think. I mean, they'll fiddle around much with the entire idea of reducing corporate tax rates and then increasing it 2 years later would sort of it doesn't make much sense. So I don't see them fiddling around with it.
Anant, there's another reality along with, the capital spend that we were talking about, which is an almost 8-year drought now in private sector investment. I mean, what gives?
Oh, well, capacity utilization, as you know, Mitali, from RBI data, is languishing at about 65-ish%. Which industry is going to really invest when you're seeing hardly any utilization of capacity coming through? So which is why at this point in time, Mitali, I think it has to be, the investment cycle has to be spurred by the government. It has to provide the initial trigger and hope that, there is a virtuous cycle which it kind of pushes forward by doing appropriate investments into infrastructure, as well as what we talked about, enabling the business environment for private sector to follow. Look, I think this can change quickly, Mitali. Of course, the pandemic is not yet over. We don't know when it will get over. Maybe it'll stay with us for many years. But as and when this effect of this eases, if you see a resurgence of government spending, maybe a bit of higher exports, thanks to what's happening globally, that could spur some amount of output and job creation along with the government policies to enable that. If you create jobs that can absolutely trigger a virtuous cycle, productive jobs would spur their own consumption, would spur their own savings and investments, again, back into a nice virtuous cycle, which is what China did over 30 years. We've got to try and emulate that. So yes, CapEx can follow through, but not immediately. I think the lead has to be taken by the government.
Mm. Vivek, just pivoting back to the stock market for a bit, I came across an interesting brokerage report that indicated there might be a comprehensive tax policy for all tobacco products around the country. Now, this is always the finance minister's one of her or his favorite areas to look at. Do you expect to see something in that regard? You're on mute, sorry.
I didn't hear you. Can you please repeat that? Sorry.
Yeah, I came across an interesting brokerage report, Vivek, that indicated she might announce a comprehensive
Hmm.
tax policy for all tobacco products, which, as you know, is a finance minister favorite in terms of a sector. Are you expecting to hear anything?
I mean, it's an easy way to raise more money, and governments have known to be known to have done this over the years. So, and in a
Hmm.
year when they could, I mean, and in the next few years they can do with a little more money from different fronts. So one wouldn't be surprised.
2 minutes to go. Markets just lost a little bit of weight from where it started off. We are waiting for visuals to come in of the finance minister in parliament. Yamini, I don't mean to sort of pour water on the occasion, but what would constitute a disappointment in this budget? Because there's so many big asks in terms of social sector spending, in terms of doing something with the fisc that is of more concrete nature. What would be a downer?
I think the real downer would be two things. One, the finance minister has started a very welcome trend of better transparency in the budget and getting the fiscal math right to a degree. So I think it would be a real downer if we don't continue down this trend of greater transparency and a better visibility on what the future, what the year looks like and what the future looks like, which means, therefore, that we really do need a well thought through midterm fiscal framework. The absence of a medium term framework has been part of the problem from the beginning of the pandemic. We have not had a good understanding of the government's perception on what our growth rate is going to look like and how it's going to manage its own macro fiscal position in that context. Now that we've had 2 years, there is at least some understanding of the enormity of the challenge and some perspective on what we need to do to move forward towards a long-term path of fiscal consolidation. The second thing I would be disappointed with is if the government does not use the available fiscal space that it has to do basic investments, particularly in health and education. There's one thing the pandemic has taught us: investments in social infrastructure are as critical as investments in physical infrastructure. Now that we have some fiscal space, let's deploy that towards the betterment of the future of our country. So I hope to see some movement in that direction and not the lies we saw last year with the new scheme announcement and then a mushing up of various old schemes to try and present to us a renewed health budget.
Mm. Anant, what's the bond market penciling in? I know earlier you were talking about a figure of about 22 lakh crores, I think. What is the bond market primed for? Because really, they've sort of been bearing the brunt of the volatility in terms of this borrowing figure.
Yeah, absolutely. I think they'll be looking for a couple of things. One is, of course, the borrowing figure. This will be only the central number. I suspect it could be about 13 lakh crores, which would translate to about 9.5 lakh crores of net borrowing. The second thing it will be looking for is what we discussed about whether Indian bond index inclusion is possible or not, debt into global indices. It's a bit of a rabbit hole for bond markets, but it's very, very important. The point is, Mitali, that across center and state, if the net borrowing is, let's say, around 16 lakh crores, the genuine demand can be about 10 to 12 lakh crores. So you have an actual gap. It will help a lot if you get in global demand to come through. In case it doesn't come through, then the market will rely upon the RBI. So RBI will have to come out and do a mehuna again, all over again,
Yeah.
to come from
Yeah.
bond markets to take care.
Yeah. Sorry to cut you short, Anand, but I think the finance minister has risen to speak. So we're going to cut across now to the parliament.
helped greatly. With an accelerated improvement of health infrastructure in the past 2 years, we are in a strong position to withstand challenges. I'm confident that with Sabka Prayas, we will continue our journey with strong growth. Honorable Speaker, we are marking Azadi Ka Amrit Mahotsav and have entered into Amrit Kal, the 25-year-long lead up to India at 100. Honorable Prime Minister, in his Independence Day address, had set out the vision for India at 100. By achieving certain goals during Amrit Kal, our government aims to attain this vision. They are complementing the macroeconomic level growth focus with a microeconomic level all-inclusive welfare focus, promoting digital economy and fintech, technology-enabled development, energy transition, and climate action, and relying on virtuous cycle starting from private investment with public capital investment, helping to crowd in private investment. Since 2014, our government's focus has been on empowerment of citizens, especially the poor and the marginalized. Measures have included programs that have provided housing, electricity, cooking gas, and access to water. We also have programs for ensuring financial inclusion and direct benefit transfers. We are committed to strengthening the abilities of the poor to tap all opportunities. Our government constantly strives to provide the necessary ecosystem for the middle classes, a vast and wide section which is populated across various middle income brackets, to make use of the opportunities they so desire. This budget seeks to lay the foundation and give a blueprint to steer the economy over Amritkal of the next 25 years, from India at 75 to India at 100. It continues to build on the vision drawn in the budget of 21-22. Its fundamental tenets, which included transparency of financial statement and fiscal position, reflect the government's intent, strengths, and challenges. This continues to guide us. The initiatives of the last year's budget have seen significant progress and have been provided with adequate allocations in this budget as well. The strengthening of health infrastructure, speedy implementation of the vaccination program, and the nationwide resilient response to the current wave of the pandemic are evident for all. The productivity linked incentive in 14 sectors for achieving the vision of Atmanirbhar Bharat has received excellent response, with potential to create 60 lakh new jobs and an additional production of 30 lakh crore during next 5 years. Towards implementation of the new public sector enterprise policy, the strategic transfer of ownership of Air India has been completed. The strategic partner for Neelanchal Ispat Nigam Limited has been selected. The public issue of the LIC is expected shortly. Others too are in the process for 2022-23. The National Bank
आपको पर्याप्त मौका पर्याप्त अवसर मिलेगा बेटे बेटे टिप्पणी मत कीजिए
The National Bank for Infrastructure Development and National Asset Reconstruction Company have commenced their activities. Honorable Speaker, sir, Budget 2021-22 had provided a sharp increase in provision for public investment or capital expenditure. Throughout the year, with the Honorable Prime Minister guiding the implementation, our economic recovery is continuing to benefit from the multiplier effect. This budget continues to provide impetus for growth. It lays a parallel track of 1. A blueprint for the Amritkal, which is futuristic and inclusive. This will directly benefit our youth, women, farmers, the scheduled castes, and the scheduled tribes. And number two, big private public investment. Number two, big public investment for modern infrastructure, readying for India at 100. This shall be guided by PM Gati Shakti and be benefited by the synergy of multimodal approach. Moving forward on this parallel track, we lay the following four priorities: PM Gati Shakti, inclusive development, productivity enhancement and investment, sunrise opportunities, energy transition, and climate action, and four, financing of investments. PM Gati Shakti. PM Gati Shakti is a transformative approach for economic growth and sustainable development. The approach is driven by 7 engines, namely roads, railways, airports, ports, mass transport, waterways, and logistics infrastructure. All 7 engines will pull forward the economy in unison. These engines are supported by the complementary roles of energy transmission, IT communication, bulk water and sewerage, and social infrastructure. Finally, the approach is powered by clean energy and Sabka Prayas. The efforts of the central government, the state governments, and the private sector together, leading to a huge job and entrepreneurial opportunities for all, especially the youth. PM Gati Shakti Master Plan, National Master Plan, the scope of PM Gati Shakti National Master Plan will encompass the 7 engines for economic transformation, seamless multimodal connectivity, and logistics efficiency. It will also include the infrastructure development by the state governments as per Gati Shakti Master Plan. The focus will be on planning, financing, including through innovative ways, use of technology, and speedier implementation. The projects pertaining to these 7 engines in the national infrastructure pipeline will be aligned with PM Gati Shakti framework. The touchstone of the master plan will be world-class modern infrastructure and logistics synergy among different modes of movement, both of people and goods, and location of projects. This will help raise the productivity and accelerate economic growth and development. Road transport. PM Gati Shakti Master Plan for expressways will be formulated in 22-23 to facilitate faster movement of people and goods. The National Highways network will be expanded by 25,000 kilometers in 2022-23. 20,000 crores of rupees will be mobilized through innovative ways of financing to complement the public resources. The data exchange among all mode operators will be brought on unified logistics interface platform designed for application programming interface. This will provide for efficient movement of goods through different modes, reducing logistics cost and time, assisting just-in-time inventory management, and in eliminating tedious documentation. Most importantly, this will provide real-time information to all stakeholders and improve international competitiveness. Open source mobility stack for organizing seamless travel of passengers will also be facilitated. Contracts for implementation of multimodal logistic parks at 4 locations through PPP mode will be awarded in 22-23. Railways will develop new products and efficient logistics services for small farmers and small and medium enterprises, besides taking the lead in integration of postal and railways network to provide seamless solutions for movement of parcels. One station, one product concept will be popularized to help local businesses and supply chains. As a part of Atmanirbhar Bharat, 2,000 kilometers of network will be brought under Kavach, the indigenous world-class technology for safety and capacity augmentation in 2022-23. 400 new generation Vande Bharat trains will better energy efficiency and passenger riding experience will be developed and manufactured during the next 3 years. 100 PM Gati Shakti cargo terminals for multimodal logistics facilities will be developed during the next 3 years. Innovative ways of financing and faster implementation will be encouraged for building metro systems of appropriate type at scale. Multimodal connectivity between mass urban transport and railway stations will be facilitated on priority. Design of metro systems, including civil structures, will be reoriented and standardized for Indian conditions and needs. Parvat Mala, as a preferred ecologically sustainable alternative to conventional roads in difficult hilly areas, National Ropeways Development Program will be taken up on PPP mode. The aim is to improve connectivity and convenience for commuters, besides promoting tourism. This may also cover congested urban areas where conventional mass transit system is not feasible. Contracts for 8 such ropeway projects for a length of 60 kilometers will be awarded in 22-23. With technical support from the Capacity Building Commission, central ministries, state governments, and their infra agencies will have their skills upgraded. This will ramp up capacity in planning, design, financing, including innovative ways, and implementation management of the PM Gati Shakti infrastructure projects. Inclusive development, our second priority. Agriculture. The procurement of wheat in Rabi 21-22 and the estimated procurement of paddy in Kharif 21-22 will cover 1,208 lakh metric tons of wheat and paddy from 163 lakh farmers, and 2.37 lakh crores will be the direct payment of MSP value to their accounts. Chemical-free natural farming will be promoted throughout the country with a focus on farmers' lands in 5-kilometer wide corridors along the river Ganga at the first stage. 2023 has been announced as the International Year of Millets. Support will be provided for post-harvest value addition, enhancing domestic consumption, and for branding millet products nationally and internationally. To reduce our dependence on import of oil seeds, a rationalized and comprehensive scheme to increase domestic production of oil seeds will be implemented. For delivery of digital and high-tech services to farmers with involvement of public sector research and extension institutions, along with private agri-tech players and stakeholders of agri-value chains, a scheme in PPP mode will be launched. Use of Kisan drones will be promoted for crop assessment, digitization of land records, spraying of insecticides and nutrients. States will be encouraged to revise syllabi of agricultural universities to meet the needs of natural, zero budget, and organic farming, modern day agriculture, value addition, and management. A fund with blended capital raised under the co-investment model will be facilitated through the NABARD. This is to finance startups for agriculture and rural enterprise with relevant for farm produce value chain. The activities of these startups will include inter alia, support for FPOs, machinery for farmers on rental basis at farm level, and technology including IT-based support. The implementation of the Ken-Betwa link project at an estimated cost of 44,605 crores will be taken up. This is aimed at providing irrigation benefits to 9.0 lakh hectare of farmers' lands, drinking water supply to 62 lakh people, 103 megawatt of hydro, 27 megawatt of solar power, allocations of 4,300 crores of rupees in the RE 21-22 and 1,400 crores of rupees in 22-23 have been made for this project. Honorable Speaker, sir, draft DPRs for 5 river links, namely Daman Ganga Pinjal, Partapi Narmada, Godavari Krishna, Krishna Pennar, and Pennar Kaveri have been finalized. Once a consensus is reached among the beneficiary states, the center will provide support for their implementation. For farmers to adopt suitable varieties of fruits and vegetables and to use appropriate production and harvesting techniques, our government will provide a comprehensive package with participation of state governments. MSMEs, Udyam, eShram, NCS, and ASEEM portals will be interlinked. Their scope will be widened. They will now perform as portals with live organic databases, providing G2C, B2C, and B2B services. These services will relate to credit facilitation, skilling, and recruitment with an aim to further formalize the economy and enhance entrepreneurial opportunities for all. Emergency Credit Line Guarantee Scheme has provided the much needed additional credit to more than 130 lakh MSMEs. This has helped them mitigate the adverse impact of the pandemic. The hospitality and related services, especially those by micro and small enterprises, are yet to regain their pre-pandemic level of business. Considering these aspects, the ECLGS will be extended up to March 2023, and its guarantee cover will be expanded by 50,000 crores of rupees to total cover of 5 lakh crores. With the additional amount being earmarked exclusively for the hospitality and related sectors. Credit Guarantee Trust for Micro and Small Enterprises, CGT-MSE, scheme will be revamped with required infusion of funds. This will facilitate additional credit of 2 lakh crore for micro and small enterprises and expand employment opportunities. Raising and accelerating MSME performance, RAMP, program will outlay of 6,000 crore over 5 years will be rolled out. This will help MSME sector become more resilient, competitive, and efficient. Skilling programs and partnership with the industry will be reoriented to promote continuous skilling avenues, sustainability, and employability. The National Skill Qualification Framework will be aligned with dynamic industry needs. Digital ecosystem for skilling and livelihood, the Desh Stack e-portal, will be launched. This aims to empower citizens to skill, reskill, or upskill through online training. It'll also provide API-based trusted skill credentials, payment and discovery layers to find relevant jobs and entrepreneurial opportunities. Startups will be promoted to facilitate drone Shakti through varied applications and for drone as a service. In select ITIs in all states, the required courses for skilling will be started. Due to the pandemic-induced closure of schools, our children, particularly in the rural areas and those from scheduled castes and scheduled tribes and other weaker sections, have lost almost 2 years of formal education. Mostly, these are children in government schools. We recognize the need to impart supplementary teaching and to build a resilient mechanism for education delivery. For this purpose, One Class, One TV channel program of PM E-Vidya will be expanded from 12 to 200 TV channels. This will enable all states to provide supplementary education in regional languages for classes 1 to 12. High quality e-content in all spoken languages will be developed for delivery via internet, mobile phones, TV, and through radio and through digital teachers. A competitive mechanism for development of quality e-content by the teachers will be set up to empower and equip them with digital tools of teaching and facilitate better learning outcomes. A digital university will be established to provide access to students across the country for world-class quality universal education with personalized learning experience at their doorsteps. This will be made available in different Indian languages and ICT formats. The university will be built on a networked hub and spoke model, with the hub building cutting edge ICT expertise. The best public universities and institutions in the country will collaborate as a network of hub and spoke. An open platform for the national digital health ecosystem will be rolled out. It will consist of digital registries of health providers and health facilities, unique health identity, consent framework, and universal access to health facilities. The pandemic has accentuated mental health problems in people of all ages. To better the access to quality mental health counseling and care services, a national tele-mental health program will be launched. This will include a network of 23 tele-mental health centers of excellence, with NIMHANS being the nodal center and International Institute of Information Technology, Bangalore, IIIT Bangalore, providing technology support. Recognizing the importance of Nari Shakti as the harbinger of our bright future and for women-led development, during the Amrit Kal, our government has comprehensively revamped the schemes of the Ministry of Women and Child Development. Accordingly, 3 schemes, namely Mission Shakti, Mission Vatsalya, Saksham Anganwadi, and Poshan 2.0, were launched recently to provide integrated benefits to women and children. Saksham Anganwadis are a new generation Anganwadis that have better infrastructure and audio-visual aids powered by clean energy and providing improved environment for early childhood development. 2 lakh Anganwadis will be upgraded under this scheme. Current coverage of Har Ghar Nal Se Jal is 8.7 crores. Of this, 5.5 crore households were provided tap water in last 2 years itself. Allocation of 60,000 crores of rupees has been made with an aim to cover 3.8 crore households in 2022 and 23. In 22-23, 80 lakh houses will be completed for the identified eligible beneficiaries of the PM Awas Yojana, both rural and urban. 48,000 crores is allotted for this purpose. The central government will work with the state governments for reduction of time required for all land and construction related approvals, for promoting affordable housing for middle class and for the economically weaker sections in urban areas. We shall also work with the financial sector regulators to expand access to capital along with reduction in cost of intermediaries. A new scheme, Prime Minister's Development Initiative for the Northeast, will be implemented through the Northeastern Council. It will fund infrastructure in the spirit of PM Gati Shakti and social development projects based on felt needs of the Northeast. This will enable livelihood activities for youth and women, filling the gaps in various sectors. It will not be a substitute for existing central or state schemes. While the central ministries may also post their candidate projects, priority will be given to those posted by the states. An initial allocation of 1,500 crores of rupees will be made, and the initial list of projects is given in Annexure 1 of my speech. Our vision to improve the quality of life of citizens in the most backward districts of the country through aspirational districts program has been translated into reality in a very short span of time. 95% of those 112 districts have made significant progress in key sectors such as health, nutrition, financial inclusion, and basic infrastructure. They have surpassed even some of the state average values. However, in those districts, some blocks continue to lag. In 22-23, the program will focus on such blocks in those districts. Border villages with sparse population, limited connectivity, and infrastructure often get left out from the development gains. Such villages on the northern border will be covered under a new Vibrant Villages program. The activities will include construction of village infrastructure, housing, tourist centers, road connectivity, provisioning of decentralized renewable energy, direct-to-home access for Doordarshan, and educational channels, and support for their livelihood generation. Additional funding for these activities will be provided. Existing schemes will be converged. We will define their outcomes and monitor them on a constant basis. In 2022, 100% of 1.5 lakh post offices will come on the core banking system, enabling financial inclusion and access to ATMs, and also provide online transfer of funds between post office accounts and bank accounts. This will be helpful, especially for farmers and senior citizens in rural areas, enabling interoperability, and financial inclusion. Honorable Speaker, sir, in recent years, digital banking, digital payments, and fintech innovations have grown at a rapid pace in the country. Government is continuously encouraging these sectors to ensure that the benefits of digital banking reach every nook and corner of the country in a consumer-friendly manner. Taking forward this agenda and to mark 75 years of our independence, it is proposed to set up 75 digital banking units in 75 districts of the country by scheduled commercial banks. The financial support for digital payment ecosystem announced in the previous budget will continue in 22-23 as well. This will encourage further adoption of digital payments. There will also be a focus to promote use of payment platforms that are economical and user-friendly. Sir, I move to the next priority. In recent years, over 25,000 compliances were reduced and nearly 1,500 union laws were repealed. This is the result of our government's strong commitment for minimum government and maximum governance. 1,486 union laws were repealed. Our trust in the public and ease of doing business is what is highlighted here, sir. For the Amrit Kal, the next phase of ease of doing business 2.0, and ease of living will be launched. In our endeavor to improve productive efficiency of capital and human resources, we will follow the idea of trust-based governance. The new phase will be guided by an active involvement of the states, digitization of manual processes and interventions, integration of the central and state level systems through IT bridges, a single point access for all citizen-centric services, and standardization and removal of overlapping compliances, crowdsourcing of suggestions, and ground-level assessment of the impact with active involvement of citizens and businesses will be encouraged. A single window portal, Parivesh, for all green clearances was launched in 2018. It has been instrumental in reducing the time required for approvals significantly. The scope of this portal will be expanded to provide information to the applicants based on location of units. Information about specific approvals will be provided. It'll enable application for all 4 approvals through a single form and tracking of the process through Centralized Processing Center Green, CPC Green. E-passports. The issuance of e-passports using embedded chip and futuristic technology will be rolled out in 22-23 to enhance the convenience for the citizens in their overseas travel. By the time of India at 100, nearly half our population is likely to be living in urban areas. To prepare for this, orderly urban development is of critical importance. This will help realize the country's economic potential, including livelihood opportunities for the demographic dividend. For this, on the one hand, we need to nurture the megacities and their hinterlands to become current centers of economic growth. On the other, we need to facilitate Tier 2 and Tier 3 cities to take on the mantle in the future. This would require us to reimagine our cities into centers of sustainable living with opportunities for all, including women and our youth. For this to happen, urban planning cannot continue with a business as usual approach. We plan to steer a paradigm change. A high-level committee of reputed urban planners, urban economists, and institutions will be formed to make recommendations on urban sector policies, capacity building, planning, implementation, and governance. For urban capacity building, support will be provided to the states. Modernization of building bylaws, town planning schemes, transit-oriented development will be implemented. This will facilitate reforms for people to live and work closer to the mass transit systems. The central government's financial support for mass transit projects and Amrit scheme will be leveraged for formulation of action plans and their implementation for facilitating the TOD and TPS by the states. For developing India-specific knowledge in urban planning and design, and to deliver certified training in these areas, up to 5 existing academic institutions in different regions will be designated as centers of excellence. These centers will be provided endowment fund of 250 crore each. In addition, the AICTE will take the lead to improve syllabi, quality, and access of urban planning courses in other institutions. We will promote a shift to use of public transport in urban areas. This will be complemented by clean tech and governance solutions, special mobility zones with zero fossil fuel policy and EV vehicles. Battery swapping policy. Considering the constraint of space in urban areas, for setting up charging stations at scale, a battery swapping policy will be brought out and interoperability standards will be formulated. The private sector will be encouraged to develop sustainable and innovative business models for battery or energy as a service. This will improve efficiency in the EV ecosystem. Efficient use of land resources is a strong imperative. States will be encouraged to adopt unique land parcel identification number to facilitate IT-based management of records. The facility for transliteration of land records across any of the Schedule 8 languages will also be rolled out. The adoption of linkage with National Generic Document Registration System, NGDRS, with the One Nation, One Registration software will be promoted as an option for uniform process of registration and anywhere registration of deeds and documents. Necessary amendments in the code IBC will be carried out to enhance the efficiency of the resolution process and facilitate cross-border insolvency resolution. Accelerated corporate exit. Several IT-based systems have been established for accelerated registration of new companies. Now the Center for Processing Accelerated Corporate Exit, CPACE, will process re-engineering, will be established to facilitate and speed up the voluntary winding up of these companies from the currently required 2 years to less than 6 months. Government procurement. Government rules have recently been modernized for the needs of Amritkal. The new rules have benefited from the inputs from various stakeholders. The modernized rules allow use of transparent quality criteria besides cost and evaluation of complex tenders. Provisions have been made for payment of 75% of running bills mandatorily within 10 days and for encouraging settlements of disputes through conciliation. As a further step to enhance transparency and to reduce delays in payments, a completely paperless, end-to-end online e-bill system will be launched for use by all central ministries for their procurements. The system will enable the suppliers and contractors to submit online their digitally signed bills and claims and track their status from anywhere. To reduce indirect cost for suppliers and work contractors, the use of surety bonds as a substitute for bank guarantee will be made acceptable in government procurements. Business such as gold imports may also find this useful. IRDAI, insurance regulator, has given the framework for issue of surety bonds by insurance companies. AVGC Promotion Task Force. The animation, visual effects, gaming, and comic, the AVGC sector, offers immense potential to employ youth. An AVGC promotion task force with all stakeholders will be set up to recommend ways to realize this and build domestic capacity for serving our markets and the global demand. Telecom sector. Telecommunications in general and 5G technology in particular can enable growth and offer job opportunities. Required spectrum auctions will be conducted in 2022 to facilitate rollout of 5G's mobile services within 2022-23 by private telecom providers. A scheme for design-led manufacturing will be launched to build a strong ecosystem for 5G as part of the production-linked incentive scheme. To enable affordable broadband and mobile service proliferation in rural and remote areas, 5% of annual collections under the Universal Service Obligation Fund will be allocated. This will promote R&D and commercialization of technologies and solutions. Our vision is that all villages and their residents should have the same access to e-services, communication facilities, and digital resources as urban areas and their residents. The contracts for laying optical fiber in all villages, including remote areas, will be awarded under the BharatNet project through PPP in 22 and 23. Completion is expected in 2025. Measures will be taken to enable better and more efficient use of the optical fiber. Export promotion. The Special Economic Zones Act will be replaced with a new legislation that will enable the states to become partners in development of enterprise and service hubs. This will cover all large existing and new industrial enclaves to optimally utilize available infrastructure and enhance competitiveness of exports. Atmanirbharta in defense. Our government is committed to reducing imports and promoting Atmanirbharta in equipment for the armed forces. 68% of the capital procurement budget will be earmarked for domestic industry in 22-23, up from 58% in 21-22. Defense R&D will be opened up for industry, startups, and academia With 25% of defense R&D budget earmarked, private industry will be encouraged to take up design and development of military platforms and equipment in collaboration with DRDO and other organizations through SPV model. An independent nodal umbrella body will be set up for meeting wide-ranging testing and certification requirements. Artificial intelligence, geospatial systems and drones, semiconductor and its ecosystem, space economy, genomics and pharmaceuticals, green energy and clean mobility systems have immense potential to assist sustainable development at scale and modernize the country. They provide employment opportunities for our youth and make Indian industry more efficient and competitive. Supportive policies, light touch regulations, facilitative actions to build domestic capacities, and promotion of research and development will guide the government's approach. For R&D in the sunrise opportunities, in addition to efforts of collaboration among academia, industry, and public institutions, government contribution will be provided. Energy transition and climate change. The risks of climate change are the strongest negative externalities that affect India and other countries. As Honorable Prime Minister said at the COP26 summit in Glasgow last November, and I quote, "What is needed today is mindful and deliberate utilization instead of mindless, destructive consumption," unquote. The low carbon development strategy, as enunciated in the Panchamrit that he announced is an important reflection of our government's strong commitment towards sustainable development. The strategy opens up huge employment opportunities and will take the country on a sustainable development path. This budget proposes several near-term and long-term actions accordingly. Solar power. To facilitate domestic manufacturing for the ambitious goal of 280 gigawatts of installed solar capacity by 2030, an additional allocation of 19,500 crores for PLI, production linked incentive, for manufacturing of high efficiency modules with priority to fully integrate manufacturing units from polysilicon to solar PV modules will be made. Honorable Speaker, sir, the circular economy transition is expected to help in productivity enhancement as well as creating large opportunities for new businesses and jobs. The action plans for 10 sectors such as electronic waste, end-of-life vehicles, used oil waste, toxic and hazardous industrial waste are already ready. The focus will now be on addressing important cross-cutting issues of infrastructure, reverse logistics, technology upgradation, and integration with informal sector. This will be supported by active public policies covering regulations, extended producers' responsibilities, framework, and innovation facilities. 5 to 7% biomass pellets will be co-fired in thermal power plants, resulting in carbon dioxide savings of 38 MMT annually. This will also provide extra income to farmers and job opportunities to locals and help avoid stubble burning in agricultural fields. Saving energy is an important aspect of the energy management. Hence, energy efficiency and savings measures will be promoted. This will be done in large commercial buildings through the energy service company business model. It will facilitate capacity building and awareness for energy audits, performance contracts, and common measurement of and verification protocol. 4 pilot projects for coal gasification and conversion of coal into chemicals required for the industry will be set up to evolve technical and financial viability. The policies and required legislative changes to promote agroforestry and private forestry will be brought in. In addition, financial support will be provided to farmers belonging to scheduled agroforestry. Honorable Speaker, I now move to the fourth priority, financing of investments. Capital investment holds the key to speedy and sustainable economic revival and consolidation through its multiplier effect. Capital investment also helps in creating employment opportunities, induced enhanced demand for manufactured input from large industries and MSMEs, services from professionals, and help farmers through better agri infrastructure. The economy has shown strong resilience to come out of the effects of the pandemic with high growth. However, we need to sustain that level to make up for the setback of 2020-2021. As outlined in para 5 earlier, the virtuous cycle of investment requires public investment to crowd in private investment. At this stage, private investments seem to require that support to rise to their potential and to the needs of the economy. Public investment must continue to take the lead and prime the private investment and demand in 2022-23. Considering the above imperative, the outlay for capital expenditure in the union budget is once again being stepped up sharply by 35.4% from 5.54 lakh crore in the current year to 7.50 lakh crores in 22-23. This has increased to more than 2.2 times the expenditure of 2019-20. This outlay in 22-23 will be 2.9% of the GDP. Effective capital expenditure, with this investment taken together with the provision made for creation of capital assets through grants and aid to states, the effective capital expenditure of the central government is estimated at 10.68 lakh crores in 22-23, which will be about 4.1% of the GDP. Green bonds. As a part of the government's overall market borrowings in 22-23, sovereign green bonds will be issued for mobilizing resources for green infrastructure. The proceeds will be deployed in public sector projects, which help in reducing the carbon intensity of the economy. Gift IFSC. World-class foreign universities and institutions will be allowed in the GIFT City to offer courses in the financial management, fintech, science, technology, engineering, and mathematics, free from domestic regulations, except those by the IFSCA, to facilitate availability of high-end human resources for financial services and technology. An international arbitration center will be set up in the GIFT City for timely settlement of disputes under international jurisprudence. Services for global capital for sustainable and climate finance in the country will be facilitated in the GIFT City. Infrastructure status. Data centers and energy storage systems including dense charging infrastructure and grid-scale battery systems, will be included in the harmonized list of infrastructure. This will facilitate credit availability for digital infrastructure and clean energy storage. Venture capital and private equity invested more than 5.5 lakh crores last year, facilitating one of the largest startup growth system. Scaling up this investment requires a holistic examination of regulatory and other frictions. An expert committee will be set up to examine and suggest appropriate measures. Government-backed funds, NIIF and SIDBI, Fund of Funds, have provided scale capital, creating a multiplier effect. For encouraging important sunrise sectors such as climate action, deep tech, digital economy, pharma, and agri-tech, the government will promote these thematic funds for blended finance, with the government share being limited to 20% and the funds being managed by private fund managers. For financing the infrastructure needs, the stepping up of public investment will need to be complemented by private capital at a significant scale. Measures will be taken to enhance financial viability of projects, including PPP, with technical and knowledge assistance from multilateral agencies. Enhancing financial viability shall also be obtained by adopting global best practices, innovative ways of financing, and balanced risk allocation. Digital rupee. Introduction of a central bank digital currency will give a big boost to digital economy. Digital currency will also lead to a more efficient and cheaper currency management system. It is therefore proposed to introduce digital rupee using blockchain and other technologies to be issued by the Reserve Bank of India starting 2022 and 23. Financial assistance to states for capital investment. Reflecting the true spirit of cooperative federalism, the central government is committed to bolstering the hands of the states in enhancing their capital investment towards creating productive assets and generating remunerative employment. The scheme for financial assistance to states for capital investment has been extremely well received by the states. In deference to the requests received during my meeting with the chief ministers and state finance ministers, the outlay for this scheme is being enhanced from 10,000 crores in the budget estimates to 15,000 crores in the revised estimates for the current year. For 22-23, I'll repeat that sentence for the benefit of many of our honorable members. In deference to the requests received during my meeting with chief ministers and state finance ministers, the outlay for this scheme is being enhanced from 10,000 crores in the BE to 15,000 crores, 15,000 crores in the RE of the current year. For 22-23, the allocation is 1 lakh crores to assist the states in catalyzing the overall investments in the economy. Are over and above the normal borrowings allowed to the states. Are over and above the normal borrowings to the states. This allocation will be used for PM Gati Shakti related and other productive capital investments of the states. It will also include components for supplemental funding for priority segments of PM Gram Sadak Yojana, including support for the state share, digitization of the economy, including digital payments and completion of OFC network, and reforms related to building bylaws, town planning schemes, transit-oriented development, and transferable development rights. In 22-23, in accordance with the recommendations of the 15th Finance Commission, the states will be allowed a fiscal deficit of 4% of the GSDP, of which 0.5% will be tied to power sector reforms, for which the conditions have already been communicated in 21-22. Fiscal management. As against a total expenditure of 34.83 lakh crores of rupees projected in the BE 21-22, the revised estimate is 37.70 lakh crores. The revised estimate of capital expenditure is 6.3 lakh crores of rupees. This includes an amount of 51,971 crores towards settlement of outstanding guaranteed liabilities of Air India and its other sundry commitments. Coming to the budget estimates, Honorable Speaker, sir, the total expenditure in 22-23 is estimated at 39.45 lakh crores, while the total receipts other than borrowings are estimated at 22.84 lakh crores of rupees. The revised fiscal deficit, Honorable Speaker, in the current year is estimated at 6.9% of the GDP, as against 6.8% projected in the budget estimates. The fiscal deficit is in 22-23 is estimated at 6.4% of the GDP, which is consistent with the broad path of the fiscal consolidation announced by me last year to reach a fiscal deficit level below 4.5% by 25-26. While setting the fiscal deficit level in 22-23, I'm conscious of the need to nurture growth through public investment to become stronger and sustainable. I will now move to part B of my speech. Direct tax. Honorable Speaker, sir, I take this opportunity to thank all the taxpayers of our country who have contributed immensely and strengthened the hands of the government in helping their fellow citizens in this hour of need. So I have brought in a little verse from the Mahabharata. I wouldn't spend more time reading because I would like the speech to get enough time. However, the substance of it is the king must make arrangements for Yoga Kshema, which is the welfare of the populace, by way of abandoning any laxity and by governing the state in line with Dharma, along with collecting taxes which are in consonance with Dharma. This is Mahabharata Shanti Parva Adhyaya, Shloka 11 from 72. Drawing wisdom from our ancient texts, we continue on the path to progress. The proposals in this budget, while continuing with our declared policy of stable and predictable tax regime, intend to bring more reforms that will take ahead our vision to establish a trustworthy tax regime. This will further simplify the tax system, promote voluntary compliance by taxpayers, and reduce litigation. Introducing new updated return. India is growing at an accelerated pace and people are undertaking multiple financial transactions. The Income Tax Department has established a robust framework of reporting of taxpayers' transactions. In this context, some taxpayers may realize that they have committed omissions or mistakes in correctly estimating their income for tax payment. To provide an opportunity to correct such errors, I'm proposing a new provision permitting taxpayers to file an updated return on payment of additional tax. This updated return can be filed within 2 years from the end of the relevant assessment year. Honorable Speaker, sir, presently, if the department finds out that some income has been missed out by an assessee, it goes through a lengthy process of adjudication. Instead, with this proposal now, there will be a trust repost in the taxpayers that will enable the assessee herself to declare the income that she may have missed out earlier while filing her return. Full details of the proposal are given in the finance bill. It is an affirmative step in the direction of voluntary compliance. Reduced alternative minimum tax rate and surcharge for cooperatives. Currently, cooperative societies are required to pay alternate minimum tax at the rate of 18 and 1.5%. However, companies pay the same rate, the same, which is the alternate minimum tax, at the rate of 15%. To provide a level playing field between cooperative societies and companies, I propose to reduce this rate for the cooperative societies also to 15%. Honorable Speaker, sir, I also propose to reduce the surcharge on cooperative societies from the present 12% to 7% for those having total income of more than 1 crore and up to 10 crores. This would help in enhancing income of cooperative societies and its members who are mostly from the rural and from farming communities. Tax relief to persons with disability. The parent or guardian of a differently abled person can take an insurance scheme for such person. The present law provides for deduction to the parent or guardian only if the lump sum payment or annuity is available to the differently abled person on the death of the subscriber, that is the parent or the guardian. There could be situations where the differently abled dependent may need payment of annuity or lump sum amount even during the lifetime of their parent or guardian. I propose thus to allow the payment of annuity and lump sum amount to the differently abled dependent during the lifetime of the parent and guardians, that is parent or guardians, attaining the age of 60 years. Parity between employees of the state and central governments. At present, the central government contributes 14% of the salary of its employee to the National Pension System, NPS, Tier 1. This is allowed as a deduction in computing the income of the employee. However, such deduction is allowed only to the extent of 10% of the salary in case of employees of the state governments. To provide equal treatment to both central and state government employees, I propose to increase the tax deduction limit from 10% to 14% on employers' contribution to the MPS account of state government employees as well. This would help in enhancing the social security benefits of the state government employees and bring them at par with central government employees. Incentives for startups. Startups have emerged as drivers of growth for our economy. Over the past few years, the country has seen a manifold increase in successful startups. Eligible startups established before 31/3/2022 had been provided a tax incentive for 3 consecutive years out of the 10 years from incorporation. In view of the COVID pandemic, I propose to extend the period of incorporation of the eligible startup by 1 more year, that is up to 31/3/2023, for providing such tax incentives. Incentives for newly incorporated manufacturing entities under concessional tax regime. In an effort to establish a global competitive business environment for certain domestic companies, a concessional tax regime of 15% was introduced by our government for newly incorporated domestic manufacturing companies. I propose to extend the last date for commencement of manufacturing or production under Section 115B AB by 1 more year, that is from 31st March 2023 to 31st March 2024. Scheme for taxation of virtual digital assets. There has been a phenomenal increase in transaction in virtual digital assets. The magnitude and frequency of these transactions have made it imperative to provide for a specific tax regime. Accordingly, for the taxation of virtual digital assets, I propose to provide that any income from transfer of any virtual digital asset shall be taxed at the rate of 30%, 30%. No deduction in respect of any expenditure or allowance shall be allowed while computing such income except cost of acquisition. Further, loss from transfer of virtual digital asset cannot be set off against any other income. Further, in order to capture the transaction details, I also propose to provide for TDS on payment made in relation to transfer of virtual digital asset at the rate of 1% of such consideration above a monetary threshold. Gift of virtual digital asset is also proposed to be taxed in the hands of the recipient. Litigation management to avoid repetitive appeals by the department. It has been observed that a lot of time and resources are consumed in filing of appeals which involve identical issues. Taking forward our policy of sound litigation management, I propose to provide that if a question of law in the case of an assessee is identical to a question of law which is pending in the appeal before a jurisdictional high court or Supreme Court, in any case, the filing of further appeal in the case of this assessee by the department shall be deferred till such a question of law is decided by the jurisdictional high court or the Supreme Court. This will greatly help in reducing the repeated litigation between taxpayer and the department. Taking forward our efforts to further promote the IFSC, I hereby propose to provide that income of a non-resident from offshore derivative instruments or over-the-counter derivatives issued by an offshore banking unit, income from royalty and interest on account of lease of ship, and income received from portfolio management services in IFSC shall be exempt from tax subject to specified conditions. Rationalization of surcharge. In the globalized business world, there are several work contracts whose terms and conditions mandatorily require formation of a consortium. The members in the consortium are generally companies. In such cases, the income of these AOPs has to suffer a graded surcharge up to 37%, which is a lot more than surcharge on the individual companies. Accordingly, I propose to cap the surcharge of these AOPs at 15%, 15%. Further, the long-term capital gains on listed equity shares, units, etc., are liable to maximum surcharge of 15%, while other long-term capital gains are subjected to a graded surcharge, which goes up to 37%. I propose to cap the surcharge on long-term capital gains arising on transfer of any type of assets at 15%. This step will give a boost to startup community, and along with my proposal on the extended tax benefits to manufacturing companies and startups, reaffirms our commitment to Atmanirbhar Bharat. Clarification in relation to health and education cess as business expenditure. The income tax is not an allowable expenditure for computation of business income. This includes tax as well as surcharges. The health and education cess is imposed as an additional surcharge by programs. However, some courts have allowed health and education cess as business expenditure, which is against the legislative intent. To reiterate the legislative intent, I propose to clarify that any surcharge or cess on income and profits is not allowable as business expenditure. Deterrence against tax evasion. Honorable Speaker, sir, presently there is ambiguity regarding set-off of brought forward loss against undisclosed income detected in search operations. It has been observed that in many cases where undisclosed income or suppression of sales, etc., is detected, payment of tax is avoided by setting off of losses. In order to bring certainty and to increase deterrence among tax evaders, I propose to provide that no set-off of any loss shall be allowed against undisclosed income detected during search and survey operations. It has been noticed that as a business promotion strategy, there is a tendency on businesses to pass on benefits to their agents. Such benefits are taxable in the hands of the agents. In order to track such transactions, I propose to provide for tax deduction by the person giving benefits if the aggregate value of such benefits exceeds 20,000 rupees during the financial year. A few other changes are being made, the details of which are there in the finance bill. Indirect taxes. So remarkable progress in GST. GST has been a landmark reform of independent India, showcasing the spirit of cooperative federalism. While aspirations were high, there were huge challenges too. These challenges were overcome deftly and painstakingly under the guidance and the oversight of the GST Council. We can now take pride in a fully IT-driven and progressive GST regime that has fulfilled the cherished dream of India as one market, one tax. There are still some challenges remaining, and we aspire to meet them in the coming year. The right balance between facilitation and enforcement has engendered significantly better compliance, and enforcement has engendered better compliance. GST revenues are buoyant despite the pandemic. I would bring in something which I've got to know this morning, not part of my speech, but worth putting in here for the knowledge of the Honorable House. I would like to bring to the notice of this House. I would like to bring to the notice of this House that the gross GST collections for the month of January 22 are rupees 1,40,986 crores, which is the highest since the inception of GST. This has been possible due to rapid economic growth, recovery, Post-COVID, this has been possible due to the rapid economic recovery post-COVID, as well as various policy and administration undertaken by central and state tax administrations. Taxpayers deserve applause for this growth. Not only did they adapt to the changes, but enthusiastically contributed to the cost of paying taxes. Special economic zones. In part A of my speech, I have referred to the proposed reforms in SEZs. Alongside, we will also undertake reforms in customs administration of SEZs, and it shall henceforth be fully IT-driven and function on the customs national portal with a focus on higher facilitation and with only risk-based checks. This will ease doing business by SEZ units considerably. This reform shall be implemented by 30th September 2022. Customs reforms and duty rate changes. Customs administration has reinvented itself over the years through liberalized procedures and infusion of technology. Faceless customs has been fully established. During COVID-19 pandemic, customs formation have done exceptional frontline work against all odds, displaying agility and purpose. Customs reforms have played a very vital role in domestic capacity creation, providing level playing field to our MSMEs, easing the raw material supply side constraints, enhancing ease of doing business, and being an enabler to other policy initiatives such as PLI and phased manufacturing plans. My proposal on customs side are aligned to these objectives. Project imports and capital goods, doubling the production of capital goods by 2025. This would create an employment opportunities and result in increased economic activity. However, several duty exemptions, even extending to over 3 decades, in some cases have been granted to capital goods for various sectors like power, fertilizer, textiles, leather footwear, food processing, and fertilizers. These exemptions have hindered the growth of the domestic capital goods sector. Similarly, project import duty concessions have also deprived the local producers of a level playing field in areas like coal mining projects, power generation, transmission, or distribution projects, railway and metro projects. Our experience suggests that reasonable tariffs are conducive to the growth of domestic industry and make in India without significantly impacting the cost of essential imports. Accordingly, Honorable Speaker, sir, it is proposed to phase out the concessional rates in capital goods and project imports gradually and apply a moderate tariff of 7.5%. Certain exemptions for advanced machineries that are not manufactured within the country shall continue. A few exemptions are being introduced on inputs like specialized castings, ball screw, and linear motion guide to encourage domestic manufacturing of capital goods. In the last 2 budgets, we have rationalized several customs exemptions. We have once again carried out an extensive consultation, including by crowdsourcing. As a result of these consultations, more than 350 exemption entries are proposed to be gradually phased out. These include exemptions on certain agricultural produce, chemicals, fabrics, medical devices, and drugs, and medicines for which sufficient domestic capacity exists. Further, as a simplification measure, several concessional rates are being incorporated in the customs tariff schedule itself instead of prescribing them through various notifications. This comprehensive review will simplify the customs rate and tariff structure, particularly for sectors like chemicals, textiles, and metals, and minimize disputes. Removal of exemption on items which are or can be manufactured in India and providing concessional duties on raw material that go into manufacturing of intermediate products will go many a step forward in achieving our objective of Make in India and Atmanirbhar Bharat. I shall now take up specific sector-specific proposals. Electronics. Electronic manufacturing has been growing rapidly. Customs duty rates are being calibrated to provide a graded rate structure to facilitate domestic manufacturing of wearable devices, hearable devices, and electronic smart meters. Duty concessions are being given to parts of transformer of mobile phone chargers and camera lens of mobile camera module and certain other such items. This will enable domestic manufacturing of high growth electronic items. Gems and jewelry. To give a boost to the gems and jewelry sector, customs duty on cut and polished diamonds and gemstones is being reduced to 5%. Simply sawn diamond would attract nil customs duty. To facilitate export of jewelry through e-commerce, a simplified regulatory framework shall be implemented by June this year. To disincentivize import of undervalued imitation jewelry, the customs duty on imitation jewelry is being prescribed in a manner that a duty of at least 400 rupees per kg is paid on its import. Chemicals. Customs duty on certain critical chemicals, namely methanol, acetic acid, and heavy feedstocks for petroleum refining are being reduced, while duty is being raised on sodium cyanide, for which adequate capacity in the domestic arena exists. These changes will help in enhancing domestic value addition. MSMEs. Duty on umbrellas is being raised to 20%. Exemption to parts of umbrellas is being withdrawn. Exemption is also being rationalized on implements and tools for agricultural sector which are manufactured in India. Customs duty exemption given to steel scrap last year is being extended for another year to provide relief to MSME secondary steel producers. Certain anti-dumping and CVD on stainless steel and coated steel flat products, bars of alloy steel, and high-speed steel are being revoked in larger public interest considering prevailing high prices of metals. To incentivize exports, exemptions are being provided on items such as embellishment, trimmings, fasteners, buttons, zipper, lining material, specified leather, furniture fittings, and packaging boxes that may be needed by bona fide exporters of handicrafts, textiles, leather garments, leather footwear, and other goods. Honorable Speaker, sir, duty is being reduced on certain inputs required for shrimp aquaculture so as to promote its exports. Tariff measure to encourage blending of fuel. Blending of fuel is a priority for this government. To encourage the efforts for blending of fuel, unblended fuel shall attract an additional differential excise duty of rupees 2 per litre from first day of October 22. A few other changes are being made in duty rates, customs tariff and customs law, the details of which are there in the finance bill. Mr. Speaker, sir, with these words, I commend the budget to this august House. Thank you.
Item number 2, Srimati Nirmala Sitharaman ji.
Sir, with your permission, I rise to lay on the table the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management FRBM Act 2003. Medium-term fiscal policy cum fiscal policy strategy statement. and macroeconomic framework statement.
आइटम नंबर 3 वित्त
Sorry.
विधेयक 2020 निर्मला सीतारमण जी.
Sir, item number 3, Finance Bill. Sir, with your permission, I rise to move for leave to introduce the Finance Bill 2022.
प्रश्न ये कि वित्त विधेयक को प्रस्तावित करने की अनुमति प्रदान की जाए. जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें. मेरे विचार में निर्णय हाँ वालों के पक्ष में, हाँ वालों के पक्ष में. माननीय मंत्री जी वित्त विधेयक को प्रस्तावित करें.
Sir, I introduce the bill.
सभा की कार्रवाई कल बुधवार दिनांक 2 फरवरी 2022 को 4:30 बजे तक के लिए स्थगित की जाती है.
मैं उधर का करता हूँ. जी आ जाना. लाइट्स वगैरह बोलो ऑन एयर. आप रेडी हो? दिख रहा है आपको स्क्रीन?
Okay, welcome back. This was a short one as union budget speeches go. We usually expect it to go till about 1 o'clock, but this was a far shorter version of the finance minister's speech. The big headline numbers first: revised fiscal deficit for the current year 21-22 at 6.9%. The fiscal deficit target for 22-23 at 6.4%. I would say that's a little bit higher, I think, than what most economy watchers were penciling in. Importantly, no real detail or meat in terms of what comes through on the glide path, but she reasserted what she said last year in terms of the fact that the plan is to get to a figure of around 4.5% in the 25 year. That's what the fiscal deficit was. There was also an announcement in terms of capex spend. Outlay for capex has been increased by about 35% to 7.5 lakh crores. So the estimated spend actually comes at about 10.7 lakh crores capex spend. And really, I think the takeaway in terms of what the budget seemed to be doing was some focus on hard infrastructure, so spend on capex. A lot of focus on digital. There is a new drone policy, etc., that's come in. But conspicuous by its absence was any detail in terms of welfare schemes and whether outlays over there had been increased, whether it was on Narega or indeed on any other missions. There is news coming in for a very, very small subset, but a deeply interested one, I imagine, which is the crypto universe. First of all, there's a currency coming in. I don't think there's enough modalities in place for that to get swung into right away, but the road has been cleared for the Reserve Bank to come out with a fiat currency, a digital rupee. And all transactions, all virtual transactions will now be taxed at 30%. Some questions do remain on the dynamics of this, but no crypto bill. We have details on taxes, which is 30% for crypto trading or any virtual transaction, really. No changes in terms of tax slabs. Tariffs have been introduced on capital goods. Expenditure and receipts information also shared. An indication that not enough was being done on climate action, but I didn't hear too many details on that. Some thrust towards housing projects. 48,000 crores has been allotted for the PM housing scheme. There was the mention of several schemes covering women as well, but again, not enough details over there. On divestment and disinvestment, which the market may have been watching for, an indication that the LIC IPO is expected shortly. That would be a given, I would think, considering the fact that it was penciled in for last year. I didn't hear any word on BPCL or the banks that were also being considered at this point. And there was also an indication that LTCG, long-term capital gains tax for those who invest in stocks, has been capped at 15%. The market was quite buoyant and still is, actually, to be fair to it. It's come off just a little bit at 1.3%. I think there's a little bit of no harm done. Maybe the market was nervous about what might come through in terms of a very poor, very pro elections budget, where there was a lot being done in terms of populist measures. I did not hear much of that, and neither has there anything been announced that seems to be quite debilitating or negative for the market itself. But I've got a couple of guests joining in. Let me quickly go across to them. Vivek, on Twitter, you've given it 12.5. Here's your chance to up your number or give me your real deal on the budget.
That was just it was just a joke. I was just trying to stay awake through the whole budget speech. When you have seen so many of them over the years, it just becomes very mind-numbing beyond a point.
Is it your 17th or your 18th?
I don't know. It's 17th. 17th, not my 18th. So,
yeah.
So I was just bored. So anyway, I think when it comes to the budget speech, very few details were put out, and a lot of what was put out, honestly, has nothing to do with the budget. Drone policy has nothing to do with the budget. The central bank introducing a digital currency really has nothing to do with the budget. So one would have expected to get some details of at least the LIC IPO, the allocation under Nariga, and a whole host of other things. So I really don't know. I just kept hearing the word drone and digital and these words over and over again. So very again, limited to what one has just heard, very short on details. So
Yeah, were you surprised, Vivek? I thought it was. In previous budgets, you do hear a little bit in terms of more of the spend intent on schemes like Nareka, etc. It was actually completely missing. I may have missed it, but I did not recall hearing a single line
no,
about
you
it.
didn't miss it. If she had mentioned it, one would have heard it. So there was no mention of Nariga at all. There was no mention of, in fact, even other than discussing the fiscal deficit, the usual details that one expects in a budget as to how much has the gross tax revenue, how much is it expected to go up, and what are the numbers for the next year, and nothing of that sort was there. So.
Professor Himanshu joins in as well from JNU. We've got a couple of other faces too from the Mint gang itself. Professor Himanshu, thank you for joining in. Your initial thoughts on what you heard today in the speech? You're on mute, sir.
Yes.
No, I still can't hear you. We're going to try and sort it out. In the meanwhile, let me hop across to Arish. Arish, Vivek and I, are we being uncharitable? What did you make of the budget speech?
See, this was Mitali. This was the first full post-pandemic budget in that sense. My worry about it is that it seems to be a little bit too post-pandemic, in the sense that 7.5 trillion of capex is a big jump, and the thrust is pretty much what it was from the last budget. But the impact of this on immediate demand, for example, or consumption in the country, is questionable. It counts as a stimulus to some extent to support the economy, but I'm not very sure if this can actually do what might be needed at this juncture, given that our recovery has been uneven. We have a K-shaped recovery, essentially, for which, if there's supposed to be fiscal support, I would assume that there has to be spreading out of this support to a larger extent in ways that could immediately support demand in some sense. We are banking on a recovery this year in private investment, for example, right? And that requires all engines to start firing, right? Even if we expect 8.5% growth, which is what seems to be the estimate in this budget, we would need a broader base for a recovery than what we are witnessing so far.
Yeah.
Right?
Arish,
Does this budget allow for that? I'm not entirely sure. That's my. But otherwise, yes, big money. Yes, the supply-oriented reforms, all good, and various measures which are positive. Yes.
Arish, what happened to the national infrastructure pipeline? I mean, when you set out this capex, is this part of the national infrastructure pipeline? Is this a separate spend? Last time there was also talk of some kind of funding institute to be set up. I didn't hear any details on that.
Yeah, Mitali, there's always been a problem in terms of figuring out exactly what is part of what, right? We have big numbers thrown out for, the national infrastructure pipeline, asset monetization, etc., so on and so forth. But when the budget comes, it's not very clear of how much of this is basically part of that. Right, so we don't quite know. Those details are a bit sketchy. Yeah, we'll have to possibly look at the papers and figure out what happens there.
Pooja Mehra, columnist at Mint, also joining in. We'll go to Professor Himanshu as well in a bit. Pooja, hi. We're struggling to kind of find where to place this budget in terms of what we heard or didn't hear. What did you make of it? And was there a headline in it for you?
Hi, Mitali. I thought it is a budget that was aspirational and futuristic, but also regressive. I thought it was a budget that, as expected, gave capital spending the push, but just let me before I start saying budget, it's a good budget speech. I don't know if it's a good budget, because the budget is in the numbers, and I've not had opportunity yet to read the numbers. So the speech sounds very futuristic with mentions of urban development, taking care of the plans for urbanization, capital expenditure, which is going to have results only, sometime later, the increased expenditure on the increased capital spending. Artificial intelligence, some attempt to address the digital divide, all that sounds very nice, futuristic, forward-looking. But I'm afraid, what has been done for the moment, because this is a budget for this year where large section of small companies and small income households are really suffering because no budget support or stimulus, or insufficient budget support and stimulus has reached them, and they really have no recourse. Their resilience is wearing, and I'm not sure, from this, just by listening to the speech, if there's anything for them in the immediate term from this budget. If the numbers show that there is a substantial increase in some sort of spending, income support, then that'll be good. But my suspicion is that if there was something like that, a finance minister will announce it in the budget. And I think the
Yeah.
tragedy is that there was fiscal space for doing something like that. There was scope for it. I'm afraid that, my worry is that the finance minister has chosen to use that extra revenue that she has managed to raise from taxes this year on dividing it between capital expenditure and perhaps sticking to the fiscal deficit pathway, which staying with the fiscal deficit glide path that she announced last year is a good thing. But I thought there was scope for her to increase support for very small firms, direct support. They need it for low-income households. I didn't see anything in the budget that she has done on those heads. But other than that, it sounds very nice when she talks about a green economy, circular economy. Those are very nice sounding things, and it makes it look like a budget in a modern economy. I don't know what people who are really suffering, what they have received. I'll need to look at the details for that.
Yeah, and I think in the past as well, support has been more in the form of liquidity rather than direct fiscal support. So I didn't hear any more details on that or any change in strategy. Professor Himanshu, welcome. I hope you can hear me now. Your initial thoughts, hi, your initial thoughts on what you heard just a couple of minutes back.
I mean, honestly, I'm a little bit disappointed. Disappointed in the sense the way the budget has been presented. Budget is all about numbers. It is not a political speech in the sense you're going in a political rally or you're going to do something. And without numbers, a budget is meaningless. The one thing which I saw missing from this speech, I mean, that's the only thing that I have access to, is that there were no numbers. And numbers, when I mean, I'm not talking about only the broad numbers of the budget deficit and other things, but essentially the numbers, the breakdowns, in the sense how much you are going to spend on various schemes, in various heads, in various ways that are going to revive the economy. Those numbers were not coming out clearly. And that was something which I was very much disappointed. I mean, at least the basic numbers, which have been, I think Vivek has already talked about, but this is something which is there. The basic numbers, I mean, on NREG, or when Pooja was talking about what does it actually mean in terms of people who have been suffering from the pandemic, or people who have been lost jobs, or there is so much of talk about unemployment and other things that is going on. Those are missing, and that's something which is there, which was one big disappointment that was there. The second, I think, which I would have liked more, is that given the context of the unemployment and the agrarian crisis and all of this that is playing up, inflation that is going to be at least going to be an issue in the short run, if not in the medium run and the long run, I would have liked at least in terms of what is the plan, in the sense some kind of either an increase in disposable income of the people, or there is some kind of a way of giving some kind of concession, or in terms of what is going to happen to the petroleum taxes on petrol and diesel, which we all know is going to get increased on 8th of March, which is when the last elections is going to happen. So I think on all of these issues, the budget was very much silent. And it was more of a political speech. So very difficult to say anything on what does it mean for future, what does it mean for common people, what does it mean for the rural areas, what does it mean for the agriculture sector. I mean, all of these issues are as much, I mean, if the budget was not there, I would have been as much knowledgeable as I was, say, yesterday or right now.
Sure. No, I hear you. And I think that might sort of constitute a big disappointment. The fact that there is a raging unemployment crisis was not even considered. We unfortunately do not have government numbers, but even if you go by CMI figures, 19 crore jobs are needed. I'm not sure what the plan is. I'm not saying that the budget is the solution for it, but at least some kind of intent to take on that problem. Vivek, just a word on the markets that I was talking about. Any damage done there? There were some fears about LTCG, but she seemed to indicate that it's been capped at 15%. And also on crypto, there's a 30% tax now. Vivek, you're on mute.
Before I answer.
Okay,
sorry. Okay. So, I don't even think this was a political speech. It was basically, from the way I understood it, it was essentially a startup pitch to a venture capitalist. That is how it, there were no numbers, there's only vision. And this is how we'll scale, right? So so that is how I look at it. Because if it was a political speech, they would have at least talked about, we are doing this. This is the amount of money we are spending. So all that was missing. The second thing, now that I've thought about this for a few minutes, is that this again, in the pre-budget show, I'd said that the first step towards solving a problem is recognizing that it exists, and our problem right now is that consumer demand from large sections of the society isn't coming in because they are in a bad shape. But we try to solve this. We have been trying to solve this problem from the supply side, and which is what we continue to do. So these are the 2 points I wanted to make. Now, talking about the stock market, I think the problem is that the market goes up and down, and we then go looking for reasons for it. Now, the market might have gone up today just because the Dow Jones Industrial Average went up yesterday, and over the years, if you track the movement of the Sensex with the movement of the Dow, you will see that the correlation is very, very high. So we might, think of our own reasons, but for all we know, the market's going up because the Dow went up yesterday. As far as the taxation on crypto is concerned, I think that's a good move. It was money waiting to be earned, and the fact that they didn't do anything about it for a couple of years was quite surprising, because any government, the moment it gets an opportunity to tax, comes in pretty quickly. So this is one would want to say der aaye durust aaye, but kam se kam aaye to, that's what one can say.
Yeah, I guess we're still waiting on details of the bill itself, but the taxes are here. Let me hop across to the newsroom and get some details from there as well on the budget. A short one this time round. If Alicia's at the newsroom and ready with her crew, I can hop across to her now. Alicia.
Well, thanks, Mitali. Again, Utpal is with me here, and there's a bunch of mint stories, in fact, that were confirmed while the Finance Minister, was delivering her speech in the Parliament. Aggressive capex targets. We have seen, a lot of emphasis on infra spending, a green transition push as well. So, Utpal, a bunch of stories, like I just said, that we at Mint also have reported. So, what's your assessment of, what the budget was like, and if you could just highlight the key announcements for us?
In fact, obviously, there's a huge push for capex, and given some of the stories that we were tracking it, and that's what the finance minister announced in a speech as well. In fact, apart from the obvious which is out there is a huge imprint of green on this budget. So if you look at, say, some of the announcement that she did about, say, the battery swapping policy, she talked about stubble burning. In fact, please, the viewers might also would like to remember that at COP26, the Prime Minister went ahead and made a lot of announcements, starting from zero carbon emission to reducing our carbon emissions
by a billion tons.
By a billion tons, also reducing our energy independence, energy intensity of the economy as well. So, for example, some of the announcements are absolutely in sync with what has been talked about there. Also, large storage projects, large battery storage projects being pushed. Also, there has been a rejig on the electronic manufacturing variables and stuff. So it's not a, if you look at the overall the imprint of it, there is this huge push for green energy transition, and India as one of the large major economies, this absolutely will have a reverberation not only internally but also on the international stage as well, given that how this will impact our energy sourcing. And also it's if you look at the basic blocks of infra, more or less have been all catered to. However, not much for the middle class, and as we all saw, and but looks like an interesting budget from where we see. Also, given that a significant number of her stories have been announced. So I'm very happy being a reporter that I am. Thank you.
Yeah, Utpal. So just a broad list of hits and misses, so to say. The green energy push, of course, was very evident. We saw an announcement on a battery swapping policy. Not many players are doing this right now in the country. Credit availability in the space was an issue which has been fairly comprehensively addressed. Infrastructure itself, whether it's highway expansion, manufacturing new trains, all of that is there in the budget. You said the middle class perhaps wouldn't be very happy with what's directly announced for them. So if you were to, perhaps list out expectations versus what's been delivered, what would you say? How would you say the budget has fared?
It's while they are the economists might argue, from where I look at it, there is not much that she could have done, and overall, it doesn't look like a bad budget at all to me. So yeah.
Well, that's our assessment, preliminary assessment from the newsroom, Mitali. So back to you in the studio and the panelists for now.
Okay, Alicia, thank you for that. Good to see some of the stories from Mint have been confirmed. I'm still looking for more detail and context in this budget. Pooja, let me ask you on this point that was raised about CapEx and the fact that the FM laid out, a hefty target over there. So where does this sink in with the NIP? I mean, is this part of the ongoing NIP? Is this separate? There was no mention of the DFI that was talked about the last time. Do we put, is that now a separate category or is it an ongoing category? Pooja, checking if you can hear me. No, I don't think she can. Professor Himanshu, maybe I can, lob the same question at you because this is what intrigues me, right? The big announcement in the last budget was the fact that there's an NIP set up and that there will now be a DFI to support that. So when you're talking about this CapEx, is it, are you just reiterating what you've set out as a longer 5-10 year plan, or is this something fresh? You're on mute, sir.
Hi, Mitali, can you hear me?
I can, Pooja.
Okay.
Professor Himanshu, there's still an audio problem with you, sir. So let me get Pooja's answer and then I'll come back to you. Pooja, please go ahead. I don't know if you heard my question.
Yeah, could you say that again, please? Because I lost the connection midway, and in fact, I can't see you, but I can hear you.
Okay. The question I was asking was with regards to that CapEx target that you talked about, that the FM set out. Do you have a sense of whether this is part of her ongoing NIP plan that she laid out the last time? Or do you think this is a whole new category that has been announced?
Mitali, I suspect that the target would be everything, anything new that there would be anything new she would have announced in this speech for sure. So all the new things, new initiatives that she has announced, plus everything ongoing, because that's how the number adds up. That's how the aggregate is so big. So I'm quite sure it includes everything, ongoing and new initiatives, and what was announced previously and is awaiting implementation.
Yeah. Professor Himanshu, you want to give it a go now? Let's see if your audio is working.
Yeah. I think. I mean, in the absence of numbers, we are all in the dark. So whatever we are going to say is going to be about is kind of guesswork. I'm Pooja in that sense that the number that announced as part of the is quite a big number, and I think it is also going to be incremental. So anything that is going to be announced in this one is going to be part of that one. I don't think it is something which is additional over and above what has already been announced in that sense. Unless I see the numbers and I get the details, very difficult to say all of these things. But I somehow feel that the announcements, in a sense, unless, I mean, I may be wrong in that sense, but if it were really a new announcement or something which is a big bang kind of a thing, I think the finance minister would have gone to the town on that. And I don't see that happening. It basically means that either that's also something which is there with the other ones. For example, the fact that she did not announce anything or did not mention the numbers on NREGA or other things, that may be a ploy simply because when the final numbers do come out, we'll actually see a reduction in expenditure rather than an increase in expenditure. Even if it was a 10 crore expenditure increase, I'm sure this government would have gone to the town saying that, look, we have done so much, we have increased it, we have done so much of it. So I don't think the government is shying away from taking credit of this. So the fact that they're not going to the town on that, from that I can infer that these are not new ones. These are not the ones which are going to add to the kitty rather than a continuation of what has already been planned. And the same thing goes with the other expenditures which have not been announced. And if that is the case, which is what we'll get to see the numbers and we'll figure out, then it is really a bad budget in the sense, both in terms of boosting consumption, which is what Vivek was talking about, but even in terms of their own stated objective of boosting capex and increasing the capital expenditure by through the public's through the government. And I think if both of the engines are not firing, we are really going to get into a big trouble sooner or later. We are already there, but I think it is going to get into a worse situation than what we are currently in.
Yeah, no, I hear you. To be honest, yeah, I can't recall being this befuddled after a budget in terms of, what the big takeaway is. But maybe I'll turn to more of the experts. Suranjali Tandon of NIPFP joins in. Suranjali, what did you make of the budget? We're trying to figure out what the big takeaway is over here. Do you have one?
Yeah, Mitali, I think there are a couple of takeaways. One is that there is more push towards public-private partnership. There seems to be a lot of hand-holding of the private sector into the infrastructure sector, logistics. The other thing is that there were a lot of discussions on the laws that are to come. So, for example, the IBC or the SEZ. So there's also talk about that. I think what was promising was that after the announcement at COP26, there's been some discussion of how the years ahead are going to pan out. So green transition was spoken of. There's also mention of issuance of sovereign green bonds, which I think needs to be looked at in more detail, whether this is part of the plan, as in what is budgeted for, or are we going to look at additionalities to that. And I think the big miss, of course, has already been mentioned, is the employment guarantee scheme. In terms of tax, I think the big takeaway is that this is not the time to change things. While there was a lot of discussion of stepping up, tax rates to finance social spending, that's been left out of the mix. And I guess pragmatically so, because the impact on different sections of the society are still not clearly known to us. So I guess those are my key takeaways from this budget announcement.
Thanks for that. Just for reference, in the financial year 21-22, the government allocated 73,000 crores to NREGA. There was an inclusion of additional funds amounting to 25,000 via supplementary budgets. The allocation was still 12% less than the previous year's revised estimates. Vivek, you have more details on this? You're on mute.
Okay. I just checked the expenditure numbers, and the current year's NREGA allocation has been, as you said, increased from 73,000 crore to 98,000 crore. But the next year's allocation continues to be at 73,000 crores. So that is why it wasn't mentioned in the speech. One can figure that out. Yeah. So.
Are you serious? It's a 25,000 crore cut down, and then there's the fact that it's also 12% lesser than the previous year.
Yeah. Yes, it's 98,000 crore this year and 73,000 crore next year. It says that very, very clearly.
Okay.
Can I just add to that?
Please, I both of you want to add to that. Pooja, let me start with you, and then I'll go to Professor Himanshu. Yes, please, Pooja.
I'm all right if with NREGA not getting an additional allocation at this point, because it's a demand-based scheme. So, and they always come up with additional supplementary demand, and that number those funds always get passed in Parliament. So NREGA is not the big worry. I think the bigger worry is that, as also explained in the economic survey, that the government is sort of waiting for some sort of feedback to present itself for them to decide what to do about the demand side, and to respond to the large-scale distress in the that part of the economy that has not had much stimulus to support so far, that is suffering a lot. Sometimes these parts of the economy have no ability to make themselves heard or send that feedback to the government. So, my question to the finance ministry is that what have they done to go and assess the kind of distress that there is? Or are they just waiting for this feedback? And because they haven't received this feedback, therefore they've not responded to it. NREGA is there, and it will get funds, depending on demand, hopefully. That is not even what I was looking for. I was looking for something more specific, which would respond to the kind of pain that people are suffering right now. That is my, I worry that is probably missing, because it would have been announced in the speech if it was there.
Yeah, no, I hear you, Pooja. My only concern about this is the fact that when you don't even acknowledge that there is a problem and you're not allocating for it, of course you can catch up later. But the point is that you seem
I
oblivious
wanted
to
to
the
say on
situation.
that.
Yeah.
I wanted to say on that, again, reading, although the minister mentioned, demand, she didn't elaborate, she mentioned demand, but the survey yesterday seems to be in a bit of a denial about the demand side issues, and they seem to suggest that the economy's problems is only from the supply side. There's absolutely no acknowledgement of the fact that people are suffering economic hardship, because of which their incomes have suffered, and that loss of income is going to result in a loss of demand. That link between the real economy and their analysis of what's going wrong, what they need to respond to, is completely absent. And I'd like to know if it's absent because of ideological reasons, or if it's absent because there's a complete breakdown of flow of information from the real economy to the analysts in the finance ministry and people who convert that analysis into policy. Because they're just waiting to be told that I lost my income and I need some support. Sometimes people can't do that.
Sure. Professor Manchu, you wanted to add to that?
No, I just wanted to add to, I think Pooja has made it very clear, and this is something which was very clear in the economic survey that came out last year, that there is a grand denial that is going on, not acknowledging the demand problem. And a large part of that seems to be ideological. This is something which is going on for the last 3 years, at least the last 3 years. Since the issue of demand being a big issue of why the economy went into a deceleration in the first place, the big slowdown. I mean, the revised numbers point out that 2019-20 growth was only 3.7%. I mean, one of the lowest in the last 20 years. So we had it even before the pandemic. And after the pandemic, the demand situation has actually worsened over a period of time. And at this point of time, if we are simply denying the existence of a demand problem, then I think it's more of an ideological. It can't be simply the fact that you don't have any feedback mechanism from the ground. This is a government running on the ground, which has its networks down to the lowest booth. And I wouldn't take the ground that they don't have any feedback mechanism in that sense. So it's more of an ideological one. And I wouldn't have been all right had it been only the fact that, okay, you don't recognize this. But if you look at the numbers, this is the number that Vivek was talking about, and the NREGA numbers are really shocking. I must tell you that it is a demand-based one, and you keep on providing numbers as it goes on. But remember that this year, the current 21-22, when it was almost 1 lakh crore, that was 1,10,000 crore, which was given to NREGA in different forms, including the backlog in that sense. Most of the state governments have actually run out of the money for NREGA by October. That's the situation that we have. So even that number was found to be insufficient. And if you're basically saying that next year it is going to be only 73,000 crores, then you are going into not just a denial, but in a completely reversal of the entire. And I think the second, which is what number which actually I should be highlighting, is this is an attitude that is come out, and this is something which was brought out last year in the economic survey yesterday, is about the approach to the subsidies. Look at the fertilizer subsidy numbers. Yes, you need to rationalize those subsidies, bring down those subsidies, all of these issues are taken. But this is not the right time. At this point of time, when the petroleum prices are on a boil, fertilizer prices have gone through the roof. At this point of time, when agriculture sector is in a crisis, reducing fertilizer subsidy from the revised estimates is not the best way to deal with the problem, the crisis in the agriculture sector. You could have had taken a longer term plan, maybe a 2-year plan, 3-year plan, or maybe a 10-year plan. I'm not saying that, but not this time. Anything at this point of time you're doing has to be more sensitive to the ground realities than your ideological biases, whatever they may be. So I would say that at least that's why the numbers seem to be appearing much more scarier than what appeared to be in the budget speech, which is more benign and more of a kind of a visionary, more good sounding, good kind of a structure. So I will have to look at the number carefully, but I'm not so happy with the numbers that I've seen or glanced at it.
Okay,
Recently.
there's
I mean,
just
at
a
least
couple of other, sure, there's a couple of other important numbers coming through. So I just want to run them by our audience. The fact that corporate tax targets have been set at 7.2 lakh crores versus 3.65 lakh crores. Divestment seems to have been scaled down considerably. So the finance minister's divestment target for the current year is 65,000 crores. That is quite a markdown from, what she's been penciling in the past 2 years. Of course, there is the reality remains that not even a small percentage of that was met. But this time round, the divestment target is a far more sedate 65,000. The gross market borrowing target has been set at 14.95 lakh crores. I think this is lower than what people were estimating. So I'd be keen to see how the bond market reacts to that figure. But for now, market borrowing has been set at 14.95 lakh crores. Let me head across to another one of our guests joining in, Rajesh Gandhi from Deloitte. Rajesh, hi. Your quick take on the numbers. Personal taxes, of course, remain the same, but there seems to be a little bit of rejigging that happened with duties.
Right. So yeah, thank you and good afternoon to you and to all the listeners. I kind of resonate with what has been discussed so far. If you look at, talking about numbers, if you look at the direct tax collections, they have increased by 15% to 19%, both individuals and corporates. So one would have expected some more dole-outs to the taxpayers. Of course, there have been some relief which were given as demanded by the industry. For example, new manufacturing companies, startup companies, there was an expectation to increase the incentive period by a few years, considering the PLI schemes have been recently announced. But I think there the extension has only been a very limited 1-year extension. So I think that doesn't help. While it is a good welcome thing, but I think it doesn't help to plan properly where you extend, especially for manufacturing, extend only by a year or so. So I think that probably should have been done at least 2 to 3 years. Crypto, yes, there was a lot of expectation from the market that there will be a tax on crypto. I would feel a little bit harsher to what the industry would have expected, 30% tax without any benefit of deduction for expenses except for your cost, no loss offsets, given which people would have expected that at least your other income on derivatives, etc., could be offset against the crypto gains. Similarly, there'll be a TDS on crypto, though it's at 1%. So a little bit harsh than what people might have expected on crypto, and we'll have to see how much compliance is affected because of that. Gift, there was, as expected, there were some interesting further dole-outs for the gift city, for banking units, for leasing of shipping, etc., which were given, and also for portfolio management services where the income was completely exempt. We need to see if this prompts some of the P-note business to move from offshore to the gift city, because the income of offshore banking units from gift city transaction will be exempt from tax. And similarly, on long-term gains, I think the cap on the surcharge to 15% as against 37 will help not only manufacturing companies and startups, as the finance minister, honorable finance minister mentioned, but also to other industry like maybe the AIF industry and things like that. But coming back to my earlier point, as I was saying, considering the very healthy growth in corporate and individual taxation, there could have been done more dole-outs. For example, standard deduction for individuals should have been increased to boost consumption. There was an expectation of code relief for companies and individuals. That did not happen. Offshore bonds, there was an expectation that there'll be some tax exemption for the government, for the Indian bonds inclusion in the government index. So that didn't happen. Similarly, on
Yeah.
services and technology sector, there was an expectation that there'll be a lower tax like manufacturing. So that did not come up as well.
Yep. And I might also add, there's a sharp come off happening in the market at this point, down to a sliver of its gains. The Sensex is up just about 35 points. The biggest pressure, actually, interestingly, is coming into the banking space, which is, of course, the most volatile and actively traded. SBI is down almost 2.5% at this point. The Sensex is within a whisker of slipping into the red. So there is very, very swift profit taking that is underway, and the Nifty is up about 80 points. The rupee has reacted negatively to whatever it's heard today. More details awaited. I would also want details on this borrowing figure, but the rupee is now at about 74.77, and as I speak, the mid caps have now slipped into the red. So the stock market is settling down after what has been a buoyant first half of trading. But let me see if I can hop across to the newsroom to get a few more details, maybe on crypto and everything that was announced over there. We've got our experts waiting by to just decode what the crypto tax means, what was meant when they talked about virtual assets. We can do that in about 5 minutes, I think. So, Ranjali, what do you make of this borrowing figure, and how do you think the bond market might respond to it? Because it looks, and I know that the last time round as well, it was revised, mid-year, but it looks quite sedate at this point at 14.95 lakh crores.
Yeah, Mitali, I think there's going to be some kind of rationalization of borrowing from the fiscal deficit target that's been set. So you're going to see a petering out of the borrowing. But what I make of the number is that it still is the backbone of your fiscal spend and your fiscal targets. And I see that this is going to remain something to watch out for some time. So we'll have to wait and watch how the bond markets respond to this.
Rajesh, are you clear? Because, some people are raising the question on whether or not this was specifically targeted at crypto, since the term, virtual asset was used. It looks fairly clear to you that this is talking about crypto transactions. And additionally, there was some confusion about, when it's a gift, then the recipient is taxed. Now, how do you figure out that it's a gift?
Right, absolutely. So, we'll have to see the fine print, Mitali, as you rightly mentioned, indicated. But I think from what the finance minister mentioned, I think digital asset, I think that clearly indicates it is a crypto to my mind. And I don't think she intended to cover any other asset other than crypto. But we'll have to wait for the fine print and see what she's actually meaning to say there. On gift, I think certain exchanges do provide a mechanism where you can just transfer your crypto assets, either for a consideration or without a consideration, both offshore, and now we are seeing a lot of activity onshore also. So if you do that, and even today there are provisions in the income tax law which tax the recipient of gift in many situations under Section 56, that has been extended to the crypto assets or digital assets.
Would you have, and I know I'm throwing so much at you when you don't have, enough details yet, but would you have more nuance on this LTCG clarification that the FM made? I'm watching the way the market has taken a turn, and I'm wondering whether, they're now reading the fine print and there's something not so appealing over there, because she seemed to suggest it's a recalibration and everything is capped at 15%. But what did you read into it?
Yeah, so again, we'll wait for the fine print, but based on what she mentioned and the summary which I've seen, the highlights, it is indeed a recalibration, and surcharge on all kinds of capital gains seems to have been capped at 15%, because today the benefit of 15% is only available for listed equity and mutual funds and not for other assets like your maybe unlisted bonds or even private investments, private shares and stuff like that. So that, I think, she has extended that benefit to all kinds of capital gains. And I think in the speech she did mention about the fact that it will boost manufacturing and startups where there are private investments which are not listed.
Professor Himanshu, just one word on where this leaves the MSMEs. There was some mention by the finance minister in terms of giving greater support to MSMEs, particularly those from the services industry. But largely, would you say they are in better shape compared to where things were last year, or does the MSE need urgent support? It's mute again.
Well, the MSME sector, particularly in the service sector, and those in the what we call as the contact-based services sector. That is a sector which has been affected. It continues to, when the third wave is still, I mean, most of the state governments have some kind of restrictions, some other, not exactly a lockdown in that sense, but restrictions are there. And they did benefit in the early part of it. But again, this was not something which percolated down to the really the ones who were unregistered or who were not part of the system. So I think there is still need to protect them. There is need to handhold them for some more time till they can stand on their feet. The credit scheme has worked only to a certain extent, and it has mostly benefited those who are part of the network. But those who are left out, or who was really the small and what we will call as the tiny ones, when the what we call as the proprietary ones. Those are the ones who did suffer quite a bit, and those are the ones who have not yet been brought in part of the various schemes that we have been talking about. So I mean, and there's even the total offtake which was there. I mean, if you look at the breakup of the offtake into various schemes that went to it, again you do find that there is more that is needed to be done. And so I don't think that the MSME sector is back again on their feet, and they don't need. I think they need the handholding to some amount. I mean, some time at least for some more time. And remember, these are the MSME sector has been suffering for quite some time. I mean, this is not something just the pandemic. I mean, I think this is something which is a long one. So I think in the long run, what is they have actually been hurt because of various regulatory and other things, which I don't want to get into detail of it. But I won't say that they've been taken care of. Their problems have been taken care of, and the kind of support they would needed. And the support was not just in terms of monetary policy, in terms of credit support. There are other kind of support, which is what most of the other countries have done. I mean, most of the developed countries have gone into some kind of a direct transfer support, direct income and direct transfers in terms of wage cost, various other kind of transfers, other kind of exemptions have been given to them. We didn't have anything other than the credit one. I mean, that's the only thing that they got, and I don't think that is sufficient enough, sufficient for the kind of crisis that they have been in the last 3-4 years.
Yeah. Still a very subdued market. Interestingly, one of the big losers today is BPCL. Remember, didn't come out with very inspiring numbers yesterday. And the fact that there was no mention really of what the divestment plan for BPCL is. LIC was mentioned saying it's going to happen shortly, but I didn't hear anything on that account. Some more details coming in. FY23 fertilizer subsidy at 1.05 lakh crores. So that's another figure to pencil in. Dividend from the RBI is going to be lesser this time round. Last time round was really a bumper figure from the Reserve Bank. This time round, it's been marked in at 73,900 crores, and the gross tax revenue target for FY23 has been upped. So, I mean, from the previous year, so that stands at 27.58 lakh crores versus just over 25 lakh crores. But we've been talking about crypto, the fact that there are some question marks around this taxation. Let me go back to the newsroom where Alicia is waiting by with Prasid. Lots more details coming in on what it looks like the new life of a crypto trader may be.
Well, thanks once again, Mitali, and hi from the newsroom. Prasid is with me. He is a deputy editor at Tech Circle Mint. So, Prasid, we saw a bunch of announcements related to crypto and the digital asset space. A transaction tax, so to speak, is how we understand it so far. On crypto trades, on trades like that. And also a large emphasis on giving infrastructure status to data centers. So these probably have been asks for a while. Your assessment of how this will impact the investor community in crypto, which is thriving and growing as we know, and also the larger announcements which have been made in the tech and data space. How will all pan out?
It's actually quite interesting. Some of these things, yes. For example, the crypto tax, it could be a double-edged sword. Some people wanted a tax because it means that now you're sure that crypto is not being banned. However, that some people, who may not have known what the tax will be, for them it might be troublesome.
Was it a long expected
But yeah,
lines?
this was largely speaking, the industry was expecting a crypto tax. They have been pretty sure for at least 6-7 odd months that there won't be any ban. So yeah, largely speaking, the crypto tax was expected. What this will do is, because crypto has a lot of these small sort of non-institutional retail investors.
Yeah.
For them, some people were still not sure. So for them, this comes as sort of
As a negative
surety.
surprise.
Yeah, no, for them, yeah, there's that thing that it could be positive, it could be negative, but at least they can be sure that they're taxing it, so they're not banning it. That's
Right.
definitely for
Fair
sure.
enough. I mean,
Yeah.
so that's one clarity. The
Yeah.
other is the digital rupee that the
Yeah,
RBI
so-
will launch
Yeah.
at some point.
Yeah, the digital rupee, again, it has been it has been in the works for quite a while now. One thing to note is that the digital rupee does not really mean crypto. I know like this
But
relation
built
is
on the
often made.
blockchain tech.
Yeah, but I mean, it doesn't mean the same. What the digital rupee for most of us means is just another digital currency, a digital way to transact. The good thing with digital rupee is that it gives a lot of sort of accountability to banking and all of this. One thing I've often heard the industry say is that the kind of banking scams that we have seen recently, those will be difficult to do with something like a CBDC. So of course, CBDC is a very, very welcome thing for a lot of people. And yeah, we'll have to wait and watch when it comes out.
But
It
we
has
don't have
been-
timelines yet.
We don't have timelines at the moment. All we do know is that it is coming sometime soon. It has been in the works for a long time now.
And lastly, how would you interpret the infrastructure status that's been accorded to data storage, data center, all those systems?
So data centers is a funny space for a lot of us. It seems like technology, but a big part of data centers also goes into real estate, right?
Right.
So because of which they wanted that infrastructure status, because a lot of these data center companies have literally billions of dollars of investments planned in India. And as things stand, because of India's sort of, the geolocation that we have, India is expected to become a hub for data centers for South Asia. Because of that, there will be a lot of investments. There are companies like Equinix and all who have made big investments, and they have been asking for this infrastructure status because doing so means that land acquisition will be easier, and they will, the core things of real estate, those things will
Will get
become
sorted out.
easier.
Right. So to wrap things up, what would your takeaways be from this budget when it comes to the larger startup tech data space?
I think the big takeaway from budget this year is that, if you look at the last 2-3 years, the government has been saying a lot about technology, right? They've been saying, yeah, we'll do AI, we'll do quantum computing, and so on and so forth. This year's budget, the big difference is that this is implementation of technology. This is no longer saying that let's sort of facilitate technology and so on. We are saying that let's go and implement technology now, right? So from that aspect, it does help because, say, a national digital, health portal, it will help a startup working in that health sector, right?
Correct.
So from that aspect, it is very, very good for these companies.
Great. So thanks for contextualizing all of that for us, Prasidh. More panelists joining us now. So Mitali, back to you in the studio.
Anisha, thank you for that. I do agree with Prasidh. Talking about a fiat currency is not the same as talking about crypto trading, but interesting that was the first time it was mentioned. Full house again, Anant Narayan joining in, Radhika joining in to talk about the equity markets, and of course, we've got our other panelists going with us. Welcome to all of you. Anant, this time it's my turn to say ye dil mange more because I just didn't get enough details. Tell me what you have and what you made of the budget speech and how you're processing it.
Mitali, I need to go through the numbers in detail as well, but I'll tell you what I've seen so far and what's the gist of it. Look, pre-budget, we had said there is a bonanza as far as revenue is concerned. Tax collections are looking very, very positive. Personally, what I was hoping for was that they would, distribute this largesse amongst 3 areas. First is obviously capital expenditure and infrastructure spending, extremely critical for jobs and output. Second, some amount of money into social, into public good, education, healthcare, sanitation, all of that. And the third was some fiscal consolidation. So you achieve a bit of all 3, given the tailwinds of revenue largesse that you have. As it transpires, I think the finance minister, at least at first read, has gone all in on infrastructure, has kind of given up on, or rather gone very easy on fiscal consolidation, and perhaps not gone in that strongly as far as education, healthcare, sanitation is concerned. So it's all in on capital expenditure. And while that's clearly very, very good, I think nobody can dispute the fact that we need a Gati Shakti, we need roads, ports, connectivity, logistics, all of that to grow manufacturing, SMEs, etc. There is always this risk of implementation. I think the intent is fantastic, no questions asked, but the problem is about implementation. Unfortunately, if you go by past standards, our implementation has not been great, and we discussed that in the pre-show. And to that extent, the fear that some of this, budgetary spending, extra spending over what we anticipated, could land up in inflation and higher imports, etc., etc., which is why you're seeing some nervousness in the market. So, broad story, excellent focus on capex. I think nobody can dispute that, but it's come at the cost of what could have been more fiscal consolidation, and possibly at the cost of more money going into health and education and sanitation, etc.
Let me ask you this, Anant. The divestment target is sharply lower this year round, right? It's 65,000 crores. I mean, I'm not sure what all she's added in that, but it is far more sedate than the last 2 years. Market borrowing is, I think, lower than what we were discussing pre-budget at 14.95 lakh crores. And the dividend from RBI is expected to be lower. What is higher is that there's a big markup in her gross tax revenue target. Is that the sort of the bullet she's going to be firing, the fact that revenues are going to come in via even more buoyant tax collections?
Oh, I think, Mitali, that even these revenue projections that she's given us are extremely conservative. Given the momentum we've seen in the last few months, I think we will handsomely beat these estimates even for the next fiscal year, right? So look, it's a deja vu of last year. The projections, I think, are very, very reasonable. 19.5 lakh crores or whatever she's put for tax revenue, I think is very, very reasonable. We will achieve that. But here is the problem. The problem is, even last year, if you recollect, at 6.8% of GDP, what we said was revenue projections are very conservative. They're very realistic. I think, we will probably beat them. We beat them hands down. Yet, the fiscal deficit finally is higher than where it was targeted, despite the increase in the denominator of the GDP going up to 2,32,000 crores. So what's happened is expenditures are kind of expanded to fill up this increasing revenue kitty, and have actually gone to the extent of erring on the side of more expenditures to end up with a fiscal deficit higher than target. Now, I'm hoping that doesn't repeat the next year. I think that if, close to 23 lakh crores is what she's pegging in for non-borrowing income, I think she could end up easily with 2 or 3 lakh crores higher than that. I'm hoping some of it goes into fiscal consolidation rather than into expanding the expenditure pie to fit up into this higher revenue pool.
Okay. Radhika, welcome. Thanks for joining in. Before I ask you a broader question, I'm sorry, I'm going to ask you a more nuanced question. One on the LTCG cap, Radhika, any negatives over there in this recalibration at 15%? And secondly, how do you think the market will read a divestment target of 65,000 crores? It is definitely a markdown, but then, the other way of looking at it is that it's a more realistic target.
So I think we've had a patchy history on disinvestment targets regardless of market conditions. So I think it is important to put out a realistic target and meet it. She also made a comment about the LIC IPO coming in. And hopefully this year, because we still have 2 months of the financial year. So if that were to happen this year, then this kind of number for next year, I think the market will be reasonably okay. The point that Anant made, we have the benefit of tax collections, to help us. On LTCG, Mitali, I think it's a big positive. I don't see any downside. I think particularly for the startup world and for HNIs and angel investors, there was a whole thrust and push on startups throughout this. So for that community, I think there have been many asks. This is a positive. I don't see any downside to this.
For the capital markets then, Radhika, what is it? Is it a business as usual? How you always enter the budget saying do no harm. Is that how you think it will come out of it?
I think so. And, I think you have to remember capital markets, and I exclude January's correction, were reasonably buoyant going into this budget. We've seen a recovery, earnings are on track. So capital markets are buoyant, and yet they're going into precarious global conditions because of the withdrawal of liquidity. So in some way, what you didn't want to do was upset the apple cart. So I think you've done two things right. One is You've talked about growth, and I think talking about growth, even at the expense of a little fiscal, is okay. So you've talked about growth, you've talked about manufacturing. Second, you haven't made any changes on the tax regime, and I know a lot of people are saying nothing for individuals, etc. But I think we've had a lot of inconsistency of tax regime in the past, and so no news on taxation is good news. And I think it's not upsetting the apple cart budget, which is what we need.
Mahua Acharya, who is MD and CEO at CESL, joins in as well. Mahua, hi. There was, the budget was intermittently filled with a lot of references to electric vehicles. There's a lot of chatter around the battery swap statement that the finance minister made. What did you take away from the budget?
Firstly, thank you, Mitali, and thank you for Mint for having me here. I'm actually very pleased with the budget. It's from a climate point of view, from an energy transition point of view, it addresses what I would say are the right things. There's medium term, it addresses a lot of things. Long term, it addresses a lot of things. So there's a number of quote unquote subject areas that the Honorable Finance Minister has put out there like it is normal business. So that is fantastic. For me, that's a really forward-looking, modern budget that addresses things like climate change as a mainline issue. I mean, it sounds quite staid to say it, but rarely does climate action feature its way into this level of detail interspersed with the national economy. So I think that's fantastic. She's picked up topics. She's picked up electric mobility. She's picked up public transit. Like you're saying, battery swapping. Battery swapping is excellent. It's something we need. We've got crowded cities. We've got a real life situation with battery swapping. She's picked up interoperability. It sounds like a really serious technical detail, but it's a consumer facing issue that affects you and me as we move into electric vehicles. We want to just make sure that wherever I find a charging station, I should be able to charge my car. So she's picked up a lot of these very technical issues and made them front and center. So from a climate, electric mobility, energy transition point of view, there's something in it for public transport. That tends to not sometimes get covered. We don't cover our electric buses and public transit in the way that there's just so much of activity and in fact even glamour around electric vehicles. But people don't kind of think that we've got cities that are. We've got to put people inside buses. We've got to put people inside public transit. All of our cities are getting crowded, and that trend is not going to change for a while. So we have to address it in the most climate optimal behavior. So it's great that she's got a swapping policy. There are a couple of areas which are extremely helpful. I think she called it sunrise sectors. In her section on the statement of NIIF, government-backed funds and needing to set up thematic funds, also going to the extent of saying that government takes the lead or public finance takes the lead. There are a lot more money sometimes needed to kickstart these sectors. It's a great thing. At a level of principle, it establishes out there that, in fact, it is public sector money that comes in and kickstarts something. So it's been put into these principles have been injected into contexts such as climate action, energy transition. She spoke of green bonds. So there's anything between detail like interoperability and long-term things like energy transition that have been covered, including ESCOs. I find that a word as technical as ESCOs has made its way in. So it's a good thing. I mean, of course, it's hit a lot of the issue areas that we needed to have the center steer.
Sure. Of course, now we wait for execution. So Ranjali, I just wanted, your notes on some of these details regarding this capital outlay that we've been talking about, where it's been up to 7.5 lakh crores. The details emerging seem to indicate that this increase is on two accounts primarily. 1 lakh crore of loans to states, and then the green bonds we were talking about, which is borrowing for the public sector. Have you been able to ascertain whether there is any real increase in the government's own capex?
Mitali, I've still not worked through the numbers on what has been the increase, but surely the promise seems to be extending the government's spending beyond what was expected, and I think we'll have to wait for the details. In fact, you're saying that the green bonds are within the folds of capex.
Yeah,
Is
that's what
that
it looks like. Yeah, it looks like it's just two heads, 1 lakh crore of loans to states and then green bonds borrowing for public sector. So I'm trying to figure as well what the government's own capex expanse has been this time round. Anant, can I jump to you for more numbers? Have you been able to glean anything more?
No, Mitali, I'll have to go through the numbers as well. But I
Yeah.
suspect, yes, this jump of 1 lakh crores to states, the 50-year loan, etc., I think is part of that. That's not a bad thing, by the way. CapEx, bulk of it does happen at the states. So if there is money going to the states for spending, I think it's absolutely fine. I will look, even this year's number, CapEx has gone up to over 6 lakh crores. But a lot of that, like we discussed pre-show, is to do with the Air India equity infusion. Over 50,000 crores, that's showing up as a capex as well. So I think overall the intent is very, very clear. I think this push into capex is real. 7.5 lakh crores, even including that 1 lakh crores of state loans. If that's the case, I think is very, very good. It's come though at the cost of fiscal consolidation and expenditure into other revenue and subsidies and health, etc.
Yeah, and as we were discussing, immediately after the budget, Anant, I think, frankly, it was a bit disappointing not to hear even an acknowledgement of the jobs crisis. There was some reference to how expansion in some sectors would then feed jobs, but I didn't hear any acknowledgement even of the fact that this is an urgent crisis for us. Radhika, we heard her talk about LIC, but we did not hear her talk about BPCL. Is the stock nervous about it? What do you make of this lack of sort of information on that regard?
Actually, we didn't hear anything about disinvestment or asset monetization, Mitali, which was a little bit of a bummer because in last year's budget, there was a lot of information about it. There was a plan to have a sort of body that tracks asset monetization, and which is why I think a lot of these things in the core budget are finally about execution. I mean, we make a lot of announcements. BPCL, I don't know, but I think the market was expecting to hear a lot more on both disinvestment and asset monetization, particularly after last year.
Given the point you were making, Radhika, about what our global climate is and what our global context is right now, what do you think someone who's looking to invest in India or has money running in the market right now would take away from the budget?
So I think, the takeaway is that, look, it's growth oriented, that there is a prioritization of growth. Now, Anand has also said at the expense of fiscal consolidation. I think, one thing that a global investor can be heartened by is that India has not overspend its way out of a crisis, thankfully. So that is one. Second is, I think there's a push on infrastructure and manufacturing. And India has seen some success stories in manufacturing. I think PLI, to a certain extent, for sectors like mobile phones, etc., has been a big positive. I think the mention of PLI, I think that's a takeaway. So I think growth is the push that people should take away from the budget. And as I said, an environment of stability when there's so much global instability is also another positive takeaway.
What was interesting was the fact that, she really opened it up for digital assets, Radhika. The fact that crypto, I'm assuming, will be taxed at 30%. In fact, one of my guests has messaged saying that NFTs will also be taxed. Digital assets have been defined broadly. This was waiting to happen, right?
Well, so there are two things that happen, right? In saying that cryptos will be taxed, in some way you also acknowledge that they are legal, which is possibly, I mean, I'm not saying that explicitly, but it's possibly something that is good for crypto investors. And finally, you need an investor protection and regulatory framework. So if they're acknowledging that digital assets are meaningful, we need to talk about them, I think that's good. Finally, there's investor protection. If you have a tax regime, that means it's a real asset class. And I think that is a very, very positive step. Now, whether the tax is 30%, 50%, or 90%, at least it's a real asset class and crypto investors have somewhere to go. The digital rupee is also, a very positive development to watch. So I think there's a recognition that digital currencies in this broader ecosystem has to be taken care of. And as I also understand from the fine print, NFTs will also be taxed.
Rajat Kathuria, who's Dean at the School of Humanities and Social Sciences, joins in. Rajat, thank you for joining in. we sort of have a bipolarish budget over here, where there's a lot of thrust on capex, but there seems to be a lot lacking in terms of detail on social sector scheme outlay. How did you read what you heard in the speech?
Well, I think the details have, as you rightly said, the details haven't yet been given out, and one will have to go over the details. But I think the clear emphasis is recognizing the reality of India, that we've had huge public underinvestment in both education and health sectors, and that there's going to be now a fillip there. So I think that's the good news. The other good news is creation of a digital backbone for almost everything. So digital will inform a lot of the activity that the government does, even create a digital university. I don't know how that will evolve given the learning outcomes of the past 2 years. But I think those are positive developments. I heard you say, when you talk about social sector schemes, you can't talk about it without talking about jobs and without talking about inequality that stares us in the face in India today. So one of the biggest, or two of the biggest issues that I think we need to tackle, apart from the other issues that you've been speaking about, are the jobs crisis, and I think it's a crisis, and also the growing levels of inequality, which is against the taxation, taking from the rich and giving it to the poor, or creating assets. And I know those two things were there in the budget, and I think the details will be in the document. One looks at the numbers, but I think the good news for me is that the focus now is back on there. There was no mention of corporate directly that we see in almost all budgets, that tax rates will have come down, etc. There was almost no mention of corporate. Of course, there are schemes, there are benefits, there is crowding in on private investment that is happening. But I think at the big picture, I didn't see any sort of playing to the gallery of big corporates, because I think legitimately so, because inequality levels in India, the number of people who access to wealth, those numbers that have come out recently are really sort of something that have hit the government or even have hurt the government. And therefore, I think the finance minister has steered clear of announcing those directly in the budget. So therefore, the emphasis on investment, therefore the emphasis on social sector. And I think that will clearly be the roadmap 25 years as we lay out the roadmap for India at 100. But I do, Mitali, want to make a point that I really liked in this budget. And it may be too early for me to say so, but I think, let me try and stick my neck out and say this, which is the focus on cities of the future, this focus on cities, the focus on logistics and Gati Shakti. If you put them together and you look at the jobs sort of crisis in the background, and if you put all of this together, what are we seeing? Well, we are seeing a couple of things. One, the romanticism with creating jobs in rural areas and keeping people back in rural areas. I think that's something has hit a wall of reality that cannot happen and will not happen in any country, and it will not happen in India. People will migrate to cities. And so when they come to cities, you can't accommodate them in the mega cities already. So you have to build tier 2 and tier 3 cities. We are not a China where you can have a hukou system and prevent people from migrating. People will migrate to cities in search of jobs. And therefore, creation of this logistics infrastructure, creation of cities which accommodate people coming in and invest in those cities. If you tie all of that up, it's basically saying that jobs, labor-intensive manufacturing jobs, are likely to be created in these cities, provided private investment comes in. And unless that happens, I think government expenditure on social sector schemes will go on expanding, and therefore fiscal consolidation will perhaps be delayed even more. So I saw that, I'm seeing that as sort of reading the tea leaves of what is going to happen in future budgets, that growth is going to happen in cities, employment is going to be created in cities, and therefore we need to create ease of living, better infrastructure, better livelihood opportunities in tier 2, 3 cities. And when I came in, sorry for taking so much time, when I came in, Mahua was making a point about sustainability and climate. And let me say that when these tier 2, tier 3 cities sort of develop and we grow them, I think the recognition of the fact that public services in our mega cities have become so bad that almost anybody who can afford it provides for public services on a private basis, which means that private provision of public services happens, and they are much less carbon friendly, and they're very, very carbon unfriendly. I think so. The lesson is create good public transport, create sustainable public transport, get people into buses. Let's not create generator sets. Let's not have our own water sort of delivery mechanism. All this should be provided for by the government efficiently, and it will be much better for the carbon footprint than if they're provided privately.
Yeah. I was also very enthused, sir, with the comprehensive urban planning details. And then someone sent me a note from 2015 about 100 smart cities. So I think, as Anand says, execution will be of paramount importance over here. But let me hop across to Rajesh, who's got a whole lot more details about this taxation. Rajesh, please go ahead. One on the NFTs point, and you were making a point about P notes as well.
Right, absolutely, Mitali. So first on the NFT point, I think that the term digital currency, as we have just got the finance bill a few minutes back, has been defined very, very broadly. And it says, any kind of digital assets through which are acquired through any means like cryptographic means or otherwise, other than Indian currency or foreign currency, will be taxed. And that includes non-fungible tokens. So as you were saying, Mitali, very rightly, and as the Edelweiss AMC head was saying, that this was also expected because slowly and steadily we will see a lot of NFTs being issued. The first one famous was Amitabh Bachchan's NFT, which came about, and I think we'll see a lot of NFTs not only by personalities but also by industries in terms of art, etc. So that is one development. Maybe that was not expected. The second is an interesting one where the finance bill says that any income of a foreign investor from any derivatives or any offshore derivative instruments issued by a banking unit in a gift city will be exempt from tax. Banking unit they define as OBUs, or offshore banking units. Now that means that if a offshore banking unit of a IFSC issues any derivative instruments, the investor will be exempt, which clearly means P notes issued by banking units as broker dealers to foreign investors will be exempt from tax. Now that is interesting because on the one hand, the government has discouraged P notes at Mauritius, Singapore level by reducing them to only equity shares and not allowing them naked P notes on derivatives. But on the other hand, now there's a boost to moving that P note business into the gift city in some sense.
Okay, a couple of more details emerging on the fine print of the budget. FY23 rural development allocation is actually down a smidge at 2.06 lakh crores versus the previous year's revised estimate of 2.07. Transfer to states is up a little bit. Education has been increased versus the revised estimate, but I would want to see details in terms of what the breakup is over there. And health allocation as well, very marginally higher this time around at 86,606 crores. Maua, as we were discussing, as next steps, what would you want to see?
I think execution details, there are many things in the budget that are, of course, in the right direction. It's a tomorrow's budget. It's a forward-looking budget. It has all the right principles. There's a lot of language in the budget that I'm hoping is very accurately and deliberately put. For example, there's reference to blended finance. But everything just, a lot of detail has to either come out soon, it has to be executed, because there's a lot of devil in that sort of detail, which if you get your foot off the gas, it won't go too far. So as a next step, some additional details will have to emerge. There will have to be a few more schemes and policies that capture this. There'll have to be a little bit more, or a little effort, follow-on effort to realize some of the principles and some of the forward-looking statements over here that have been put. So you see, in the budget there's a combination of numbers, very exact numbers that have schemes, and PLI, for example, has been put into it. But then there's a lot of other broader directional kind of changes and shifts that will need hand-holding. And that hand-holding is what will define whether we can make it, whether we will be able to do blending for public infrastructure, whether we will be able to do blending for climate friendly public infrastructure, for example. So it's great to have battery swapping, and I'm very confident that a policy will emerge. But that's a very specific granularity that's been provided over there. So when the budget says a policy will emerge, a policy will definitely emerge. There's reference to green bonds, for example. I think the bond community, or at least a little bit of the green bond community, were looking to see things like inclusion. So that'll have to be taken and taken forward. The use of proceeds will have to be given a little bit of impetus. So there has been efforts going on in pockets around the country. So this budget puts an umbrella on it, and with a little bit more push and sustained action. In some cases, I think the pockets of activity will see reality because they've remained as voluntary initiatives. In some cases, hopefully, they will creep their way into more regulatory space. So, as a next step, back to your question, I think the next steps are some more detail will have to emerge. I think a lot of people, institutions, and entities now also have the legitimacy, quote unquote, to hang their initiatives on this budget, saying, look, the budget is in fact moving in that direction. So, in line with that budget, here's my next big chunk of work. So, there's work to be done, of course.
Rajesh, there are some additional questions coming in for the bond market. Any details over there on what's come through on bonds, on FPIs, bond index inclusion? I haven't seen any detail except for that borrowing figure.
Right. No, absolutely. And I think as Radhika mentioned also, I think that was an expectation from the government, because having a tax exemption on Indian government bonds, which will be cleared through a Euroclear, etc., on an offshore market, was needed in order to include Indian bonds in overseas indices like the JP Morgan index, etc. But and I'm seeing, just scrolling through the fine print, I don't see any particular exemption on that so far, which was a little bit disappointing, because I think that inclusion would have helped to. There's an estimate of at least about $40 billion of foreign investment coming by inclusion of the Indian government bonds in Euroclear. So that hasn't happened so far. So that was one disappointment, and I haven't seen anything more particularly from a bond taxation point of view.
Do you think that means it's been put on the back burner?
It looks like probably that it might have been put at the back burner.
Okay. Rahul Bajoria, I think of Barclays, is also joining in. Rahul, hi. So I'm going by your previous note for FY23. You had penciled in a consolidated deficit of 10.5% with 6.5 for the center. She's marked it a little bit lower. You expected to see 1.75 lakh crores in fiscal deficit, which would allow it to raise spending to more than 41.8 lakh crores. Given what you had marked in, how would you rate what you heard in the budget?
Hi, Mitali. So I think the numbers, I would say, are reasonably conservative both on the revenue and on the expenditure side. As we have seen that some of the non-tax revenues have been marked down. Both on divestments, also the spectrum auctions, while they have not really factored in any major uptake, and even the tax assumptions to me look a tad conservative. So I think that's been the broad thrust in this particular budget. That there's not been any very flashy announcements and things like that. So while there is an emphasis on capital expenditure, on infrastructure spending, but the government seems to have generally taken the cue from last year's budget, that don't be extra optimistic about the growth or the revenue projections, and try to basically adjust things as the year progresses. I think that approach has served them well. And from that standpoint, we generally feel that while we were expecting slightly higher numbers, the government seems to be of the view that they will see some consolidation, both in terms of their tax collections and also in terms of their expenditure capacity. And so from that perspective, I think it's probably a sensible strategy, but we definitely feel that there might be a little bit more upside as the year progresses. The revenue numbers might do a tad better, which might bring about scope for greater spending, which could come either on the revenue expenditure side. If say commodity prices remain elevated, you could see a higher subsidy outgoes, or you might also end up seeing better expenditure performance from states, which is clearly something there seems to be a lot of emphasis on. So overall, I would say a pretty restrained exercise on part of the government. They seem to be backing a lot of the sectors, which have done well in the last couple of years and which probably have the highest growth potential. And, that again seems to be a reasonably well thought out approach, in trying to basically promote areas where job creation and, growth from a top line perspective can be showcased in the coming couple of years.
Hmm. What happens though, Rahul, about the situation that we have had going for some years now, and that has been defined as, the K-shaped growth, where one pocket of what you're outlining has definitely been addressed in this budget, but then there's a whole other pocket that has not.
Yeah, so I think the welfare component of the spending program continues to remain reasonably large. Now we have I've not had the chance to look at specific program allocations, but overall commitment to say supporting the farming sector, and that's where a bulk of the increase in the revenue expenditure side kind of came through. There were some expectations that maybe a little bit more could have been done from an urban job scheme perspective, but I feel the administrative capacity to run a lot of these schemes are probably a bit lacking, and so you have to worry about that aspect as well. What is clear though is that there seems to be a bit of a post-COVID kind of a mindset as far as this particular budget is concerned. So the emphasis on capital expenditure is high, which will in turn have a pretty high multiplier as far as job creation is concerned. But then the welfare, a lot of the one-off welfare schemes that were introduced as a result of the COVID pandemic are likely to see less emphasis in the coming fiscal year than what we have seen in the last 2 years, right? So it is expected to plateau out, and that probably gives a little bit more room for this capital expenditure to expand, even though the overall expenditure is not really increasing, at least as far as the budgetary estimates are concerned.
Have you been able to scour the numbers in more detail, Rahul, in terms of this capital outlay? Because one, point of view that's coming through is that this jump from 5.5 to 7.5 is only on two accounts. One, that there's 1 lakh crore of loans given to states, and then there's green bonds borrowing for public sector. What is the real increase in the government's own capex? Do you have a handle on that?
Yeah, so I was just looking at that particular data, before coming on the show, and there seems to be, a broad-based approach in terms of increasing the numbers. So, some of the sectoral outlays for, say, the Jal Jeevan mission, for the increase in highway expenditure, given that that's been plateauing out over the last couple of years. I mean, those are a couple of areas where we have seen large allocations. I would agree that, the state capex increase is something which is quite material. And this is also something that will be allocated as and when states are actually spending what they've already budgeted, right? So this is over and above what was what the states are going to be showcasing in the next few weeks as they present their own budgets. And so I do feel that there is a push towards basically spending the money rather than just saying, oh, I'm going to spend X amount of X amount of money and actually not meeting those targets. So it feels very execution driven to a certain extent. And also one thing the state allocations the extra capex allocation has done is that it has probably taken away the pain that will come later in the year from the expiration of the compensation that the government was providing on account of the GST losses, right? So in a way they're kind of preempting that particular challenge, both from a political and from an economic perspective, by promising to states that if they are spending money on their existing account, they will be able to get a little bit more in order to meet their spending aspirations.
Okay, full house now in the Mint Hindustan Times newsroom, decoding the budget. Gurpreet Chatwal of Crystal Ratings joins in, Sabina Diwan of Just Jobs Network, and Rajiv Memani of EY India. Welcome to all of you. Gurpreet, first word with you, perhaps in terms of what you heard on the macro numbers from the finance minister and what you think the rating agencies might take away from it. You're on mute, Gurpreet.
Yeah, thank you. I think a couple of things, at least from a larger numbers perspective, while we are at this point of studying these numbers, they're coming in, I think looks to be realistic overall. I think one, the growth on the tax front, I think given the fact that we're running a high inflation, seems to be realistic. Expenditure, I think, from what we've seen, I think more or less broadly all the heads, I think they seem to have loaded most of what they're going to spend pretty high on capex allocation. So I think broadly the numbers seem realistic. Some of that, to put it, maybe they probably will exceed what they put out. I mean, exceed on the positive side what they put out on the fiscal deficit. I think that's largely what we are seeing from a numbers perspective. Uh, the the positive stuff I think we are quite excited is about the capex project. I think the huge focus, it is a continuous focus, and I'm not denying that. I think while we can quibble about the growth numbers, whether it's 35 or it's 10, I think we will put those math together. But the fact that the focus on solar, PM Gati Shakti through roads, and support to the states, which is trying to get them to spend on PM Gati Shakti as well as the power reforms, is quite positive. I think the underlying message, at least I'm hearing, is that we are pushing for growth, and growth will take care of everything. I'll pause in for a minute. I mean, if you're talking about the larger numbers.
Yeah. I just wanted to ask Gurpreet, on this figure that's been put out for capex, are you clear whether this is part of NIP? Because this would be a good halfway mark at 3 years to sort of gauge and assess what's happened with the NIP so far, or do you think this is a whole other pocket of spending that's been opened up?
As far as I understand, the NIP was made about 3 years back when this was pre-pandemic. I think that was a statement of intent, if I understand correctly. I must say that I haven't looked at it in that much detail, but I think this is a continuation of the trend which they have put out, that they want to spend almost a lakh, I mean, plus 1.1 lakh crore on infrastructure. Now, the at that time, what they did was they were trying to see what were the gaps and trying to fit it. Now they have much more clarity in where they're spending. So I suspect this is a continuation of the trend. I mean, a few heads here and there. I think that's probably what it is.
Sure. Rajiv, hi. What should corporate India take away from the budget today?
Yeah, hi, Mitali. No, I would say corporate India would by and large be positive. I think the news on capex spend would be positive. The focus towards some of the newer economic areas, around economic areas, sustainability, that should be positive, as was rightly mentioned. I think the fiscal deficit numbers, others are realistic. The disinvestment receipts that they're projected for are realistic. And from a tax standpoint, the message is very consistent. The message of not tinkering with too much of taxes, trying to focus more and more on simplification, the focus from a customs duty standpoint in terms of where they want to head at. So I would say by and large, the capex being the biggest thing, the capex spend and the resultant demand because of that, I think that would be the biggest takeaway. And then the some of the allocations that they've done to the Awas Yojana and others, I think for the some parts of industry, I think that will also be good news. So I would say there's nothing negative. There are lots of positive things for depending on which industry that you're in. And from a capital gain standpoint, I mean, there's some additional taxation in front because of crypto and others. By and large, taxes are much more for simplification. Some adverse rulings that had come, it reverses some of that. Crypto taxation, I would say most of corporate India won't be that concerned with that. On capital gains tax, I still to have to read the full fine print, but it appears that if you're an unlisted company, if you're selling, land, others, your tax rate could go down significantly depending on what bracket you're in.
The finance minister was quite diplomatic, Rajiv, when she alluded to GST, saying that there seem to be some issues that need to be resolved. Would you expect to see any recalibration on that front? Because that was the big ask from corporate India, really, a GST 2.0 with a far more calibrated, set of slabs. How hopeful are you of that?
I think it a lot of it will depend on how they engage with states, because now with the backstop going from the center, I think the states would become much more active stakeholders in the way it gets restructured. So a lot of that would depend on state, but definitely the high revenue collection. I mean, if in January, which was also impacted by pandemic to some extent, you're looking at 140, then probably in end of March, you're probably looking at 160 in that range. February will be lower because of the lower number of days. But so I think the states would feel more encouraged to ensure that if they can get growth and compliance, that's a far better way of getting of enhancing your revenue collection. So I think a lot of it will depend. I think the government is pretty. I think the central government, from whatever I can see, I think they want to move in that direction. Question is, how do they engage the states, and how do they give them the comfort that this will lead to greater growth in GST collections because of growth in business and because of compliance.
Sabina, welcome. We know we have a jobs crisis. CMI puts that as 19 crore jobs, but we didn't really hear anything specifically in terms of a job scheme. She did allude to certain sectors, perhaps augmenting job availability. But what did you make on that count specifically?
Yeah, hi Mitali, thanks for having me. So I think this budget was high on vision, a modern budget, but low on details. And glaringly, there was an outrageous neglect of the employment crisis and what it means for the average person, right? Especially the more than 69% that are in non-agricultural informal employment and the unregistered micro, small, and medium enterprises, which constitute 70% of all enterprises. There's no mention of welfare provisions. How do you not mention Manrega, which was a lifeline and the only lifeline for millions? When it comes to support for micro, small, and medium enterprises, there's some extension of support, but this needs to be much bigger and last much longer. We need to also explore, I think one of your earlier speakers also mentioned this, other mechanisms to support these unregistered small businesses, right? Beyond the emergency credit line guarantee and expanding access to credit, most of these provisions are only available to those kinds of small businesses that are registered. Why aren't we also exploring things like wage subsidies? Of course, now the announcement on expanded capex for infrastructure, people are saying that that's going to be good for jobs, which infrastructure is no doubt a job creator, but this is nearly not enough, right? Private consumption is down. Households lost 12 lakh crores last year. And, the economic survey, for example, attributes this to lockdowns and COVID containment measures. But the reality is that this is because unemployment is much higher. People are, in low productivity jobs with very poor wages, and there's a lot more labor market pain post-COVID, none of which this budget did a good job of acknowledging.
Actually, we do have the Narega numbers, Sabina. So for last year, including the additional funds that were pumped in, it was at 98,000 crores. And this year, it's back to 73,000 crores. I don't know if they estimate that they will be spending more or allocating more later in the year. Rajat, let me ask you a question that is, it's a little bit political in nature. What are the chances that she steered clear of making some very populist decisions in the budget? But that is something that might be kept up the sleeve, considering the fact that there are many key state elections coming up. You need to unmute.
Yeah, hi, Mitali. Sorry, can you hear me now?
Yes.
Yeah, well, the budget is a political document. It's not really an economic document. It is, to a large extent, a political document. And political economy is the reality. And I think with elections coming up, there are two ways to look at it: make populist announcements and then be roasted in the press, or sort of leave the detail to the document and don't make those populist announcements. And I think rightly, one will have to see the details, but I think rightly the finance minister has taken the latter route and has not made populist announcements. But I think there's, as people are saying, there's a lot of continuity in the budget. But like Sabina, I'm very worried about the jobs, and I'm very worried about the social sector. Really, I mean, it's been a weakness of India's economy even before the pandemic. Let's not deny that. Creation of jobs was a weakness of India. We spoke of the lack of employment or joblessness of our growth, or as economists put it, the elasticity of employment with respect to growth was very little. But growth did have an impact on poverty. Remember, 2004 to 2011, which some of us describe as the golden years of India's growth, when we grew at about 8% per annum in real terms, 137 million people were sort of alleviated from poverty. And that's a large number. And I think that was a fair achievement of that growth rate. And now, with growth having fallen, and the numbers that are coming out are about 46 million people have actually gone down back into poverty. And that's a result of growth, has a direct attribute. Of course, you've lost jobs because a lot of the informal sector jobs haven't been recreated. And if you look at two of the big reforms that happened in India, demonetization and GST, the impact, whatever positive impacts that they may have in the long run, in the short run, they had affected the small and medium enterprises and the informal sector the most. And informality today comprises 90% of India's labor force, and we don't need to sort of belabor this point. That's really a crisis that is brewing. And I don't think the government is in denial of it, except that there is no single way to address this monumental problem of informality. There is no single way of addressing the problem of formalizing jobs through export-oriented manufacturing sector, given that the global environment is a little more harsh today than it was in the past, given that digitalization is happening, and which is also going to have an impact on jobs. There's going to be a lot more informality because of the digital sector. So we are in the midst of a state of flux and great uncertainty. And therefore, I agree that it's at this point, especially given everything that is happening, including the pandemic, that the emphasis of creating a much better social security architecture is absolutely key for India. Of course, that's not going to be easy, but we desperately need that, because it's not going to, jobs are not going to be easy to create, which is sort of one route of reducing inequality. That's not going to happen. And therefore, Narega has to be mentioned. Allocations to Narega have to be increased in order to take care of the millions of young people, some of them with education and some of them with skills, which are not. I think it's a crisis that we need to realize is real. The inequalities numbers that come out from various reports are sort of, ought to put us into some sort of shame that we have in a country that we have so many billionaires, and the average per capita income is not at the level of Russia, where they had the maximum number of billionaires, in the past. But our per capita income is much lower, and we have a comparable number of billion. I'm using a different metric to say the Gini coefficient or the inequality levels in India are quite high, much higher than ought to be for a low per capita level country like India.
Yeah. Rahul, there's a couple of numbers that have come in from the subsidy front, and it seems like there's a markdown on each one. Fertilizer is down to 1.05 lakh crores from 1.40. Food is actually down to 2.1 lakh crores from 2.9. Petroleum is also down to 5,813 from 6,517 crores. How would you make sense of these numbers?
Yeah, so I think on the subsidy front, obviously, large part would be played by what happens with, say, energy prices to begin with, right? I mean, one of the reasons why fertilizer subsidies shot up to about 1.4 lakh crores, in the current fiscal, was because prices of phosphate and urea, etc., went up globally, and so that had to be compensated for. And I think one of the key points to make here will be that these numbers are to an extent open-ended, right? I mean, if we do see prices increasing globally or remaining fairly sticky, I'm pretty sure the allocations to these particular line items will go up, right? So that would be based on
we've got petrol closing in January at a 30-year best performance. So that would be a bit of a given at this point.
We should see prices going up as well, right? To an extent, at least for items like petrol and diesel. I mean, we can easily see a 5-6 rupee increase in the retail prices by the time the elections are over in March, and we should see a delayed impact as such of that in the numbers. In terms of the food, subsidies, I think there would be an expectation that some of the food relief measures that have been run in the last couple of years are likely to probably be scaled down, right? Even if they're not completely removed, we may see some scaling down of some of these relief measures, and that is probably, a reasonable assumption in my view. I think if required, they can always extend it and, maybe compensate for this, by cutting expenditure somewhere else, as they have been doing in the last couple of years. But on prima facie, these numbers look fairly reasonable to me, as far as, the fact that they are declining and not increasing in a year where COVID is going to be less of a challenge, at least, on paper.
Okay, quick check on the market's health before we do anything else. There was some choppy movement and then it's recovered again. Europe has actually opened quite strong today, and I think some of the buoyancy you have seen in the last 48 hours in the stock market is courtesy global markets. So back to a 1% plus rally for the Sensex and Nifty. A couple of the PSU stocks actually still remain off weather. I don't know if it's to do with the fact that the finance minister has set out a much more sedate divestment target, as also not shared too many details aside from the fact that LIC is coming soon. So that's what's happening with the markets. Lots more faces joining in. Sanjeev Bajaj of Bajaj Finserv, Mr. Sharma from JSPL. Welcome to both of you. Sanjeev, hi. What were your takeaways from the budget for India Inc., where it doesn't seem like the apple cart has been disturbed too much?
And Mitali, that itself is a very good summary. As CII, what we had been suggesting was a significant increase in investment in infrastructure by the government, and we can see very clearly the 35% increase, because we do see green shoots coming on private capex as well. But by the time it hits the ground, it's going to be a few quarters down the line. So I think this growth focus of the government very clearly is evident from this additional spend. In addition, we were hoping for no adverse actions on taxation, and we can see that there is policy continuity. We welcome that as well. So all in all, it's a pro-growth budget. A lot of people are talking about inflation, and there could be some moderate impact on inflation. But we do believe that if the money is well spent into productive purposes, then inflation increase will be for a moderate period of time, and hopefully after that, the additional growth in the economy kicks in.
Sanjeev, you would have your finger on the pulse of, what's going on with household stress, because we are seeing that in many parameters, whether it is in terms of what's happening with two-wheeler sales, whether it's in terms of gold loan defaults, the smaller sized ones. It didn't seem like the budget addressed domestic consumption or encouraging domestic consumption. Do you think that's something that will be looked at outside of the budget? And do you think that's something that does need attention?
So, domestic consumption, directly addressing that is something this government has not done even in past budgets. They've more focused on the supply side. Now, what is interesting is that if you see even in the last 6 months, we've had many months with reasonably strong consumption. And then you had months where the pandemic has hit harder, where people are not out working, they're not out in the stores, and that's where consumption comes down. Through the first and second waves, the rural economy held up well. In the third wave, we are seeing the last couple of months, rural has slowed down, but urban continues to hold its head high. Now, again, in urban, you spoke about the lowest end of the income segment. They have been hurt the most, and that's why if you see the lower priced vehicles like motorcycles and stuff, you're not seeing significant movement there. But the middle class has actually done reasonably well with their savings in the last year and a half. And if I were to look at our insurance incomes, we can see insurance, a lot of money has come into insurance in the last 12 months, which means people are saving, especially on the life insurance side. And middle class has not really lost jobs. So the strong consumption months, when we see it in the last couple of quarters, is coming from this middle class. What we hope going forward is the continued focus on health measures, avoiding the next wave, preparing for that, stays on course. Because if it does, that will minimize disruption, that will keep consumer confidence high, and consumption should then come back.
Okay, final question to you. I know this is not an earnings discussion, Sanjeev, but your stock has been the darling of the market through last year. There was some disappointment with earnings this time round. Are you feeling confident about the sort of economic canvas as you see it going into this year?
We are very confident. The way the government has handled the current wave gives us that continued confidence that things are looking solid going forward. However, we know that there are enough unknowns out there. We know there could be a more fatal strain that comes. We have been pushing the government and through forums like yourselves to continue to do more to prepare for the next pandemic. So as a business, we also set aside some additional capital for such unforeseen events because you can never be sure whether it's going to happen or not. But keeping that aside, with that's being conservative, we otherwise see this coming year to have the hallmarks of a very solid year.
It's what did you make of it? The big focus seems to be in terms of what has been laid out on capex spend.
Sorry, we lost you. Can you repeat the question and say
No,
what's
I just wanted to say thank you for joining in, Sanjeev. Thanks for stopping by. And I was saying hello and welcome to Mr. Sharma, who spoke with me before the budget. What did you make of the announcements on the capex outlay?
Yeah, thank you very much. First of all, I would like to congratulate Finance Minister. She is very focused on capex, how to invest more and more in the infrastructure with 9.2% ongoing growth. I'm sure the next couple of years are going to be for the infra industry. And we being in steel industry, we welcome this particular move. Over and above the overall capex spending, she has already cleared that to avail the benefit of a tax relief that is from 25% to 15%. Earlier, we had to start our production or commence our production on or before 31st March 2023. She has already extended the date to 31st March 2024. So this has given a lot of relief and a lot more investments will come. One more point I'd like to tell you, the focus on coal gasification and coal to liquid. Coal to liquid means coal to petrol, coal to benzene, coal to methanol, coal to ethanol, and coal to petrol and diesel. So this is going to be a big focus in times to come as per the budget. And coal to gasification means coal to gas, that is syngas, and syngas to steel, syngas to fertilizers, syngas to power. That is again going to be a very lucrative business in times to come. One more thing, the battery swapping business. This is going to rewrite the entire value chain. And there'll be more and more investments in battery standardization, in bringing the solar-based battery recharging unit on pan-India basis. So I would rate that budget is excellently well, especially for the capex and for the capital expenditure. And last but not the least, the cryptocurrency, what Finance Minister has covered, the rupee is going to be digital. Means, if I am understanding very correctly, that means that people don't have to be behind Bitcoin or the other cryptocurrency, and you can invest within the country in Indian rupees, which is going to be digitized or digital economy. And this will also bring a lot of foreign investments also in the country. Maybe a first step towards globalization of Indian rupee.
So I think it'll take a little more to get the enthusiastic traders away from their Bitcoin, but I take your point. There were some details given on tariffs of about 7.5% on select capital goods. Have you been able to access more details on that and any impact for you specifically, Mr. Sharma?
Actually, there is an impact because some of the areas, the anti-dumping or safeguard duties are removed. But in today's perspective, it is good, I would say, because there is a shortage of steel in the country. And we feel that this kind of respite will definitely help MSMEs and other steel users. And similarly, the duty on scrap has been continued at zero. So there is no duty on scrap. This will definitely bring circular economy into operation. And the induction furnaces people, the steel melters, they'll be in a position to import scrap at a zero duty. So this is a very good step government has taken. Then circular economy, Finance Minister has already told that the vehicle scrappage policy or the electronic waste reprocessing, these all are very, very good steps. And these are going to give us a good business in times to come. and the skill improvement of our people. That is another area what she has touched. So this is something excellent idea. And in a public and private collaboration, if we improve the skill of our people, then we'll have manpower. Many companies are coming out of China. India can be definitely a good component hub for the entire nation, entire world. And this is where the journey starts. Last point is the multi-modal logistic parks. This is going to be a game-changing theory. And when we have the multi-modal logistic parks, that means the shipping, the railways, and also by trucks, we can mobilize the material, we can move the material from one location to another location. India has a very large coastal belt from Haldia to Kandla, more than 7,000 kilometers. If we can serve each and every city of the country through this particular belt in a multimodal logistic parks, then I think this would be a great decision.
Okay, Mr. Sharma, we'll let you go at that. Thank you for joining in, sir. With your thoughts, market still very stable. In fact, it looks like we may have a strong closing on our hands. Perhaps in the case of the stock market, less is more in terms of detail. Gurpreet, comment on this entire discussion around crypto. Would you say the announcement about taxation generally on virtual assets is step one towards a crypto bill?
Frankly, I think it reduces the uncertainty in the market. I think what we had, was it an asset, was it a currency? I think that debate gets settled. Actually, I think a lot of us were expecting that there will be a crypto bill. But yes, I think recognizing that as an asset and taxing it in a particular way gives it much more taxation certainty and a treatment like an asset. So I agree with you. I think that's possibly the way it will go.
Sabina, we were talking about jobs, and you made the point about what's happening at the rural end. The bigger problem, though, seems to be the way services has completely come unstuck in the last 2 years, and that's really been a big backbone in terms of employment. Would you have hoped to see more in terms of support for the services space, and by extension of that, something to bring more jobs back into the system?
Absolutely, Mitali. I mean, we have to acknowledge that services was down by 8%, right? And again, I think the people that are most hurt by the entire pandemic have been those that are least equipped to deal with it, right? And often when I'm speaking to government officials and we talk about where's the demand going to come from, this service-led growth kind of narrative that we hear, they point to the gig economy and they point to this kind of new, location-based and cloud-based gig work. But let's be real, that those jobs are not good jobs. Those jobs still pay very low with absolutely no career trajectories. We still have sectors from hospitality to tourism suffering. So, when we're talking about a revitalization of the service sector and kind of going back to this service-led model of growth, then, where are those jobs going to come from? And more importantly, what quality are those jobs going to be? And in the absence of any mention of welfare. Another thing I wanted to bring up, Mitali, which you haven't brought up yet, is what I found very interesting given my work on jobs and labor, is this idea of trust-based governance, right? We all agree that we've got an incredibly complicated compliance structure in this country that needs to be streamlined and simplified. But what we have actually seen is a dilution of labor compliances. And when we are moving towards this trust-based governance model, what does that really mean in terms of protecting workers, protecting their rights? I think all of this is equally important, both in terms of job creation, but also quality job creation.
Absolutely. Let me get to a couple of more bigger numbers or bigger takeaways from the budget. Ramnath Krishnan, who's MD and Group CEO at ICRA, joins in. Thank you, Ramnath, for joining in. We've been trying to, pull apart some of the numbers and really figure out what the big takeaway is. What would it be for you, really, in terms of what she set out as a fiscal deficit target, her tax collections, a much more modest divestment target?
Sure. Firstly, I see this as a longer-term focused, growth-led, kind of a budget. And much of this, seems to be targeted to be achieved through a fairly significant capital spend. You would have noticed that it's projected to increase by roughly about 25%, in the coming year. Directionally, what also appealed to me was the, at least some of the statements and some measures, aim to transition to green energy and to reduce, the carbon footprint. I thought this was, certainly very, very, welcome. From a support standpoint, given the fact that we've been through 2 years of relative, unease, if you like, continuation of ECLGS and the PLI schemes, I thought, that certainly will help. Some sectors, particularly those sectors who have remained vulnerable, and some of them may possibly continue to be vulnerable, in the near term. Now, the flip side of this is that, all this is likely to result in significant, increase in spends. There will be a contagion effect, consumption will increase, will generate actually employment, and, will result in, capacity creation as well. And to your earlier question on services, I got the impression that the expectation, in the budget is that all this contagion effect will also result in some element of revival as far as the services sector is concerned. Perhaps nothing was stated explicitly to target the services sector in terms of either SOPs or concessions, etc., etc. But I suspect, that may have been an underlying, sort of assumption. The consequences. Now, this is an expenditure stroke, capex-led, budget, which is aimed to revive, the economic activity and result in growth and hopefully, return to some element of normalcy, if you like, and position us, for the future. This will certainly result in increase in market borrowings. There will be, at least in the near term, inflationary pressures, and therefore, some possible hike in, interest rates as well. So fiscal deficit, though, of course, the budget suggests that in percentage terms, it's likely to moderate a bit in the coming year, though in absolute terms, it may result in an increase. That's something that is will remain, monitorable. I would have expected the divestment plans to be probably a lot more elaborate. So I would say that perhaps that area was, slightly below par, as it came out in the budget.
What do you think the bond market should prime itself for, Ramnath? And, on the point you're making about borrowing, because here's the thing. I mean, gross borrowing and net borrowing are not matching. You have a fiscal deficit of 16.6 lakh crores, but your gross borrowing is 14.95 lakh crores, I beg your pardon. And then you have a small savings of 4.25 lakh crores. Do you think the bond market will again have to sort of brace itself for lumpy and sudden changes in the borrowing figure?
I don't expect it to be sudden, really, but will there be changes? I would say it's actually quite likely, but you have to bear in mind the fact that there is some element of disinvestment proceeds also that is actually going to come into the kitty, if you like, in the coming year. LIC, they're looking at one tranche next year, one tranche in the following year, and some of the other, revenue receipts, etc., etc. It remains to be seen as to how these numbers actually pan out. So to answer your question, is it likely to result in a higher increase as far as a higher number as far as fiscal deficit is concerned? Possibly, yes. Will it actually, result in further, rallying of the bond yields? Possibly, but will it actually happen, overnight, or for that matter, will it be lumpy and will we see a sudden spike? Unlikely, I would say.
Okay, I'm just going to hop across to the man of the moment, or the market of the moment, I should say. Nishchal Shetty of WazirX joins in. Nishchal, what have you been able to glean as of now in terms of this 30% tax that your market seems to be now loaded with?
I think the most important thing that has emerged is the fear that people had about will India regulate crypto or will India ban crypto? I think at least the whole negative side of it has now sort of disappeared, because there's taxation now. You're talking about taxing crypto, and there's a definite clarity that it's going to be 30%. So that fear of uncertainty around regulations has disappeared, and I think it's a very smart move from India, because we were all waiting for regulation, and globally also everyone's working on crypto regulation, and all of a sudden, the government comes up with a taxation as the first step, which sort of indicates to the market that the government wants to regulate it, but the government probably needs more time, and rightly so, because this is a complicated topic to regulate, but it's fairly simple to tax it, and that's what has happened. So I think in general we are all really excited about this. The market's reacting really positively. Everyone in crypto is excited, and I've already started getting messages from people who've been on the sidelines, not wanting to get in, who now are looking at this as an investment option for themselves.
Nischal, now you sound even more optimistic than the stock market folks I speak with. But no, I hear you. I guess it's an admission of the fact that this has been accepted as an asset class. Are you clear about some of the details, though? I mean, does this work for short term and long term? What happens when I move money? If I buy Bitcoin in exchange and move it to my own wallet, who's getting taxed? How have you? Are there any details in the budget fine print on that?
No, I think we are still waiting to unpack all of that. There are definitely some, points that have to be clarified, especially one of what you're talking about, where what happens when you transfer crypto amongst your own personal wallets. But I think largely a lot of clarity has come. Even I was just quickly reading. There's also the definition of crypto, which is, I think a great move, because very few countries have actually defined crypto. And I looked at the definition. It's as clear as we could get in a first go. So I think in general there's more clarity than the lack of clarity, I would say. So it's a great step forward. We have to wait and watch now what happens. How the details will emerge. There will be definitely some problems, but I think as a community we can all put that forward to the government as we go ahead. In general, I think this is just opening up the gates for further adoption of crypto in India.
Okay. And of course, NFTs are included as well. Nischal, thanks for joining in with your quick take. Amitabh Kant of Niti Aayog is waiting to speak with us. Mr. Kant, hi, good afternoon, sir. There's two, big headlines that I'd love your thoughts on. First up, one, what you made of the capex outlay that the finance minister has set out. And second, the fact that her divestment target seems far more modest this time round.
So, Mitali, first of all, let me say that capex is very critical. Taking it to from 5.5 lakh crores to 7.5 lakh crores, and when you look at what the center provides to the states, it amounts to almost 10 lakh crores, which is about 4.1% of GDP. So I'm a believer that actually what at this stage of our growth, what the country needs is infrastructure. And good quality infrastructure is really the key to sustain growth over a long period of time. And therefore, the finance minister has done a very progressive and forward-looking thing to increase capex by such a vast component compared to the fact that she had increased it by 30% the previous years and again increasing it by this very substantial amount. So really, the challenge now is really to structure projects, to get the land, to ensure that all approvals are in place and we get the projects rolling on ground. Implementation of infrastructure projects on ground will really be the key to the success of the growth of the economy.
Does this mean, sir, that the NIP moves to the background? Because that's with its halfway mark at this point, 3 years in. Do these CapEx projects exist outside of the NIP? And what happens to the DFI that was also discussed, in terms of supporting a lot of this infrastructure?
Oh, and NIP will be really the heart of it all. The national infrastructure pipeline is the heart of this whole spend of infrastructure resources. It's laid down a time frame from 20 to 25. Projects have been identified. These projects will have to be cracked on ground, and therefore allocations have been provided to ensure that they are smoothly implemented on ground. So NIP is really the heart of it all, and that's the way to, This year's budget has to be seen in continuity with the last year's budget. And one must realize that the country has taken several measures. In addition to the budget, the country has the national infrastructure pipeline, the country has the national asset monetization pipeline, the country has the production linked incentive schemes. All these are schemes under implementation. And therefore, we are accelerating the pace of implementation of all these with the allocations being provided in the budget.
Would you have more details on what exactly these projects and schemes are, Mr. Kant? Because the suggestion also seems to be that this capital outlay increase is basically two blocks. One is the loans being given to states, and the other is green bonds for public sector borrowing. Would you be able to share more light on the nature of this spend?
See, the capex expenditure is basically meant for increased allocation for. You will see that there's increased allocation for roads, there's increased allocation for railways, there's an increased allocation of funding for the states, and there is an increased allocation for green bonds. Because the country is also trying to create green infrastructure in the future. One of the key perspectives of this year's budget is really to go digital, go green, and look at the next decade of growth. So the budget really looks at India's consolidation of growth for the next decade. And that is why it's very critical that whatever infrastructure we create is focused on this. And when you analyze this in terms of the production-linked incentive schemes, in terms of manufacturing of solar PVs in India, or you look at advanced chemistry cell battery in India, or you look at clean mobility through the FAME 2 scheme, or you look at automobile, which is spearheaded by clean mobility. Now, the whole allocation is actually for clean mobility. So, in all these areas, what are we trying to do? That how do we leapfrog in a manner where we are both digital and we are green? Quite often, India gets into the sunset areas of growth. First time in our history, we are trying to get into the sunrise areas of growth and trying to get into areas where we can be the leaders and not be the followers.
I'm glad you raised PLI, sir, because we actually spoke to a lot of industry voices before the budget, and there was an ask for the PLI scheme to be extended to other sectors, particularly real estate. Actually, I know it didn't get addressed in the budget, but is that something that can be considered going ahead?
No, I don't think you should take increased PLIs for more and more sector. What you need to do, the whole focus now for the country should be to implement what you're doing well. You should focus on implementation of national infrastructure pipeline. We should focus on implementation of national asset monetization. We should implement the 14 sectors identified for the production-linked incentive scheme. Don't make the mistake which we had earlier made in the MEIS scheme by increasing the number of sectors, a large number of sectors. You have limited resources, crack them well. Ensure that you become a very integral part of the global value chain in these sectors. Only if you get the size and scale of manufacturing, you will be able to do it. And definitely not for the real estate sector. Production-linked incentive is meant for manufacturing sector, not for the real estate sector. So let us be absolutely clear, the more you expand PLI into other schemes, it will not be good for the country. The recipe for other sectors is very different from PLI.
Okay, on the second part of my first question to you, the divestment target seems quite scaled down this year. Is that an admission of the fact that divestment over the last 2 years has not been as successful as intended? Or is that a category that the government does not want to lean on too heavily this year?
No, firstly, the tax buoyancy has been very good. Number two, to my mind, it's a very right thing to do to have lower budgets, outlays, and then to cross them. We've actually been able to disinvest Air India, which was the toughest of it all. We've also been able to disinvest Neelachal Spark. And, these two have set the ball rolling. And next year, you will see the disinvestment of BML, BPCL, Concor. the two private banks, insurance, all of them were listed in last year's budget, and that's why I'm saying both these budgets need to be seen in continuity. So the government is determined to push for greater levels of disinvestment, but I think it's better to cross the outlays rather than to put very ambitious outlays in the budget and not achieve them. And I'm quite sure that this year's budget will be far surpassed.
Okay. By when do you reckon, sir, we can see the LIC issue enter the market?
Pretty soon, pretty soon. It's a complex process. There has to be a lot of due diligence. And journalists are inclined to give timelines, but it's better to do all your homework right and achieve success rather than go by the prodding of journalists.
I'm not asking for a timeline, sir. This was scheduled for last year. I'm just asking you when it's happening. One final question.
No, let me say that LIC is well on track. LIC is well on track, and I'm quite sure that we'll achieve a very good success story.
Okay, one final question, sir, and I hope you answer this candidly in the spirit in which it's asked. Welfare schemes have actually not seen that much of an increase this time. There seems to be an urgent jobs crisis that we are facing, especially in urban India and in rural India as well. How do you think that will be addressed? And is that being addressed with the urgency that it deserves?
So, Mitali, this increased outlay for infrastructure, when you have such a major outlay for infrastructure amounting to almost about 4%, 4.1% of your GDP, means that the entire country will grow and expand. When the country grows, it lifts the boat for the poor, it lifts the boat for the middle class, it lifts the boat for the entire economy, and India needs to have sustained growth over the next decade or so. To my mind, next 3 decades, year after year, and that is not possible without infrastructure. So, in the 1920s, when US faced a similar crisis, President Roosevelt's answer was just simply this: infrastructure, infrastructure, and infrastructure, which will take the country forward. But I also want to tell you that this criticism which is being made is totally incorrect and unfair. If you look at Manrega, there is no change in outlay from the BE of last year. It was 73,000 crores. It remains at 73,000.
But it was increased, sir. It was then increased to 93,000 crores. So there was yeah.
So that's exactly what I'm saying. You compare BE with BE, you compare RE with RE. Now the revised estimates, I can assure you, of this year also, of Manrega will be much higher than last year. Why are you comparing BE of this year with the RE of last year? You compare BE of this year with the BE of last year. And as and when more resources are required, the government will provide it. You look at each one of the schemes. You look at Jal Jeevan, which has seen an increased outlay from 50,000 crores to 60,000 crores. You look at PM Kisan, which has seen an increased outlay of 65,000 crores to 68,000 crores. You look at National Education Mission, it has seen an outlay increase from 34,000 to 39,000 crores. You look at National Health Mission, which is where outlays remain the same, and you look at each one of the scheme I've had a look at. Each one of them, the budget outlay is not being cut compared to the BE of last year. And as and when more allocation is required, that will be provided at the RE stage. So to say that government has cut down is a totally unfair and illogical criticism.
Okay, I will think of you, sir, both around the Narega conversations and when the LIC IPO opens. Thank you for joining in and speaking with us today. Thank you very much. Dr. Pawan Munjal is waiting by as well. Dr. Munjal, thanks for joining in. You were keen.
Thank you for having me.
You were keen on seeing far more happen in terms of capex spends that seem to have happened this time round. What did you make first of the capex details that were provided in the budget?
We're absolutely delighted with this announcement. Clearly, I see this as a progressive and a growth-oriented budget with a long-term vision. And not just the capex around infra, but also the announcement around the interest-free loans for the states. All of this put together and the focus behind Gati Shakti. All of this, I personally believe, is a very good thing for the nation, will definitely also generate employment.
I was speaking earlier with Sanjeev Bajaj, and we were sort of talking about the fact that there does seem some compression in terms of what's happening at a household level. Demand is far more subdued, spend is far more subdued. What do you expect to see on that count in the year ahead?
Well, again, this budget is focusing on housing, especially on the low-cost housing. I do believe that this year we will see more and more housing generated, and this focus is continuing from before, from the previous years as well.
My colleague Alicia is waiting by as well, and she's got some questions for you too. Alicia.
The auto sector
You need
at
to
Mint
unmute.
and yes, I hope I'm audible in the newsroom.
You are.
Yeah.
Great. So, Dr. Munjal, there were a bunch of announcements related, to the circular economy and really providing a push to, electrification as well. We saw, announcements about swappable batteries and a policy to that effect that might come through. From what's been indicated so far, Hero MotoCorp itself has plans to launch an electric two-wheeler very, very soon. You already have investments and acquisitions in this space. So, if you can speak to, what the impact of these announcements would be, in the two-wheeler market, particularly, to your business. You are currently the largest selling two-wheeler maker in the country.
Let me say that I'm personally very delighted with the focus on sustainability. Clearly, we are moving towards a cleaner, a greener, and also a digital future, not just for ourselves, also for our future generations. All of us in the automotive industry are moving towards electrification. Some have done it, some are in the process of doing it. And all this emphasis around sustainability, electric vehicles, whether it's swappable batteries or it's the interoperability and the green bonds, all of this put together is a very good thing to happen for the industry. We are all on that same track already.
Right. Mr. Munjal, often, a factor that cited that, that had so far hindered adoption of EVs despite the government policies was that the initial cost and the lifetime cost due to battery replacement, etc., tend to be high. Do you think that these sort of policies would remedy that situation? And when you do come out with your own products, is swappable battery something that you would, want to integrate into your products?
When these transitions happen, they don't happen overnight. They happen over a period of time. And between the government, between the support, the incentives coming from the government side, from the states, and the investments being put in by the private sector, all of this will bring the infrastructure in as well. And as the volumes go up, as there's development going on in batteries continuously, all of this will, of course, bring the prices down, will make products more and more affordable. Having said that, most of us today are developing products which will be affordable. And in certain cases, there is cash burn. In other cases, there is no cash burn. But overall, having said what I just said, it's a great move for all of us. And well, while I'm here with a CII hat, but let me just say in a quick line that we are already into swapping. We have a joint venture with Gogoro from Taiwan for swapping.
Right. Lastly, Dr. Munjal, there has been stress in the two-wheeler market, particularly the rural economy. The commuter segment, acquires a large chunk of sales from the semi-urban and rural markets as well. What sort of, impact do you think announcements from this budget will have on this market? Do you see a, demand boost taking place anytime soon?
I'm looking forward to the sentiment in the rural sector once again becoming better with the announcements of the capex in infrastructure. And to my mind, a large part of this capex will go into the rural sector.
Right. So an improvement to be expected there. Just one last question, Dr. Munjal, before handing it back to Mitali. The government also has, a PLI scheme in place for advanced chemistry cells. we have seen a few companies apply for it and bids are under evaluation. Any plans that you would have to foray into manufacturing cells locally too?
As I said, I am today wearing the CII hat, and the PLI scheme for the cells has already taken off, and companies have already applied for the scheme.
Sure. Thank you so much, Dr. Munjal. Mitali, over to you.
Thank you, Alicia. Thank you, Dr. Munjal, for stopping by. Quick health check on the market, which is doing quite well for itself. 800-point rally on the Sensex, so it's recovered a lot of its lost ground. And we've got some strength across the board on sectors like banks, IT, etc. Naushad Forbes joins in with his take on the budget. Mr. Forbes, Naushad, afternoon. Thank you for joining in. It looked a bit disappointing at the start because of the lack of detail, but some of it is pouring in now as we see the budget document. What were your initial thoughts on what you heard in the speech?
Well, I think as many people have been saying, the most positive aspect of this budget is its consistency. It continues policies of the past, whether those policies are the infrastructure push, whether it's schemes like the Gati Shakti program, which has been given much more elaboration in this budget, or the privatization program that was announced in the last budget, disinvestment announced in earlier budgets as well. And there was some more detail of what we could expect going forward this year. I think the one element that was also continued, which I regret, is protectionism. There was a specific comment made in the budget speech about moderate tariffs being seen as good for Indian industry by the government. I don't think it is. I think that moderate tariffs end up being a moderate disincentive to export and to trade. I wish that was not a consistent element in our policy making, but it is. And then I think there were some very interesting things that I heard in this budget speech. There was a mention made of defense R&D now being opened up to industry and academia. I think that's a very, depending on how it gets implemented, that's potentially quite transformative, because it was just a quick mention, but most of the world, the government funds R&D, especially defense R&D, but it does it either in academia, if it's research oriented, or it does it in industry, if it's technology oriented. And I think to see that starting to now happen in our country is a very positive move. It will be potentially transformative for the wider technology ecosystem, and it could be potentially transformative also for the outcomes that we can expect from this R&D.
I was thinking of you when I heard that statement about the tariff of 7.5% on some capital goods. Yeah, several former economic advisors have made the point, Naushad, that this is counterintuitive in terms of, trying to encourage a robust import-export environment. Why do we keep leaning on it? And what can be done to correct this? Is it industry that's asking for it, or is this a stance the government has taken?
Without question, industry keeps asking for tariffs. But industry was asking for tariffs earlier. It was asking for tariffs in the 90s, in the 2000s, in the 2010s, and in the 2020s. What's different is that the government is now listening to industry and bringing in the tariffs. So, I mean, I think it's the wrong thing. I think it's the wrong thing to do.
Yeah. You and I have spoken as well about the raging jobs crisis that exists and the fact that manufacturing and certainly services as well can help in that regard. There is some disappointment about the fact that it was not even acknowledged as something that needed urgent attention. And the other point of view that seems to have come through from some of my guests today is that this thrust on CapEx will automatically ensure that jobs will be made available. Do you subscribe to that argument?
I think without question, the number one way in which the government can directly create employment is through infrastructure spending. So I think that focus on infrastructure spending is very welcome. Now, it also depends on what infrastructure. If the infrastructure spending is in the form of, say, roads and road building, that creates huge numbers of jobs. If the infrastructure is in the form of, let's say, buying a lot of rolling stock for the railways, that tends to be less employment intensive, though it does create some employment without question. So it depends on what infrastructure spending we are also talking about. And I think here we heard good initiatives on road building, good initiatives around the railways. I think that's all very positive. What I would have liked to have heard was something around education and allocations particularly. Now, I recognize that education is largely, especially school education, is a state subject, but I think finding ways of incentivizing states to improve their education systems, giving them incentives to spend more on second standard outcomes, which is a key platform in the new education policy. I would have loved to have heard some mention of the new education policy and how it is being funded in a very significant way, because in the long run, as a country, the way in which we will put people by the million into productive occupations is by investing in their human capital, by investing in them with education.
Yeah, it's concurrent, and there is a reality that exists of the state's finances, which is why more support was required, certainly for spaces like that. That was my next question, actually. The spending on social sector schemes seems static, and in some cases is even lower. In Narega, for example, do you think the government may have stepped back too early from the welfare support that is urgently required, Naushad, whether it's health or education or jobs or food?
I didn't hear any of it being expanded. There's a case that's been made for a kind of urban Narega that is needed, especially because of the trouble that many of the informally employed in urban areas have, the trouble they're in, the fact that retail jobs or real estate or hospitality jobs have been hammered in the course of these last 2 years. That would be a support program. Again, there's a limited amount that the government can do beyond support for sectors like that. How do you create such employment directly? I'm not sure a government either can or should try. So in that sense, it would have been good maybe to hear about some extension of the food subsidy scheme, as has been provided from time to time. I think the government, by the way, after initial delays in 2020, in terms of announcing the support programs, after that, in the second wave, they were much more, I think, responsive in terms of extending that food support program. And I think they will continue to be going forward. I think they know now what to do and how to respond more effectively with that kind of a support program when it's required.
You've seen many business cycles over the last few years, Naushad. Are you concerned about what we are seeing and living through with inflation? Because it's happening at the top level in terms of what corporate India is living with extremely high inflation. And then it's happening at a very nodal level with every household feeling the pinch in terms of, food and fuel inflation and the cost of all of it going up.
So, I'm not yet, let me say, that concerned about inflation. Yes, it's hitting margins for all manufacturing companies especially. But I'm not yet so concerned about it because I still hope that it's relatively temporary. It will go away over the course of the next year or so, provided we don't have further disruptions to the supply chain. So as long as the supply chain continues to keep coming back to normalcy, shipping and container shipping and all of that keeps coming back to normalcy, I think inflation will start to stabilize. We're seeing it in certain commodities already. Steel prices, for example, have finally stabilized. Took much too long, but they've finally stabilized. So we're starting to see some of that, which I think is a positive trend. My biggest longer-term concern is actually on long-term employment growth and therefore long-term consumption growth, because consumption has been our growth driver for the economy for the last 30 years. And the fact that consumption at the end of this year is still expected to be only 97% of what it was in 1920, right? That says we're not yet back with a fully firing engine. So forget creating employment in these last 2 years. We're going to end these 2 years with fewer people employed in India than we had 2 years ago. That's very bad for the long-term growth story and consumption story. That's what we need to address first before anything else. That's what we need to do for our long-term future. That's what we need to do to get the capex cycle going again for industry. That's our single big long-term challenge. I worry about that much more than I worry about inflation.
Yeah. One final question to you then, a lifeline for both those issues that you laid out, that consumption needs to be boosted and the fact that jobs need to be created, was the entire MSME universe. They've had a bit of a 1-2-3 punch, which started with demonetization, then GST, and then, of course, a 2-year pandemic. What would you say is the health of the MSME space now, and what kind of support needs to be extended to them in order to address ahead the problems that you laid out?
So, again, I think there's a limited amount that the government can do to help MSMEs. We saw an MSME program, a package that was put through in May 2020. It was a good package in terms of extending credit. One could argue that it came in later than it needed to. It should have come in actually earlier, a month or two earlier. But when it came in, it was a good package. And over time, it took a long time, but over some months, there was substantial take-up of those loan guarantees by MSMEs. Having said that, at the end of the day, the health of the MSME sector is going to depend on what's happening in the economy. And many of these MSME enterprises are service enterprises. They're small shops. They're small restaurants or roadside stalls. It's informal services, people coming in and providing services to people in their homes. That recovery is still not robust. That recovery will depend on many more months of normalcy before we get back, I think, to that 100% consumption level and then see growth going forward. I think that's the challenge. That we need more months of stability, sticking the course. As we saw, by the way, in this budget, which I think the sticking the course I would not undervalue in any way. I think it's a very positive thing. But sticking the course and then really investing in human capital. I mean, to me, the big opportunity for policy is investment in education, school education, college education.
I cannot agree with you more vociferously. Thank you for joining in today, Naushad. Congratulations on your book as well. We'll speak soon, I imagine, but thank you for joining in today. Still all strong for the market. A couple of auto stocks dithering a little bit. M&M down about 2%. Naveen Munjal has been patiently waiting by. He joins in now to speak with me. Naveen, hi. Thanks for joining in. There was a lot peppered in for the electric vehicle universe that came in at different points of the speech. Why don't you tie it all in for us and tell us what you made of it?
Hi, Mitali. Pleasure to be here today. So there was a lot of expectations of the budget, what's going to happen for the EV sector. There are some pushes, however, some things have been left out. Now, let's look at some of the pushes which have been there. So, there's clearly a push towards clean and sustainable mobility. That's a clear one. That's a clear indication that's there. Transition to a carbon neutral economy is a clear one again, which is there. And then there is a policy which is coming in, which is the interoperability of battery swapping and standardization of battery swapping. Now, battery swapping, we know, is going to work effectively for sectors like the categories like two-wheelers and three-wheelers, but not so much for some of the other forms of transport. Now, while this is very, very important to have interoperability between different operators, because the challenge that we faced earlier with the number of companies that we were working with, even historically, has been that the battery form and factor and technology deployed is different from each company. So it's like effectively saying if you're buying a car, if you're buying a vehicle, You can only go to a one kind of a petrol pump or a gas station and not the other. Whereas you want to be able to go to others as well. While this is very, very important, it's also important to see what really comes out in the final policy, because that will determine that there should not be any stagnation of technology. Technology innovation should continue even while we go in for some levels of standardization. Then, of course, there is the PLI, which is come into play for the 14 odd sectors, which is going to deploy, which is going to result in about allocation of 19,500 crores and is going to result in about 60 lakh new jobs being created. So these are some of the very, very important factors which are there. Clearly, a policy which is targeted towards ecology, environment, and sustainable mobility.
My colleague Alicia is waiting by as well, and I think she's got a question for you, Alicia.
Hi, Naveen. We spoke just a while back, in fact, and we talked about the EV industry's expectations from the budget. And leading players like yourselves in electric two-wheelers have called out the fact that, the PLI scheme for auto was perhaps not as inclusive, towards manufacturers like yourselves. However, while there hasn't been a widening of criteria when it comes to that PLI scheme, there have been other announcements that have been made in terms of, probably which could lead to higher credit availability for the sector. So how do you make, what do you make of this budget? I mean, the disappointment on the PLI side, and then, these announcements that have come through. So how do you make, what do you make of this budget? I mean, the disappointment on the PLI side, and then, these announcements that have come through.
So, Alicia, yes, there was an expectation that we're actually going to cover the PLI scheme is going to be widened for manufacturers. At this point of time, it's not a very wide scheme, and there was some widening required of that. That's not been widened. While that's the case, I mean, we're not completely disappointed because there is a push. So we are talking about the employability of the people, etc. So there is going to be new jobs which are going to be created. There is a push towards the battery swapping, which I've already spoken about. And also what's going to happen is that as we go along, I believe that, as was done even with the FAME 2 scheme, that there will be some correction which happens on these schemes over a period of time. So these have been announced, these have been launched so far. But I believe, the government is receptive to it, and there will be some changes which we will see over a period of time in these schemes.
Okay, folks, I'm afraid we're going to have to wind it down there, but thank you for joining in, Naveen. Thank you, Alicia. I'm going to hop across now to Dr. Bibek Debroy, Chairman of the Economic Advisory Council, who joins in to speak with us. Dr. Debroy, thank you for taking time out on what must be a busy day. There's been a lot of acknowledgement of the fact that in terms of taxation, things have been left fairly status quo, and consistency has been appreciated. Is that the stance going ahead, to keep tax slabs and the tax direction largely static?
The taxes have a direct tax part and an indirect tax part. In the indirect tax part, of course, is part of GST or will be part of GST. So that's the purview of the GST Council. So when you ask that question, you essentially meant direct taxes.
Yes, sir.
Now, so far as direct taxes is concerned, historically, often our expectations have been, what is this particular budget done for me in terms of tinkering with the slabs, tinkering with the rates? There is still some uncertainty in the economy. There's still some not absolutely certain about the nature of the recovery, how robust it is. Given that, it was, I think, important that direct taxes were not tampered with right now. Instead, every study suggests that the multiplier benefits are far more if public expenditure is increased compared to any reduction in taxes. Therefore, when we look at this budget, I think we should give up our historical mindset, which has been, what does it do? Has it reduced excise? Has it changed my slabs? That is not what this budget was meant to do.
There is another school of thought, though, Dr. Bibek Debroy, that perhaps there was a need to find and encourage some kind of stimulus at the household level, where consumption has gotten stymied, where long-term consumption seems to have gotten impacted. I take your point about stability in terms of a tax regime. What are the alternate ways in which that can be encouraged through the year, sir?
Well, you should ask that alternative school of thought, whether they have looked at the empirical studies of the kind I mentioned, that where are the multiplier benefits more? if I reduce taxes on this particular consumption item, which by the way is indirect taxes, so that's under GST. So the only possible way I can stimulate consumption in the direct tax part is by reducing taxes for specific individuals, personal income taxpayers, or the corporate sector. The multiplier benefits are far, far more, as I said, from public expenditure, from capital expenditure, from spending on infrastructure, which is precisely what this budget tends to do. That apart, the moment I reduce taxes for one particular segment, that increases distortion that is caused. It is arbitrary, and there is no case, I personally think, for trying to stimulate consumption through this route. It is far better that consumption is stimulated by ensuring that there is growth. And by the way, the indicators already show that there is some revival in consumption across some sectors.
That is true, sir. But those the data points also indicate that the growth and the consumption revival is quite disparate, where there are some sectors that are struggling quite a bit, and there are some layers of the economy that are struggling quite a bit compared to the others. What do you think, in your view, has been done in this budget to address the bottom part of the K-shaped recovery that we have spoken of, and the fact that there
I
is...
would be very
Yeah, please go
hesitant
ahead.
to bandy about expressions like K-shape. People who
Okay.
use it don't define it. But sticking to the main question without using expressions like K-shaped, the best way to ensure that consumption happens is by ensuring growth, is by improving the environment, is by reducing the uncertainty, and as I said, by stimulating expenditure, capital expenditure, spending on infrastructure. All of those will inevitably lead to demand.
And what is your sense of what demand revival might look like going through this financial year itself?
Well, this financial year itself, the economic survey has suggested a real rate of growth of between 8 to 8.5%. The budget does not directly talk about a real rate of growth. It has given a nominal rate of growth figure of 11.1%. I think the real growth rate will be a little bit more. So when that growth happens, there are four major drivers of growth. The four major drivers of growth are, of course, investments, consumption expenditure, government, and exports. Government expenditure, as I just said, it's far better that it should be in the form of capital expenditure, in the form of infrastructure spending, rather than in the form of revenue expenditure. In any case, some elements of that revenue expenditure are state-driven, and some of it is demand-driven. Coming back to the question of consumption and investments, investments are really partly, depends on the sector, but are partly a function of excess capacity. So once the demand begins to recover, that will also recover. On consumption, as there is certainty about growth, some of that consumption is constrained because there is uncertainty. Once one senses that this growth recovery is happening, once people perceive that growth recovery is happening, and I gave you the numbers earlier, I'm certain that the consumption revival will also happen. Of course, there are different categories. There's the FMCG and the consumer durables. The FMCG has already shown signs of recovery. The consumer durables, the discretionary consumption expenditures, a better expression, that will recover with a lag.
And we are seeing some lag in consumer discretionary, in two-wheeler sales. All of those are actually struggling a little bit at this point. What is your sense of what this demand recovery might look region-wise, Dr. Debroy? There is a sense that states are struggling, especially post the two COVID years, in terms of their revenues and in terms of running their state finances.
The states are actually sitting on a lot of money. They have been constrained, not per se by the pandemic, by the restrictions that the pandemic led to. So there's a lot of money that's sitting with the states. And as we ease away from those restrictions, that expenditure will happen. And by the way, the budget also has enhanced assistance to the states for capital investments. So my sense on this is that if you give it another 6 months, some of this is not driven by macro fundamentals, some of it is driven by negative sentiments. If you give it another 6 months, some of those negative sentiments will go away.
Are you confident and comfortable about the figures that were shared with regards to the fiscal deficit? The finance minister put out a target and she indicated that the glide path remained the same as what was alluded to last year, but there wasn't that much detail in terms of the medium-term outlook.
No, she gave her reasons for that. She gave her reasons saying that essentially we are still in the midst of some uncertainty, so we are not going to spell out the details of that medium-term glide path. Now, when you ask that question, one part of it is how good is the fiscal marksmanship? The fiscal marksmanship is pretty good. 6.9% was expected. It's 6.8% was expected. It's 6.9, pretty close to the mark. There were people who argued, schools of thought, to borrow your expression, who said that there should be strong fiscal consolidation. I think that would have been premature given that the fact that the growth is still not that very robust and certain. So I think 6.4%, which is a reduction of 0.5%, is achievable, doable. I mentioned the 11.1% nominal rate of growth, which is not excessively over-optimistic. However, so far as the glide path is concerned, 25-26, 4.5% seems to me to be a little bit difficult to achieve if we have this base of 6.4% now, because the requirement in terms of slashing the deficit will be pretty hard to attain.
That's an important point, sir, in terms of what happens with the medium-term target. Given what you're laying out in terms of what you hope to see in terms of growth recovery, in terms of the fact that we are being quite we're being quite pragmatic about our fiscal situation, what worries you the most about the state of the economy at this point, Dr. Debroy? Which particular part of it would you find most concerning right now?
Well, I can answer that question and then I need to elaborate on it a little bit.
Please do.
Part of it, it's an old problem. It's got accentuated because of the pandemic. And that old problem is about the urban labor market. As I said, it's not a new problem. It's a problem which has been plaguing us for years. There are all kinds of things one can discuss in terms of what one should do in terms of the solutions. That has become a little bit worse. The urban part of it, which is why I contested the K, which the K suggests it's an all India K. I don't think it's an all India K. So the urban labor market. And the second part of it is the MSME. MSME, I need to quickly underline that not all MSME is registered under any piece of legislation. Therefore, it is important to get a handle on unorganized sector workers, in particularly migrant workers, in the urban areas, which has just begun to be done through the portal. It's also important to get a handle on, in terms of identity, on MSME enterprises.
You're bang on both counts. Sir, for two budgets now, there's been, quite a bit of chatter around the idea of an urban employment guarantee scheme. I'd love your thoughts on that. And secondly, on your point about MSMEs, I think a larger amount of the hemorrhage that is being faced is to the service sector MSEs, smaller shops, smaller gyms, salons, things like that. What can be done to help them in terms of what has been a longish crisis from them that started perhaps around demonetization and then has extended into this 2-year pandemic?
Yeah, before asking what can be done, I think it's important to ask how it can be done. That's the reason the urban counterpart of the MGNREG, and one can discuss what form it can take, what form it could take. But before doing that, I need to know for whom will I do it. The portal was started in the midst of the pandemic. The portal, which is in terms of people registering themselves, unorganized sector workers, it still has a very regional bias. In some parts of the country have registered much more. I think before one actually talks about the urban MGNREG and implements something like that, we can discuss the contours, but before one implements that particular registration system, which cannot be mandatorily enforced, has to become much more robust. Ditto in some sense for the MSME. I think the GSTN numbers provide the beginnings of identity for MSME. So before we even talk about what we can do, we need to know how we can do it. Who do we target it at?
So just to take one part of that answer, what to your mind is the best solution for the urban employment crisis that we are facing? How should we do it? Who should we target it to?
Yeah. Again, there's several layers in that. Partly, some of this, I think, as I said, is an old problem. COVID has only accentuated it. We have problems about lack of correlation between skills and education as delivered by the education system. We have inefficient intermediation between the suppliers of labor and places where there's demand for labor. We have all of that. Now, in addition, we have a particular problem about people voluntarily dropping out of the workforce, not just amongst the young, which can be explained by higher education, enrollment in higher education, but also by others. Initially, it was very evident for women. Now it's evident for men. Some of it reacts with a time lag. The growth has begun to happen, so the labor market will partly recover with a lag. Part of it is the problem of lack of portability, because, for instance, the Interstate Migrant Workers Act, which goes back to 1979, was never implemented, which is why I keep harping on this problem of identity. I should also mention, from an implementation point of view, there is identity that is based on households. Identity based on households is something like SECC, something like MGNREGA, and there is identity that is based on individuals. There has to be a matching exercise between the two. So this has to be, that identification has to be work in progress. It cannot happen overnight.
Okay. Just one final question to you, sir, on the NREGS that you alluded to. The allocation this year round has been kept the same as the budgeted estimate of last year, not the revised estimate that the government had to add to. Is that a conscious decision, or is that take it as goes situation with regards to demand that comes through on NREGS?
Well, it's a conscious decision in the sense that it's almost a tautological decision, because this is a demand-driven scheme. So if the demand goes up, the allocations can always be enhanced, which is true for all demand-driven schemes. I think the right question to ask, is it possible to revive the growth environment, including in agriculture, so that the demand for MGNREGA becomes actually less? But as stated, I think this is really a non-issue, because this is demand-driven.
Okay, I'll let you go at that. I'm sure you have a busy day lined up. Thank you so much, sir. Appreciate your time and you joining in to speak with us. 3:32, markets should have shut by now, and they haven't done too badly for themselves. A 900-point plus rally for the Sensex, Nifty doing pretty well. Banks have done okay for themselves. Quick status check on the rupee, that actually closes a bit weak at 74.80, and on the bond market, I think they were left wanting a little bit in terms of details on what's happening with those bond indices that were talked about. There was a lot of talk about what real estate may get. There's some allocation that's coming to the lowest end of housing. Niranjan Hiranandani joins in to talk about his hits and misses in the budget. Mr. Hiranandani, we chatted before the budget. Are you okay with what you heard? Would you have wanted to hear more this time round?
I think we certainly wanted something more than what has come into the marketplace, because the middle class persons and the other segments of the home purchaser today hasn't got any benefit from this budget. So I think they are left wanting. But the lowest end of the bracket has certainly been supported under the Pradhan Mantri Awas Yojana, which has a cap of 45 lakhs of rupees. So urban areas like Mumbai, Delhi, Bangalore and others are not full beneficiaries under the scheme. So we are challenged over there. But the Prime Minister, the Finance Minister has provided for 80 lakh new beneficiaries with a 48,000 crore budget, which has come into the focus to do it. So I think the lowest segment of the society will definitely benefit it countrywide. And I think it will be more a beneficiary in tier 2 and tier 3 cities, where there's 3% interest subvention, which takes place for 15 years time, will certainly go a long way for that segment of society. The second thing which I think the government is really thoughtful, mindful of, is ease of doing business. Earlier, they would say that now, in the real estate segment, ease of doing business is not an issue. I think now that has come to the fore. The finance minister herself has said that they will work with the state governments for land and construction related approvals, for promoting housing for middle class and other segments of society. And they need to do a large amount of work in order to do the ease of doing business, and a high level committee on urban sector shall do reforms in terms of bylaws, TDR, and all the other reforms. I think this is a good thought process, and I hope it gets implemented, because we still see a large amount of problems in getting the final approvals on the ground. So I think that's an issue. But having said that, I think the overall state of the economy is definitely causing a bigger buying pull from the customer's face, and that has definitely helped. The state governments have also helped by reducing stamp duty for periods of time, especially Maharashtra did it, 60% reduction in stamp duty for 4 months, 30% reduction for the next 3 months. That really gave a push into the Mumbai region market and made a lot of difference throughout Maharashtra. So all in all, not too much individual benefit to a house buyer today across the board, but yes, the lower segment has definitely benefited, and that's a positive story that I see.
There was the hope that for your industry, there would be PLI status accorded. It seems unlikely. The government seems to be going with, the categories they've already picked. Should that be, does that make a big difference going ahead?
Yes, I mean, see, at the end of the day, look at a city like Mumbai. 50% of my population of the richest city in India lives in jhopatpattis, slums. Now, if you really need to do a paradigm, certainly you need to create some incentive factor which really leapfrogs to get these people out of the slums. And we need to do that much faster. How long can you have people living in that kind of decrepit houses in this modern age and time, especially in a city where these people could afford a house if you could provide smaller houses of that affordable character or quality. So I think all in all, you do need to incentivize all these factors in order to get the housing for all target of the Prime Minister. I think that's a big issue that we really still need to address in terms of it. Of course, the other aspects of it in the budget on infrastructure is such a delight. And I think the focus on like metro cities, metro trains, connectivity, roads, other infrastructure. I think we were languishing for a long period of time. And this focus certainly hopes to catch up a part of the backlog that we have in metros and other infrastructure that we do. Hopefully, we'll see a better cities in the near future.
So we hope, thank you, Mr. Hiranandani, for joining in today and with your thoughts. That is a wrap in terms of our coverage of the union budget. There are a couple of hits, a couple of misses, a lot of details, of course, will keep flowing through in the evening, especially in terms of the minutiae of some of these announcements. The stock market seems to be walking away quite happy from all the announcements. Part of it, of course, is the global buoyancy of markets. The hit, if you want to call it that, has come for the crypto universe, for all virtually traded transactions, actually, where there's a 30% tax that comes in. But the plus on that is that it seems to be a tacit admission by the government of crypto as an asset class at this point in time. And of course, there is some disappointment in terms of the fact that jobs were not addressed with the buoyancy that was expected. But on the flip side, there has been quite a bit that seems to have come in for CapEx. More details awaited on that, of course. From the entire HT Mint team, thank you for watching. We will continue our analysis on our website, of course, and we'll have the paper for you tomorrow morning with all these details that I lined out. So thank you very much for watching. Goodbye.